Oh boy. Good morning. All right, so we're chopping around here. Up futures are up 20 handles. We got up as high as I think 24, 25, something like that. We're building. We're still in a descending channel, as you know. So I'm still very cautious. All right, so let's get these guys up and running here. All right, so Bitcoin's been running after hours pre-market. Bitcoin trading right around 34,500. That's about 9,000 points above where we first noted alerts started going off that there's a potential reversal on Bitcoin at around 25,000. Let's see what Jamie Dimon's talking about here.
I think whether the whole curve goes up 100 basis points, I would be prepared for it. I don't know if it's going to happen. But when you look at economics, I think feel prepared for possibilities and probabilities, not calling one course of action, since I've never seen anyone call it. I want to point out that central banks 18 months ago were 100% dead wrong. Okay, so maybe there should be humility about financial forecasting. I would be quite cautious about what might happen next year.
That's Jamie Dimon speaking out about the Fed and central banks during a panel discussion in Riyadh earlier today, Jim, where we also heard from David Solomon and Ray Dalio and some others.
Well, look, I don't think there's anything wrong with Jamie calling the central banks out.
All right, so let's go take a look at the way the markets closed yesterday. Market on close. This is what we look like. So we had some strength in the communications sector: Google, Meta, T-Mobile, Disney, Netflix, Charter. We had some cyclicals that were strong: Amazon, Starbucks, Bookings.com, some of the casinos, consumer staples. Walmart was up almost 1.5%. It was up over 1.5% intraday. Apple flat, Microsoft up almost a point. Nvidia was up big. Nvidia up big, getting back into or adding exposure. I'm not sure exactly, but getting into PC, semiconductors for PC. I mean, that's where they started, gaming GPUs, I believe. Back in 2016, when we first looked at Nvidia as a potential trade at $33.55, that was the breakout trigger, $33.55 on Nvidia, and the rest is history, of course. But it looks like they're getting back into that. Let's see what it says here. Okay, Nvidia. Reuters reporting that Nvidia plans to make ARM-based PC chips. That got a lot of attention yesterday. They see more of that today.
since hurricane's been in the mix.
Well, although I do think he also believes we may be underestimating geopolitical risk. He said that a number of times as well, and that may be true.
Well, he can change that by just deciding to run for president.
We'll see if that happens.
But he has said previously that while he would like the job, he would never run for it.
Well, is his really name is it Jamie Morgan or is it Jamie Dimon?
At this point,
Yeah,
Okay.
Jamie Morgan.
We'll get Kramer's Mad Dash countdown to the opening bell after a short break. Take a look at the pre-market. We'll get to some other.
All right. So the NASDAQ 100. Let me see if it's changed at all. NASDAQ 100. There's only 9, maybe 10 stocks that are red on the day. Tesla. There were some big options trades on Tesla on the long side. So rather than jumping in, let's see how Tesla plays out. Keep an eye on Bitcoin as well. Okay, we got about 6 minutes to go for the opening bell. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, the 24th. I'll be with you here all day until about 4 p.m., giving you the play-by-play, pointing out stocks that are moving. First 15 minutes of the day, I'm usually taking profits off the table if it makes sense to do so, if I have profits to take. If I'm up 20%, 50% overnight, I'll probably take some profits. Then reassess the markets about 10 o'clock. I'm always looking for relative volume, stocks with high relative volume that are on the move with VWAP up and to the right. Stocks like NVIDIA yesterday. Okay, you can see VWAP was up and to the right from the open. We had a buy signal. Even if you waited a few minutes, this moved from 415 up to 430 and change, more than 15 points. So always look for this pattern, whether it's upward sloping or downward sloping. Flat VWAP is a no-go for me anyway. You can trade, well, I'm not even going to say that because it's a strategy that requires a lot of attention, but okay, so we've got earnings after the close tonight. After the close, big earnings, Google, Microsoft. Tomorrow, Amazon, Meta. Low volume. Yeah. Let me see. Make sure I have everything set right here. Give me a second, Frano. Let's see. Input. Input. Mic check, mic check. Yeah. No, nothing's changed. Let me boost it just a bit. Mic check, mic check. Let me turn up the gain. That's just going to make it more sensitive. All right, so let's see how that's doing. All right, good morning, good morning. We've got 3 minutes to go for the opening bell, 3 minutes to go. I posted the gamma update a little late today, but we have support at 4213 and 4200. Below that, resistance 4250, 4300. Let me just get that up and running here. Two minutes to go. About 2 minutes to go. All right, so NVIDIA up and to the right. Always look for this pattern. You'll have a lot better odds of winning directional plays whenever VWAP is up and to the right. Volume is above average, at least 2 to 3 times. Okay, so this is all set. Okay. TLT, looking for that to move higher. TLT. All right, yields did move a bit higher. Watch Tesla, some buyers in Tesla.
Homes. David, you're talking about a gigantic increase in demand. 43% net new orders.
Oh, we got 2 minutes to go.
And yet they're not building more homes. When you talk to Dow Chemical, Sherwin, they'll call out, yes, of course, housing's weak because of rates. So you've got this weird conundrum. The Fed has raised rates to the point that you think the price of housing would go down, the demand will go down. It's not, which means that it's an intractable industry. They're not meeting demand. And at the same time, well, they've made it so that the customer doesn't have as much money because of the monthly costs, of course. Yeah, so dramatically. It's not helping. It's not
US 10-year still hanging out near highs. All right, we're about to open here. Good luck, folks. 422. First 15 minutes, watch what algos do. All right, we are open. All right, we got about 12 stocks red. Everything else is green on the day. Watching Tesla, Netflix for the follow through. Netflix for the follow through. Okay, Netflix on the move. Okay, nice boot, nice pop there. Watch for profit taking. Don't get stuck in that profit taking. Give it a few minutes. Let's see how the markets settle down.
Missing three-star general. I mean, there's a lot of things going on in China, but one thing that's not going on is a lot of business in the industrial sector. And I think you'll hear that from Dow Chemical. I think they're trying to do. Look, they've got a problem in residential.
Okay, the dollar's up at 106. Looking for that to roll over. 10-year starting to fade. Watch for the VIX to back off. Looks like the S&P is going to get moving here. Still very early. Netflix on an early buy signal. I wouldn't chase it. Just see if we can get a follow through here.
Specifically discussing that latest ban from the U.S. government. And let me just read from it here. The stock is up right now. Updates and corrections for the products having a total processing performance of 4,800 or more and designed or marketed for data centers is effective immediately, impacting shipments of the company's A100, A800, H100, H800, and L40S products. These licensing.
Watch TLT, looking for TLT to follow through. Day 2. All right, NVIDIA, fade a little bit. SPY is range bound over the last couple of hours, right in this area. Netflix looks like it wants to keep going for now. Okay, Raytheon up big this morning. Raytheon, big gap up. Raytheon gap and go. All right, Verizon, gap up Verizon. Watch for a fade early on and then a bounce on many of these. Energy. Okay. GE with earnings out, right? GE. Okay. Not crazy about that. Coca-Cola. Coca-Cola looks good.
Jake Sullivan's got plenty on his plate right now.
There's time for you got to make it so it's not a three-front issue. You can't have the Ukraine, Middle East, and China.
Right.
I think that China. Look, I'm no fan of the government there, but I also recognize that not everything is military. Although obviously they militarize a lot of what we do.
Okay, we're on the move. SPY is going here. SPY looks like it's getting bought.
What's really clear is that our government thinks that this stuff goes right to the PRC and goes right to the PLA, most importantly. And there's no denying you need these high-end chips to be able to have a strong military-industrial complex. But we can talk about that with Greg Hayes. But I also know that people are very excited this morning about NVIDIA teaming up with ARM. I'm not.
Extreme high tech alert.
About all the chips that the cards that David just mentioned, but people are kind of gaga that NVIDIA wants to be into the PC business. But we've always known that ARM, which is their partner, was going to go into that. So there really is no revelation. I thought that people would be far more concerned about NVIDIA partner Cadence not giving a strong forecast last night. That stock was down 9, but now it's up 3 as people realize that just the demand for data center, demand for AI is as strong as ever. It's just that the rhetoric cooled. You know, AI and GLP, we had all these GPT and GLP.
Yes.
Sold.
Got it. You're past that already.
I'm now talking about the old days. Metal bending, you know, the factories.
Soda.
Oh, yeah, more than ever, soda. Supply chain and soda. I was going back and forth with our friend Phil Laboto. I'm still hearing.
All right, watching.
I thought that we solved supply chain.
Just watching for now.
You said we'd be safe in supply chain.
Extreme high tech alert.
Okay, Coinbase, watching coin.
Supply chain. James Lindsay's talking about supply chain.
He is?
Yeah. Yeah, but
And Bitcoin stocks looking for follow through.
Shares are up 3%. Listen, we've got a lot of the old names up.
Coinbase up big.
Gonna rattle long time.
All right, looking good.
We're up over 6% again on a better than expected quarter. Simple as that. Revenue up.
except blind squirrel.
And 100,000 postpaid phone net adds were better than anticipated. They raised free cash flow guidance to 18 billion from what had been, I think it was 17 billion. That's right.
How about a
Keeping
positive read
CapEx
for Apple?
sort of where it is. On the call, Jim, there wasn't really much one way or the other in terms of iPhone 15 demand to pick up on as a read.
Are you ruining my narrative? Are you letting the facts get in the way of my positive Apple story?
ARM, nice follow through off the low. ARM, decent setup.
I was surprised they did it. I wonder if T-Mobile. No, don't go there. No read through T-Mobile.
Let's not forget AT&T last week, obviously a very strong quarter as well, and raised free cash flow guidance significantly. So that's two. We'll see how T-Mobile does. Are they taking shares? Is there something else going on here? Remember, T-Mobile did implement those significant layoffs not that long ago.
I know.
Fixed wireless continues to be an area of growth for Verizon, but that's a limited market. You know, you can only it's where you're underutilizing your capacity in a certain area of your towers and things. But eventually, you want to replace. You want to have more capacity for people using their cell phones and new subscribers. Right. So fixed wireless has a cap on it, but
So-
they did add a lot.
You take it off the table in terms of,
So
but it was worn down by the story about what could happen, the forever chemicals there.
lead cables. I mean, AT&T was hit more than that, but that story seems to have disappeared in part because it doesn't seem to have actually been stored.
Not all the guidance today is good, Jim. HCA, a lot of staffing expenses is going to be the S&P laggard. Danaher is lower. Glowworm, not so great.
No, yeah, it's funny. I was hoping for like a kind of a thesis that would be good, that HCA could turn around. It's been an abysmal stock. It's usually been a leader. It's obviously not trading with UNH, which did have a very good quarter. I'm not one that's really excited.
Extreme high to
The
the
greatest stock for so long.
All right, SPY, keep an eye on SPY. Netflix continues. ARM Holdings, I like what I'm seeing. Would like a little bit more basing, but looks like it wants to keep going. Watching ARM Holdings. NVIDIA plans to make an ARM-based PC chips, plural. PC chips, plural. All right, so, and if you look at ARM Holdings, it's basing after its IPO. It did dip with buyers stepping up. Okay, so buyers stepped up on this dip. I guess the case could be made for descending channel for now. You got these highs.
By the way, Spotify, that's the first quarterly profit since 2021.
Okay, so we're moving back up to the 55 level. Seems like that's possible. Volume starting to pick up. Okay.
They're just not making any money, but they're clearly making money. Another company that I think is about to have an earnings breakout is DraftKings. Morgan Stanley comes out and says it must be. Do you know that this is the first time ever that DraftKings took market share over FanDuel, DK at 31% of overall gross gaming revenue.
Plus 800.
30%. And by the way, wagering this year is up 32% over last year, even though fantasy's miserable because of all the injuries.
Also, an upgrade from Moffett today to outperform.
That's an inexpensive stock, and I think it should be bought.
The other interesting upgrade.
Okay, so that's ARM. Let's see what the 60-minute looks like. 60-minute.
They go to neutral. They say it's trading below the.
Okay, so if you do any kind of play on this, I would take, well, yesterday's low was pretty, it's like 5 points down there. So today's low around 51 maybe, or 50. It gives you 2 points. Looking for 4 upside. I think you can see 4 upside. Uber's starting to break out. Uber's breaking out here. Look at the 60-minute. All right, watch Uber here. Let's go take a look at Uber. Uber Scoober. All right, our Uber right out of the gate. Continuing yesterday after a little descent, after a little selling into the close on Monday, we did have a nice bounce. Look at the volume, relative volume, R-vol. Okay, let's go see what the R-vol is here. Relative volume.
It's good to speak with you. A lot to get to, but I do want to start first with the geopolitical landscape. We've seen this war in Israel erupt in the last couple of weeks. Already had seen strong demand for defense. What are you seeing now?
Morgan, first of all, thanks for having us on the show today. Look, the geopolitical landscape is as muddled as I can remember in the last 30 years. The fact is there is unprecedented demand for munitions and for defense spending, just generally speaking. And we've seen that already in our business as we ended the quarter with a backlog in our defense business of about $75 billion. And we know there's more to come. The fact is, there is a lot of work to do in terms of ramping up the industrial base.
Okay, Uber.
To meet this
A little bit of profit taking into that pop.
war in Ukraine does not end soon. It's
Coinbase is up $10. Coinbase.
not just for munitions for the battle.
A lot of these Bitcoin stocks are moving. BT, pretty inexpensive.
Gaza or in Israel, again, a tragic situation. It will eventually lead to additional orders, most likely. Our focus right now is how do we support the Israeli Defense Force? How do we make sure that they have what they need to be able to defend their country?
You are one of the co-developers, Raytheon is one of the co-developers of the Iron Dome in Israel. There's been a lot of focus on it with thousands of rockets being fired into the country in the last couple of weeks. Is it working as intended?
I think the Iron Dome system is an incredibly effective system for intercepting and destroying incoming artillery rounds. In fact, we are just now breaking ground down in Camden, Arkansas, of a new facility such that we can double the production of the Tamir interceptor missiles. It'll take us, unfortunately, about 2 years to bring production online. But again, we see very strong demand, not just from Israel, but from the U.S., DOD, and other partner countries around the world. It is just an incredible system for intercepting short-range munitions.
Great, Jim Cramer, good to have you back on the show. And I got to tell you, this was an extraordinary quarter.
Thanks, Jim.
The thing that most intrigued me was you had a $3 billion charge for a particular kind of a prominent engine. And then the stock drops $30 billion, 10 times the charge. Is that one of the reasons why you are buying your stock apparently hand over fist with this morning's?
Okay, watching SPY, no follow through yet.
You know, Jim, there was
Uber, no follow through. Bitcoin is in play. Looking for a follow through there. It's up trading 34,400. It was just trading 25,000 back in September, second week of September. And I think a lot more people are starting to tune into the idea that this spot Bitcoin ETF, now that it's gone, the SEC, the court has ruled in favor of Bitcoin, and it goes back to the SEC, and now the SEC has to do something. The general consensus, the court found it was frivolous, the SEC's position. There's several companies looking to go with a spot Bitcoin ETF as well. BlackRock and Kathy Woods and a number of others. Coinbase looks really good on the move.
So, Jim, it's a great question. So the $3 billion, again, it's a $6 billion gross charge. Our partners pick up 49% of that. But what we have done is we have looked at each of the airlines that are going to be impacted. There's about 42 airlines that are impacted. We've estimated what the cost is going to be to compensate them for the time their airplanes are on the ground. We've estimated what the cost is to do each of these repairs.
All right, a fade now. So we're going to chop around. The low this morning was around 420, right around 420, 30, something like that, 420. Let's just say 420. Pre-market, there were some block trades that went off near the low. Looking for a push above yesterday's evening session high. Right around 1 o'clock, we hit that level right around 124.50. Like to see us above that. For now, we're just watching early trading. Algo's taking care of imbalances. It's 9:46 now on the East Coast. K-Web on the move. K-Web is on the move. Watch the Chinese stocks. K-Web is up 3%.
That's a great question. I would tell you that the electronics shortages that we saw over the last couple of years have, for the most part, been abating. We don't really see a big challenge for electronics. The challenge remains.
KWeb's plus 3% already.
More complex machine parts that we have, specifically around some casting parts.
China Internet ETF is on the move. KWeb, XPeng, XPEV.
Our suppliers have to be investing along with us to meet this demand, and some of them have, but not all of them. So again, there's still bottlenecks out there. We're working through that. We've got about 14,000 suppliers. We probably have 600 teams out today working with those suppliers to make sure they have the capacity to meet this demand. But it's a battle every day.
It's David. I just want to come back to Iron Dome and maybe Patriot as well. Does Israel have enough missiles? I mean, are they going to run out? You mentioned
Microsoft earnings tonight.
But that's a ways away. They're firing an awful lot of these things, given how many rockets are coming in.
They are indeed. They're going through these Tamir interceptors at an unprecedented pace. And I know the folks at the Pentagon down the street here have been working closely with the Israelis to make sure that they have the stocks that they need. There's a lot of that coming out of U.S. inventory today. It's the same with the GEM-Ts on the Patriot system. Again, these munitions, they're especially on the Patriot. The GEM-T is $1 million missile. And yet, you're using them up, every single day, whether it's in Ukraine or whether it's in Israel. So, DoD is on top of it. The folks there understand the need to make sure that our allies have what they need. But it's going to be
Raytheon CEO on CNBC talking about these missiles that they're going through.
At the same time, you kind of know what's capable in terms of manufacturing and/or what I assume are stockpiles here in the U.S.
Yeah, David, I can't really get into the stockpile numbers. I would just tell you that the folks over at whether it's CENTCOM or whether it's
All right, so Raytheon, nice reversal on the move, looking for a follow through. You could do a put spread, a credit put spread. Let's see what that goes for. RTX doesn't look like it's going to pull back anytime soon. Let's see.
This is it. I mean, we have gotten to the nadir, I think, since the 1961 speech, and I wonder how the hell that happened.
Well, Jim, it's actually pretty simple. If you think about the last 20 years, DoD and the American government has been focused on fighting terrorism.
High to the plus 800.
In Europe was far from anybody's mind. The thought of fighting a war in the Pacific was always way into the future. And again, as those threats have evolved, we haven't evolved as quickly as we needed to in terms of our procurement policy with DoD. And again, we just need to focus on what does the warfighter need? What do we need to deter these rogue actors out there, whether it's Hamas or whether it's Russia or China? What are we going to do to make sure that we can deter them and not have to?
Yeah, put spread. You know what? Need to go out a little ways. Maybe 11:03.
We still don't have a speaker of the House. How are you preparing for that? And what does that mean in terms of this ability to meet demand?
All right, Raytheon looking for a follow through.
That's a tough question to answer. I do think the good news is, despite the divisions that we see every day in Congress, there is still strong bipartisan support for defense spending, for making sure that our allies have the munitions that they need. Clearly, if the government shuts down in mid-November, that's not great. The good news is it's not really going to impact RTX, right? We're going to continue to build what the warfighter needs every single day. We're going to continue to support our airline customers. Even if we get to December 31 and don't have a budget deal, the sequestration that we're talking about is 1%, not 10% like we saw a decade ago. So it's not a great situation, but I would tell you as an essential supplier to the U.S. military, as an essential supplier to commercial aviation, it's not really going to impact us that much.
Greg Hayes, CEO and Chairman of RTX, thank you for joining us today. Stock's up 7%.
Thank you, Morgan. Thank you, Jim, David.
All right, so watching. Markets are just chopping around at the moment. Microsoft dipped a little bit going into earnings. Meta did the same. Broadcom looking a little better. Let's see, semiconductors. Looking for semiconductors to move up the list. Strength-wise, semis are up 0.33%, 0.3%. Leading sector, software, with Microsoft reporting. Software is higher. Biotechs, a little bounce in biotechs. Off the lows. Communications, that was looking pretty good. K-Web, continuation. K-Web. Let's look at Pinduoduo, some of the Chinese names following through. Pinduoduo. Let's keep an eye on the SPY. Looking for a break above these highs from over yesterday, right over here, 424. So far, hanging in there. Good morning. Good morning. Let's see. SPY. Okay. I'm going to take a 2-minute break. I'll be right back. I'm not going anywhere. I'll just be off the mic for a sec. All right, so just waiting for the opening range. Doesn't look like we're going to move much. SPY flat VWAP, so that tells you what you need to know. What's Bitcoin doing? Bitcoin, a nice break above 34,000. Looking for more. Okay, Tesla, I see HCPG talking about Tesla. All right, so it's running up against moving averages now. Tesla. Netflix looking really good. Google following through. Google looks good. Google go time. Netflix trending. Day 4 of the 50-day. Okay, so let's still take a look at Netflix. What we were looking for on Netflix was a hold on the 50-day. Now we're starting to push a bit higher. Netflix looking really strong. Okay, exactly what we wanted to see. Volume the day of earnings, the gap up, consolidate, pushing higher. The ATR on Netflix is 72% right now. 72% is traded 54% of its daily range. So there's potential for upside. Potential for upside on Netflix. Netflix. Okay, looking pretty good. VWAP is fairly flat. We're looking for this to continue, volume to stay elevated. All right, Microsoft dipped and is bouncing. Okay, Amazon looks pretty good. Amazon on a buy signal. NVIDIA, Supermicro.
Thank you. All right, Thomas, people both trading here with that in mind. Microsoft out there, got two different approaches here. Let's go Microsoft first. Hit me with the trade.
Yeah, option market pricing about a plus or minus 4% move in the shares. You mentioned those all-time highs. So I look at something that kind of fits into Ivan's narrative here. If you think this thing's going to go higher,
Amazon's on a buy. Okay, looks like SPY wants to lift here. If the FANG stocks continue, Apple's off a little bit. If the FANG stocks can manage to maintain a bid, we should see, yet like yesterday, we had a nice run up in the morning, and then we faded after that. So that's a possibility as well. NVIDIA squeezing. NVIDIA looks pretty good all of a sudden. NVIDIA squeeze.
That takes a break even around 331 to the downside over the next 52 days. I think the key with this one is you expect Microsoft to grind higher into earnings. They're giving yourself nearly 2 months, and you have that ability to roll that short option repeatedly.
Don't go down trade.
Yeah, don't go down trade.
Don't go down.
But even if it just kind of consolidates at current levels, maybe grinds up a little bit more, because you're buying that at the money call in December, selling something out of the money by $20, and that'll cover that one standard deviation. Yeah. You max out, but you're still profitable anything above that because it's $20 wide all diagonal.
Coinbase continues. All right, so good job on Coinbase. I already have shares of Coinbase. Looking to add. Good job. AMD. Just sitting there. Apple. Shorts covering Apple. Apple shorts are covering. Tesla breaking out. All right, Tesla. Let's see. Tesla. All right, Tesla is trading 76% of its ATR, 51% of its daily range. Tesla.
November 3rd weekly cycle, so 10 days till expiration on this one, where I'm going to sell an out of the money put, the 136 strike put, collecting roughly about a $3.30 credit on that. That'll take your break even down to 132.70 over the next 10 days. That's about 4% below the current share price, about that one standard deviation. So this is a type of strategy where, hey, I just want to collect some option premium that's elevated right now because implied volatility is up going into the results, or I'm comfortable buying the shares 4% lower, just below 133. So two
Total crash trade.
Yeah.
Right?
Yeah. Either want to own the shares, or I just want to collect some option premium because it's elevated going into this earnings.
Got it. All right. Thanks, Tom. Don't go down trade.
Tesla is already up. Already up on the day. Looking for a follow through. Tesla. Okay, let's keep an eye on Tesla. Nice. Okay. Let me just take a couple of notes here. TLT yesterday to 83. TLT 283. Sold to open 83. $4. Okay, Tesla looking for a follow through. All right, the markets are just sitting here. All right, Tesla, watching the near the money calls for Friday. acting pretty strong. All right, watching the markets here. Flat VWAP. Trying to push a bit higher. If we get any kind of follow through, that should help. Tesla looking for the follow through. Tesla, let me go take a look at the daily. Tesla. Netflix looking good. All right, so we're above the 200 day. Tesla above the 200 day. All right, so we're looking for volume like yesterday. Like to see volume surpass yesterday's volume. SPY is still chopping around, so no go on SPY just yet. Meta. Okay, S&P 500. Tesla is up 3.8%. Nucor Steel. All right, all of these look to be in play. Volume picking up. SPY still pulling back. So that's the one caveat. Indices are not following through yet.
A good session here. What else is new to say? Earnings mostly leading to upside. We're going to be talking about Visa, not exactly ripping as hard as some of the others we talked about. But other than the home builders, which are down, pretty much everything that reported earnings is getting a nice little lift off. And for the most part, we've gotten those sectors higher. All the indexes happening even as the dollar's up following soft European data. So the market's not interpreting the higher dollar as a big sign of what's to come from policy, as we still have no hikes getting priced. Market feeling comfortable. We do have bonds selling off, but not much. Treasury yields are pretty contained. We're going to talk.
Okay, let's look at
We're going to trade Visa, looking at those numbers, and we're going to talk about
S&P. All right, we need to move above the 200-day. Yesterday, we got up above the 200-day and we faded. Looking for a third candle here, a bullish candle, a 3-candle reversal, a morning star doji, leading to a bullish day. Not there yet. Still have, what's that, 5 distribution days so far. Stochastic's about to turn. Let's go look at our odds of a follow through. If we look at advanced decline, turned up from near 30. Small caps got to minus 30. Big caps, small caps, mid caps, and NASDAQ are all turning up for now. That's bullish. Watch Tesla. Difference. The difference is you can see the difference in advanced decline.
Sorry for the diss of the original data, but however, Richmond Fed not a market mover today. Look, the fact that our manufacturing crossed back above 50, it's a big deal because for a while there, it was like the market was or the economy, I should say, was divided, right? We had services pumping post-COVID, but all the manufacturing stuff was in this mega inflation slump. And then it was like a deflation, disinflation, worry about recession. The fact that we're back now for manufacturing after like multiple waves of the cycle fell short.
All right, flat VWAP for now. Advanced decline percent. Watch Tesla. Watch the leaders. All right, there goes Netflix. Netflix pushing. Google. All right, Tesla looking really good. Tesla back above the 200-day.
prospect starts to come down,
Oh yeah.
even with these numbers,
Then
now you're talking soft
we're
landing.
talking like jetpack type stuff. Forget
Exactly.
soft landing. We're talking about like
Well, soft in terms
yeah,
of
yeah.
soft is the ideal
Sure.
landing, right?
Markets are going to take that as like the perfect scenario, the dream case.
Right.
If you can get inflation down while we get GDP at 4%, PMIs above 50. I mean, I can kind of get why maybe there's a little risk-on appetite trying to build here, because if all those things worked out perfectly, it'd be a real beautiful surprise.
Yeah, it's the soft landing that we always talk about in economic theories that never happens,
Yeah.
frankly,
Yeah.
because the higher interest rates cause other problems that don't seem to be showing up in the U.S. economy, even though Europe, that was later to raise interest rates, didn't go as high as us. But kind of caught up. It's a lot hard to catch up. It seems to be doing much different.
All right, Tesla looking good.
Effect on the economy in the Eurozone, in Germany, where the numbers.
All right, basic decline percent looking good. Watching Tesla taking off to the upside. Tesla. There it goes, Tesla. Look at the volume. Look at the volume on Tesla. Relative volume on Tesla. Looking good. Let's take a look at that. Relative volume.
Well, $85 is a good level for the energy companies. However, we just saw 95, so it doesn't feel as bad. It's like when you know, it's like Chicago in the spring, right?
Yeah,
when
you're
it's
happy
been
to get
below
45.
zero. Exactly. So 84 and change feels low, even though historically it's still very high. You know, it might be the Venezuelan barrels coming back on the market. Biden administration allowing Venezuela to pump that. I don't think it has anything to do with the consolidation in the oil field, but certainly it could be a China demand issue that's bringing it down, or that spike volumes that we saw, it may not come to fruition. There may not be any disruption.
Whatever it is, markets are happy to see that WTI is down on risk-on days too, right? So that can be the catch. Everybody comes in to buy stocks. Oh, but also demand's picking up the buying crude. It's just not the case right now. So
85 looks great when it was just 95, and the demand destruction that started to come into the rhetoric is real, and you're seeing it in gas prices.
So we're getting the real trampoline landing bounce right now off of the lows from 6 months ago. I mean, manufacturing back above 50 and doing it without a...
Okay, we're going. Tesla's going.
Thanks, Kevin. Great perspective. And a surprise to many that our numbers are printing as strong as they are. Good little setup into GDP. Let's get back to some earnings, though, and talk about Visa with another Kevin, Mr. Green, joining us here. So pretty nice, decent report here, Kevin. A little strength in the market. Not a big winner, but it is up.
Yeah, we are seeing it up at this point in time, and we actually will get some of the numbers here at the market close. That's when they actually do report. But we are seeing some green on the screen. I want you to kind of note the stock's actually up around 12% year to date. And you compare that to the S&P 500, which is up over 10%.
Tesla, nice move. Upper Bollinger Band now, Tesla.
And that is because it's really a technology stock. It's not a financial stock. It processes payments, but it really doesn't have any type of bank accounts or things like that.
SPY, we needed to see this breakout. Apple's still drifting lower. Come on, let's go. Let's go, LATSGO.
But also in the Asia Pacific markets, which is also going to be a good driver for the stock as well. Last quarter, we actually saw total cross-border volume increase about 70% on a year-over-year basis. We should expect that number is going to be strong in this quarter, as well as we've already gotten data coming from airline companies that they saw pretty significant international travel, which is that cross-border volume area that we want to focus guidance on here. Now, we might get a little bit softer guidance from Visa. We have to see. Obviously, we have the Middle East conflict that is going to have an impact on travel. But just looking at some of the TSA data that over the last couple of weeks since the event, we saw a small downtick, but not a dramatic move to the downside.
Or a little fade.
International travel. I'm not sure if they're going to be able to speak to that since it's still a fresh conflict, but it is something that they probably will keep in mind and probably will have some asterisks when it comes to their guidance moving forward. And then overall, once again, selling their data or being a data provider as well. Small sliver of their business, but that has seen some significant growth. That could also be a driver for top line growth as well as bottom line.
Okay. Tesla looking good.
Numbers, which had already been an underperforming stock. The numbers did surprise a little bit the upside. The shares really didn't move though. Do you think there is a connection between the two? Because what HP reported was that the consumer was still very robust in its spending, but it didn't really do much to turn the shares around. I mean, I imagine Visa's going to tell us the same thing about what they see in the consumer.
The dollar is still hanging out at the highs. Looking for the dollar, the 10-year, and the VIX to continue fading. Tesla, higher low printing on Tesla, looking for a follow through. Tesla 15-minute. Looking at the volume. All right, so SPY is just sitting here doing nothing except chopping in a very narrow range between 422.50 and 424. SPY. So we have no momentum so far. SPY's flat. We got buyers stepping up underneath. That's the only good thing. Flat VWAP though. So the markets are not doing much to help. Tesla, Snowflake, Microsoft, Google, Netflix, all of these moving sideways. Nvidia moving sideways. Meta trying to do something. Amazon, higher highs, higher lows. Looking for a bid in these fangs. Okay, Cleveland Cliff on the move. Cleveland Cliff is on the move. Tesla's number 2 on the NASDAQ 100. All right, a higher low printing on Tesla, trying to get a higher low to print. Tesla looking for that follow through. Come on, let's break out. If we can get the SPY to break out, that would be awesome. SPY trying to break out. Here's the SPY trying to break out. S&P. The international side of the business is supposed to be up mid double digits. 4250 is a level that we need to get above. Resistance, gamma. FANG stocks are still lethargic at the moment. A nice start to the day, but no follow through yet. We're 45 minutes into the trading day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're looking for some direction. It is Tuesday the 24th. Just looking at what stocks are in play so far on the S&P. Looking at wicks on the top of these candles. Not yet on Verizon. WRB, a little bit of a wick. GE, wick at the bottom of the candle. Buyers stepping up on the dips. Raytheon, looking for a follow through. 3M, wick on the bottom of the candle. Look for a follow through. Industrials all reporting this week. NE Energy, Nextra, is that Nextra Energy? Next Era Energy, higher low, looking for a higher high. All right, TLT, looking for a follow through, looking for more volume like yesterday. Push it above the 90 MA, maybe it's 21-day short term. If TLT doesn't get any kind of follow through, I'll take the trade off for a profit. Just started it yesterday, closed the covered calls. I'm up about $1.50 on the TLT. All right, I'll give it a few more minutes, TLT. Watching Tesla, though. Tesla looking for the follow through. Lots of volume on Tesla. All right, so 4250 is a big level. 4250. We got advanced decline percent giving us an early indication that we could see a follow through. Let's go look at a few other things. New highs, new lows. Okay, a little better. Let's look at S&P equal weight, see if that turned. Okay, S&P equal weight is holding the March low. Still a potential channel that we're dealing with. The number of stocks trading above the 50-day is improving. It turned. Here's what I'm looking at here. Here's the March low in the upper panel. March low over here on the left. And we're holding that right now. So the equal weight index, removing the weight of all of these big cap tech names. Number of stocks trading above the 50-day and the 200-day have both improved. That needs to continue. SPY continues to chop around. S&P, IWM, and the Qs, and the industrials. Okay, I don't feel any momentum yet. No momentum yet. Coin? 100. That's the level it seemed to be a problem before. Coinbase. Okay, so nice round number. If we can get through 100, that would be good. Look at the volume on Coinbase. Coinbase. Let me change this. Coinbase, yeah. I like the volume. So I'd like to see the volume that we saw back in June. You see that volume in June? Okay, here's Coinbase in June. Look at that volume. Okay, that's what I want to see. I want to have, that was about what, 120 million shares trading hands in 5 trading days, that last week of June. So I want to see more of that. I want to see more volume. The indicators all turned up. That's good. RSI is rising. So stop under the low of the day, looking for a follow through. Bitcoin still fading a little bit. It has its back and fill moments. It won't go straight up. Good thing people are not chasing. It looks like people aren't chasing per se. The weekly looks really good on Bitcoin, by the way. So if you look at Bitcoin, all right, Bitcoin, let's take a look at, here's a daily over here on the right, daily. Okay, so a big range. The longer the base, the higher in space, as the saying goes. We started basing in April. Okay, so 7 months later, we're trying to break out. The weekly time frame looks really good too. Okay. I was talking to my son about this yesterday. We obviously have some Bitcoin in his accounts and the daughter. That's doing really well. So this is about what, 382?
Welcome to Schwab Network.
Daily live exclusive content.
The high.
Broadcasting 24/7 from our studios in Chicago.
So it's just shy of 382 right now.
Up to the minute market insights.
Example trades and stock specific analysis.
Okay. So here's 382, that yellow zone. 50% is the light green zone. So right about 42,000 would be 50%.
Watch live and on demand. 24/7, 7 days a week.
42,500.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network. Empowering every investment. Saving every investment.
High tickler plus 800.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free.
Octa, big turn in Octa. Okay, here goes SPY. All right, keep an eye on your stocks. Tesla. Okay, looking for a follow through on the break higher. Okay, higher low on Tesla. This is Tesla, higher low. Octa's turning the corner. Just noticed Octa out of the corner of my eye. That's pushing higher.
You guys can't talk about that. I just wanted to address that because everybody's going to go, oh, hey, iShares BlackRock. What's with the ETF?
Octa.
Small, it's up for
Right.
decision. You guys are mom.
Tesla.
We're watching this alongside of you and
Nice volume on Tesla. Looking forward to fill this gap overhead. Coinbase. Nice move on Coinbase. A little sellers up here. People are quick to take profits, so there's still some skittishness in the market that we need to deal with. Let's look at the New York FANG index. That'll tell us these 10 stocks that we follow. These 10 stocks that we follow at about 10% weight average per is giving us a more bullish day. All right, so looking for a follow through 50 days overhead. So keep an eye on your FANG stocks. If you're trading any of these, Apple, big reversal on Apple. Holy smokes. All right, Apple, big reversal there. All right, that's pretty nice. Shorts covering. Let's see if that turns into something else. Apple's about to go green on the day. Okay, so we'll see a nice wick on this candle today. All right, wick is starting to show up. We had one bullish day. Another bullish day today would be awesome. Netflix, no follow through. Flat VWAP. Nvidia, no follow through. Flat VWAP. Google, upward tilting VWAP. We're watching for a follow through. Google. Okay, looking for that to pull away from VWAP. Not yet. A lot of these stocks are stuck to their VWAP. Nothing sticking out just yet. Cleveland Cliff. I saw some other steel names on the move. CLF.
And what I like to say is that time in the market is so much more important than trying to time the market. And so we really feel that it's important.
Okay, keep an eye. Nucor was higher earlier. I thought I saw something on Nucor. Nucor.
Younger end of folks thinking about the long term. This isn't like catch the back 20 years of my investment path. This is like something that can be an asset from the beginning.
Absolutely. It's actually designed for individuals no matter
All right, SPY.
retirement journey.
Lifting.
As an investor, it's as simple as selecting the fund that most closely aligns with your target retirement date. You start making
All right, SPY starting to go.
is done for you. You can think about these products, as I mentioned, evolve along with you along the retirement journey. Really, three phases of the retirement investing life cycle that you can think about: grow, protect, spend. When you're early on in your investing life cycle, like I said, you want to be getting that access to growth. And so the portfolio that we have consists of nearly 99% broad and diversified equities. Then, as you enter that mid phase of your career, as you start to get closer to retirement, you really want to begin thinking about protecting your assets. So that
Okay.
portfolio begins to include high quality
Tesla.
inflation protection. And then the third phase, as you actually enter retirement, it becomes all about spending. And so you really want to be in the most conservative mix of assets at that point in time.
Carvana on the move. Carvana.
So we shift down to about
VWAP up sloping.
in equities at that point in time, and then you can spend from there.
Interesting. Okay. So the allocations or do shift, or you pick the funds with the allocation that kind of fits where you are in the timeline. It sounds like it's the type of thing, though, that like has a little bit of a learning curve to it, where do I just completely park it and forget it, or am I going to have to kind of work with my advisor or have the knowledge to kind of know, all right, well, when do I transition like a different type of approach, a different allocation?
Well, that's the beauty of these ETFs. It's actually completely, all of this is done for you. As the investor, all you have to do is simply select the ETF that most closely aligns with your target retirement date, and that product, that portfolio will evolve with you as you approach retirement. It automatically rebalances and shifts those assets to more conservative mixes as you approach retirement. So it couldn't be simpler.
Hi, Tickler plus 800.
Okay, here we go. All right, SPY breakout.
So the suite of the funds, 3, 6, 9, 10 roughly ish, have each date. So you're targeting 2025. It starts. You're targeting 2030 all the way up to 2065. The expenses go up a little bit for the longer target out.
Okay, we need more days like this. We need to follow through.
That doesn't have the target date on it. Which is that? Is that just like I can? Do you have flexibility, or how does which?
Okay, nice follow through, Brandon. You're crazy. That's funny. Okay, NASDAQ 100. There's only 9 stocks red on the NASDAQ 100.
And all these at least 8 to 9 basis points, no more than 11 in terms of cost. Okay. Thanks for the explanation, Rachel. Well laid out for us. I think we got it. Appreciate the update, and we'll definitely keep in mind some of the stats from the survey too, helpful on some of the retirement hiccups people are encountering. Appreciate it.
Thanks for having me.
Absolutely. Cash, not exactly the retirement solution. All right. BlackRock's new life target ETFs. Rachel, have you ready? Coming up. Let's talk some technicals. Reports still ahead. Texas Instruments, Snap, and T-Mobile, who apparently has been taking all those mobile users from Verizon and AT&T, but the surprise from Verizon maybe is that the bleeding has slowed somewhat, so pressure might be on for T-Mobile to perform.
I was born on the south side of Chicago.
has been a long road, but now I'm working for Schwab. I love to help you understand and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage.
All right, looking good. Tesla looking for a follow through.
No place better than the Schwab Network.
All the info from every trading day. I'm ready to go. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends, available anytime, anywhere, on any device, for free. Recap your trading day with the wrap, right here on schwabnetwork.com.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network. Let's get down to some news and prepare for what's ahead. Vinny Young and Rick Ducat, our chart master team, take a look at the fundamentals and technicals, of course. I've got T-Mobile on my mind, Renito. Let's talk about that one first. Coming out tomorrow, we look at Verizon's report this morning. It kind of seemed like maybe...
All right, looking for a follow through in the S&P. Looking for Tesla to continue. Or a little consolidation. Looking forward to push higher. Tesla. Tesla.
Not completely right now, but the truth is intense competition has been hurting on the stock. It's hurting the stock really because the company has been trying its best efforts to improve profitability and also to increase cash flow conversion.
All right, we're above the 200 days, so potential. There is potential.
The adjusted earnings is expected to be down sequentially, $1.79, $1.75 a share. Revenue is expected to be $19.35 billion. That will be up from last quarter, but a fall year over year.
So the top line is getting hurt on a sequential basis, and the bottom line is also getting hurt. Same story, right? Down quarter over quarter.
Yeah. Actually, the bottom line, pardon me, I'm so sorry, it's up from last quarter.
Okay.
The $19.35 billion is up from last quarter for revenue. But analysts say that the company's low price service plan strategy to attract customers and remain competitive, that will likely impact profits in a way. And that's along with other promotional activities. It's trying to keep its customers that it already has and growing new ones, but it will come at a cost to the company as well. Now, on the upside, T-Mobile has collaborated with Pixel Health to deploy a 5G hybrid network at Boston Children's Hospital. This is the first of its kind implemented within the healthcare industry. So we can look forward to hearing some positive things about that, but whether or not the success of that is enough to offset some of these competitive concerns remains to be known.
It's interesting that the analysts talking about the competitive concerns, the kind of price of getting those customers, because I mean they have been doing quite well compared to AT&T Verizon, but at a cost. So I guess I can get that argument that like, all right, how much is it worth? And that initial combination, T-Mobile and Sprint, how do you take that and run with it now, which gave them that leg up? Shares, Rick, slowing down a little bit. I mean, it did have a pretty nice drop.
Yeah, but overall, we haven't really moved too much at all on both the 52-week and a year-to-date basis here. So So the thing that strikes me the most about our T-Mobile chart today is that it's very triangular.
This is fun.
Yeah, we have one trend line going across the highs, starting with those yearly highs, a competing trend line starting with the yearly lows, converging toward each other. So this speaks to several things here. The main thing is that the trend is slowing down, kind of moving sideways here. It's giving us an increasingly compressed area to look for our price movements to be within these boundaries here. Look at our moving averages as well. All three of our moving averages practically right on top of each other, trending sideways for the most part. Further speaks to our lack of strong directionality in these gains. Look at our RSI as well, kind of the same picture. Another triangular shape here, a series of lower highs and higher lows converging toward each other. We are above that 50 midline right now. We're also above our moving averages that we follow. So things maybe have a slight change right now. But, this might be, on one hand, you could view it as kind of boring because we aren't really getting big moves, no big breakouts or anything, kind of just in a increasingly smaller range. But on the other hand, that's usually the recipe for an impending breakout. Low volatility is often the precursor to high volatility. So if I were a trader, I'd be really excited for a potential move beyond either of those trend lines because the reaction could be energetic here. So the levels to watch, 142.84 was our high point from right here. We didn't spend too much time above that point. So maybe around 144 or so would be where we might get our breakout from that level. We've got quite an important pivot point here. We've got our two longer-term moving averages, orange 63-day, purple 250-day, right around the 140 level or 138 level or so. So if we fall below that point, next point to watch.
All right, so Pinduoduo breaking out. Pinduoduo breaking out. Number one on the Nasdaq 100. Pinduoduo.
Streamlined here, which is kind of convenient for traders because you've got still a good bit of movement even within this triangle before you break out from it. So I guess one step at a time here. T-Mobile will see if it moves to either end of the triangle, and then from there does it actually break out. All right, fine. Good chart. T-Mobile definitely slowed down a little bit from a pretty strong start. Still firm on the year. The stock snap, Renita. I don't think firm is the word I would use to describe.
All right, nice follow through. Watching Tesla for a follow through and a push off of this level. That's pretty funny.
Down year over year, down sequentially. Revenue of $1.11 billion. That is also down year over year. Now we'll be looking to see how daily active users have fared. That set have projected that Snap would have about 400. Well, you know what? We will get back to that number. But the company previously said guidance had assumed 406 million daily active users at the high end. And FactSet had projected around 406 million daily active users as well. Now, we'll also look for domestic downloads as well as international adoption. To see that domestic download, analysts expect that to continue to drop. We expect the international adoption to continue to be challenged. Shares are still up, though, by around also more than 10% year to date. So we'll find out if the company will continue on this trajectory.
All right, Tesla fading.
Yeah, nothing good in expectations. I mean, I didn't hear one positive thing about analysts are saying. And here's the thing: is that we're up on.
FANG stocks are trying, but doesn't look like there's enough volume to push everything higher yet. Nothing really jumping out in terms of volume. Okay, so we'll keep an eye on that. Pinduoduo, that's pretty nice volume at the open, but it's already up $3 from where I first looked at it. It's up $5 on the day, $5.83. Pinduoduo, followed by NetEase, which is popping higher. Okta turned the corner. Baidu turning the corner. Match.com is starting to move higher. People got a date. Tesla, Packard. What's going on with Moderna? Moderna with a multi-day drop. It's starting to turn. Looks like shorts are covering Moderna. If you like Moderna, keep an eye on it. Zscaler, Palo Alto, CyberArk, CrowdStrike. Watch the security names.
Going forward in high growth market spaces where our innovation differentiates us in some emerging mega trends.
JD.com turning off the low.
Technology, industrial automation. So when I was talking about focusing on 3M going forward, it's both driving that performance across the company and also where we take and invest in and deliver growth in the future. So it's that future view of 3M's success.
Yeah, well, we'll be watching.
T-Mobile, nice bounce on T-Mobile.
Mike, gonna leave it there for now. Thank you.
All right, thank you, David.
Meantime, check out this mystery chart. The street's #1.
Intel got clocked yesterday. Intel, where'd you go, Intel? On the news that NVIDIA is going to produce that ARM-based PC chip. NVIDIA trying, it's not really doing much today. NVIDIA had a nice climb yesterday. It's holding near the highs, but no follow through yet. Netflix, on the other hand, higher and then on a gap up and now flat VWAP. So be careful with flat VWAP. All right, we need to see the markets move as well. We're still building in what is a descending channel. So there's a lot of work that needs to be done. I don't think anybody is unaware of it, but the S&P is in this descending channel that needs to be rectified. A breakout to the upside would be good. We're above the 200-day. All right, so we're above the 200-day. That's a plus, but we're not there yet. So we're still looking at potential breakout. That's going to come after we get back above 4,400. I don't see that happening near term. We got trouble at 4,300, 4,350s, a bunch of levels overhead. RSI is turning though. MACD, stochastics turning. Stochastics is set up, it just needs to turn now. Okay, New York FANG index, same picture. Those 10 stocks that we follow and trade. Nice bounce. Like to see more volume. The MACD and stochastics are set up, turning. RSI is turning, so best of both worlds. Looking good. NASDAQ 100 and the S&P. IWM, the 160 level is a major inflection point down here below 164. We hit 164.65 yesterday, bouncing. Still in a downtrend. We really need to see junk bonds, high yield corporate, IWM, small caps, and biotechs all moving higher. Okay, IWM, let's see, biotechs, a little bounce. Junk bonds need to get back in the saddle, need to get above the 200-day. And we need to see the 10-year dropping off as well. 10-year yield. All right, so it's holding inside day. Now, the rule of thumb with a inside day or doji is the next day gives you the signal, I'm thinking it's going to move lower, but we won't see it until we confirm. Now, this is early in the day, so this could turn out to be something else. This could be another bearish day down to the 21 day. Who the hell knows? Could be a bullish day too. So yields are definitely on many people's minds. Tesla's still sitting here. Let's look at the US 20-year. US 20-year yield gapping down. On a short time, we need to see this moving lower. I have the opposite trade on. I have the 20-year bond. This is a 20-year yield. Okay, TLT. Okay, my cost basis on TLT is 79. I wouldn't let it move that low. If it can't follow through today, TLT, today, tomorrow, if it can't follow through, I'll take that trade off. I'm at a profit already. My cost basis, because I sold covered calls at the 83 strike, my cost basis is 79, so I won't give that back. I would close the covered calls for a profit as it starts to drift lower and then sell TLT. Hopefully TLT will follow through. There goes SPY. SPY and the S&P is starting to move.
In terms of global brands, you're still overweight Ralph and Nike. You're still overweight Lulu, but you do remove Lulu from the focus list. Are you getting more cautious at the margin on the high end as well?
No, so the way we're kind of thinking about it and sticking with that self-help theme, obviously some of the issues that Nike has gone through over the last 2 years now become opportunity on the other side. I think the total addressable market for active and athletic favors a Nike as well as a Lulu as we move coming out of the pandemic, where I think the brand awareness and health awareness coming out of the pandemic is stronger, as well as the casualization trend, which in my opinion is the mega trend post-pandemic. So I think Lulu and Nike both set up well in that. More self-help at Nike as you think about the 2024 and 2025 playbook, but still early innings growth on Lulu. It just performs at the top of our list as an overweight. So we do remove it from our best ideas list and focus more on self-help, as you said, upgrading PVH with Nike and Ralph both being self-help opportunities as we move into next year that can buck the trend with a macro backdrop. Particularly, it's more that low and middle income consumer that I think is where the real exposure is.
Matt, you don't think that Foot Locker is a self-help story? I noticed you downgraded the name, which, look, it's already had a pretty big move lower. Everyone was so excited for Mary Dillon to come in and fix some of the relationships and turn around this stock. Why the downgrade?
Yeah, hey Sarah. Look, our focus is on the E and the fundamentals. And breaking down this model, we're 30% below the street for next year. So look, while I'd love to find a reason to be constructive and buck the trend like we're doing
plus 800.
to me the fundamental setup into next year, I do think it points to sequential improvement, but with same-store sales down nearly 10 at Foot Locker, there's a number of issues.
All right, S&P continues looking good. Looking for a bounce in the FANG stocks.
Competition in the space, I think right now is very fierce, as well as an extremely high concentration of low to middle income shoppers, which I think into next year, that is not the concentration you're looking for. That's also part of our downgrade of Bath and Body as well. I think the reality is it comes down to pricing power. It's differentiation, innovation, and taking market share. And that's really where our overweight ratings as we move into 24 are paramount versus others that I think need a level of macro. And that's where, in my opinion, a Foot Locker and a Bath and Body Works fit in, which is the premise behind our downgrade on those two today.
Right. I noticed you're still underweight DG and Big. We've talked about this before. Why, in an environment where there's macro pressure, especially at the low end, does the dollar concept not work as well?
Yeah, it's a great question, Carl, because you'd say historically, with economic disruption, you would see the trade down opportunity. And the two sectors would be off-price, which would be TJX, Ross Stores in Burlington, as well as the dollar stores, Dollar General, Dollar Tree. The difference today...
Okay, Mercado Libre having a pretty good day too. Mercado Libre, Melly on the move.
broken record on this show, talking about value and convenience. That's what matters to that low to middle income consumer. Walmart, Target, the discounters, the grocers, they've invested a tremendous amount of money over the last 5 years to be more convenient.
Okay. S&P. Looking for that follow through. Break above 42.60 next would be good. And then we can maybe see 42.75 again.
Which translates to margin compression. So our view is for value and convenience, it's off price. I love TJX and Ross Stores. I think that what they're doing, they're bringing top known brands to the consumer at great values. And I think that's the way to win in 24 and 25.
Tesla, no follow through yet.
Shake things up, Matt. Obviously, the street's taking notice. Appreciate the time.
Right, thanks for having me.
Okay, Bitcoin starting to bounce. Bitcoin.
CEO of payments company Fiserv raising guidance for the second quarter in a row amid strength in their merchant business. What it says about
Okay.
Plus, check out the move in Bitcoin hitting its highest level in more than a year, and a number of crypto-related stocks soaring. We'll talk about what's driving that action next.
All right, FANG stocks are not following through. FANG is not following through. Tesla pulling back. Moderna turning. Coles breaking higher. Coles. All right, looking for the FANG stocks to follow through. ARM Holdings looking for continuation and a move back into the range. Coinbase consolidating at the highs.
Hey, David, good morning. So Bitcoin's rally was first sparked by this excitement we've seen around the approval for a Bitcoin ETF, but there's also some action going on in derivatives markets that's having an impact this week. The cryptocurrency popped above $35,000 this week. That was for the first time since the industry really saw a meltdown last summer. It has been climbing past that $30,000 level in the past couple of weeks, thanks to hope that the Bitcoin ETF would be approved. The SEC declined to challenge a court decision against Grayscale Investments. That company is trying to convert its publicly traded trust, GBTC, into an ETF. We've got BlackRock and Fidelity among those with a Bitcoin application out there
as well. Investors I'm talking to say the abrupt spike higher this week, it's likely due to action going on in the options market. So short covering by traders who bet against Bitcoin, they got to buy back that cryptocurrency. That's sparking the rally here. According to data from CoinGlass, Bitcoin has seen $250 million in short liquidations in the past day or so. Crypto stocks getting that boost as well. You've got Coinbase higher. It's listed as a partner in a lot of these ETF applications. MicroStrategy, Riot Blockchain, as well as some of the mining names getting a boost as well. Back to you guys.
What's Nike doing? Nike had a nice follow through. Nike. Nike breaking higher. Nike looking really good. Nike breaking higher. Nike breaking higher. Nike continues. Nike looking good. Looking for the follow through. Looking at Nike for the follow through. Headed for the 200-day, looks like. Next stop is probably about 110, 111. It's about 5 points overhead. 5 to 6 points overhead. We'll run into some pivots, maybe 106. Between 106 and 110, we'll run into some traffic, if you will, as we come up against this volume by price band. So volume looking really good 2 weeks, 2 weeks in a row. Volume looking really good. Nike looking for the follow through. Nike. VWAP up and to the right. Looking for a little dips to buy.
Wall Street's great rate debate. Was the move lower in yields yesterday the start of a bond market comeback? TD Cowen President Jeff Solomon here to weigh in.
Spotify with its first quarterly profit in more than a year. The stock's adding.
All right, SPY fading. Looking for a higher low. S&P.
Speaking of earnings, the tech earnings train kicking off today with Alphabet and Microsoft after the bell. We'll give you
4250, 4260. Looking for a price to bang around in here. Testing VWAP looks like for now. Yesterday's high right in this area. Evening high was right in this area around 1245. We reversed at this area.
Stabilizing is key because yields are up a little bit right now, but we're below that 5% on the 10-year. Probably psychologically important. And then higher guidance beyond industrials, Carl. It was in Coke, it was in Kimberly-Clark, and these are companies that get really hit by the strong dollar, too, which they're absorbing pretty well. Let's start off with the bonds and the rate debate here on Wall Street. This morning, Bank of America saying the peak in rates could be around the current levels, though uncertainties remain high. Then there's Barclays also weighing in, saying bonds still don't look like compelling value despite the violent sell-off. And then UBS seeing better value in bonds than equities. So what should we expect for rates from here? Do bonds provide better value at this point than stocks? Joining us is TD Cowen President Jeffrey Solomon. Jeff, do you think we've seen the top in yields?
I think we're closer to the top than not. But
That's an easy dodge.
No, it's not. I mean, I really do. It's hard to make the argument. But is there like a 1 in 10 chance that we have to take that rate spike from here? Sure, there is. But I think a lot of this has to do with the way the Fed is playing things.
All right, looking for a higher low on the futures. Tick cumulative has crossed over. We're trading 3-to-1 up volume on the NYSE, 3-to-1 on the NASDAQ. That's a good sign. The hourly chart is giving us a green signal.
Versus bond yields are actually pretty decent, and the real rate of return, if you take a look at CPI versus 10-year, is actually pretty balanced.
Pretty good green signals. Looking for a bounce here, a higher low. We've got the 5-minute, 15, and 30 giving us green signal on the futures. We got 3.5-to-1 up volume on the NASDAQ, 3.3 up on the NYSE. Tick cumulative is green.
I think if you're sitting on cash, you're feeling pretty good right now, and there's no reason to hurry it. Equities, if you look at it, you haven't missed much in equities if you actually didn't invest in big tech. And I think that's one of the things that we've been looking at is that the rally here has been super narrow. It's like 12 stocks driving most of the performance here. If you look at the S&P on a not a market cap weighted basis, just it's down for the year. Like this has not been a tremendous risk on, particularly for smaller companies. So again, that has to play out over time before I'd say it's safe to sort of come outside.
Which is why some people say this is not a bull market, right? Classic bull markets, you kind of make money in everything, at least a little.
Yeah,
a shaded degree.
Yeah, this is not. But again, this is part of the mean reversion that we saw of 20 and 21. So I think this expectation things are going to reverse so quickly, maybe a bit overdone. And I was probably in that camp too. I thought things would reconcile much faster. But it's been a while since we've seen inflation, so a lot of us are coming to grips with how do we manage capital in this kind of an environment.
So what's it mean for the capital markets that you are in? M&A, IPOs, started to see some spurts of activity.
Yeah.
But I don't know, since we've seen this other leg up in rates, what that's done.
Well, so I'll start with the equities. I mean, with the equity market, IPOs are on hold for a little bit. I think that has to do more with geopolitics than anything else, and we'll see how that plays out. But certainly they haven't performed well this year. And so when IPOs as a class don't perform particularly well, then it makes it harder for others. A bunch of folks are queuing up, though, for next year. I think there will be some movement on that front. As it relates to M&A, we've actually seen, particularly in the sponsor area where we spend a lot of our time, we've seen a lot of M&A activity. I'd say more M&A activity in the third quarter this year than we've seen in a long time. More equity underneath LBOs, more in sponsor deals. You're finally starting to see maybe 50% on average equity bets underneath these deals. And I would say the bank market for financing them is still a little bit, tight. Certainly after the things we saw earlier in the year, but the direct lending market continues to be hot, and folks are looking at those places to go get their deals financed.
Jeff, I always like to ask you about biotech and healthcare because that's a big place where Cowen has played. A lot of moaning from biotech investors that the sector just can't catch a break. We're seeing M&A, we're seeing innovation, and yet if you're not in obesity drugs, no one's interested. Why?
Yeah, I mean, there was a lot that got done in 19, 20, and 21, and I think there has to be a little bit of a reconciliation of that. A lot of companies got financed, and there hasn't been a lot of clinical success, or it's taken a long time. Even if you look at some really highly financed areas like gene therapy, the number of drugs that have come out over the last 10 years has been surprisingly few. And so I think people are just taking a pause on it, and the sector's just been beat up. The XBI continues to perform really poorly. Having said that, companies will finance themselves because they have to, and for select stories where there's real clinical hope for positive clinical outcomes, we're seeing things get done. We just had, one of the better Octobers we've seen in terms of getting biotech deals done at TD Cowen for sure.
Real on the financing side.
On the financing side, I mean, we'll see how they all perform long term, but in terms of getting things done, certainly a lot of existing shareholders are doubling down in some of their core positions. And when they have a high degree of conviction around names and backing management teams, frankly, that they think will be able to navigate through this challenging period for sure.
All right, Jeff. Always good to get color from you. Thank you very much for coming in and sharing.
Good to be here.
Jeff Solomon.
Let's get to the auto industry. In the last hour, the UAW expanding its strike to GM's largest plant in Arlington, Texas. That comes after the automaker beat expectations for Q3, but they did pull the full-year guide due to the ongoing impact of the strike. Strike's costing the automaker about $200 million a week in lost vehicle production. We're going to get more details on the impact Thursday.
All right.
Joining us to break it all down, CNBC contributor
S&P.
Mark, this latest ramp-up, the homes
Keeping an eye on S&P.
last week were foolish.
Well, Carl, I think what we're seeing now is we're probably closer to the end of negotiations than the end of the beginning. And the reason for that is, you saw that, the UAW has now struck the three most profitable plants literally in each of the Detroit three automakers, right? With Ford, with Kentucky Truck. And then obviously a few days ago, what they struck in terms of Stellantis and their pickup truck plant now, obviously, as you just mentioned, Arlington. And I think that's going to be important because the UAW needs to be able to go back to the rank and file with whatever tentative agreement they end up with and saying, hey, listen, we gave the maximum pain with the exception of shutting down the entire automotive industry on these plants. And here's what we're able to get. So I think it's going to be interesting over the next week or two to see where we end up. But as you know, Carl, strikes are not like fine wine. They don't get better with age, right? They're not good for the automakers, right? Not only do they get a financial hit, but, we're in the time period where production of things like four-wheel drive vehicles for the winter, which carry better margins, are important, and they're not producing. And then, the worker on the line who's been out for 6 weeks, they're getting $500 a week. And, with this unprecedented level of transparency of the proposals on the table, you're going to start them getting antsy saying, hey, let's take this. It looks pretty good.
Right. So you're sort of getting to an ongoing thesis that's been out there, and that is that Fain, the UAW chief, is going to try to do what he can to get the pound of flesh, so to speak, to demonstrate to his members that they got the most that they could.
Yeah, I think he was waiting for the earnings to come out because, as you saw from GM today, the earnings was pretty good. It was down slightly from last year, but demand is still pretty healthy. And I think he's looking for that one last, if you will, cudgel to be able to use against the automakers to say, look, they're profitable. But at the same time, it's about time to cut a deal. But I think a lot of this comes down to some of the non-wage demands. And I think the key comes down to this demand from the UAW to want to organize the future EV plants or the joint ventures that are either set up or being set up by the automakers. And that's a non-starter for the automakers because they're very cognizant of what it takes to compete, not only against the non-union imports like the Toyotas and the Nissans of the world, but the Teslas and the other EV startups.
On that note about competing, especially with the non-unions like Tesla, which they want to catch up to, do you think this affects their ambitious plans to spend, I think, $35 billion, of which they previously committed to building EVs? Does it affect the timeline and the pace of innovation we'll see at GM?
Well, Sarah, I don't think it impacts their longer-term view that, listen, the industry is going to transition in these propulsion systems from ICE to EVs. But to your point, I think it absolutely adjusts their timeline, and you're seeing that, right? You saw Ford push back some of their timeline for not only their objectives for how many vehicles they want to be able to produce by, X date, but also the plants that are being built. You saw today from GM, they're pushing out their goal in terms of the number of units that they want to produce.
All right.
Interestingly, they're all
And S&P just chopping around here. Tesla not going anywhere. The FANG stock's not following through. Looking a little better.
versus the early adopters who were, I won't say it was easy, but it was easier than where they're at now.
Right, and we've talked about the sticker shock element as a headwind to adoption. I'm not clear though, if you're cutting capacity, does that mean prices hold in? I mean, where are we going to make progress to getting that magic $25,000 EV?
Well, you know, you're seeing Tesla take the lead on this, right? The average price of a Tesla across their whole model lineup is down about 20% from the first of the year. And that, you know, Musk has been very clear. He's like, listen, I'm going to go for volume over margin. And I think his calculus is like, you know, it's a little bit of a land grab right now. And I'm going to cement the position of Tesla in the marketplace before the established OEMs really ramp up for their vehicles. But, you know, I think part of pushing out the automakers, pushing out some of their capacity and their plans is along the lines of what you just mentioned, Carl, which is, listen, if we have less capacity, that'll put less pressure on price. But make no mistake about it, versus a year ago, getting the profitability in EVs for the entire industry is harder now, given what's happened with pricing led by Tesla.
For sure. The white rabbit, as Morgan Stanley calls him, that everyone's chasing. Mark, we'll see where things go from here. Talk soon, I hope. Mark Fields.
Thanks.
Meantime, the CEO of payments company Fiserv coming up after the break. Stock's getting a nice boost after raising guidance for the second quarter in a row.
Plus, we're watching Spotify reporting a surprise profit, beating expectations for new subscribers and total listeners. CFO Paul Vogel joins us this hour. First on CNBC with a big turnaround in the stock, sharply higher after that conference call. Welcome to the show. We'll be right back.
S&P trying to hold on to this level, 4250, 4255, 4260 overhead. FANG stocks started off the day, looked like they were going to move. Broadcom looks like it wants to go. Tesla drifting a bit lower. No follow through on Tesla. NVIDIA. All right, we're chopping around right at VWAP.
Watching GE higher after posting better than expected Q3 results, also raising guidance. Year over year, it turns to a profit from a loss. CEO Larry Culp saying the company is seeing rapid growth in its aerospace division in particular. In terms of the planned split, management says it remains highly confident in the spinoff of its grid and now onshore wind business, GE Vernova. If the stock can maintain these levels, it would be the best year for GE shares, going back all the way to 1982 when the stock rose 73%.
Different era back then, that's for sure. Let's turn to another earnings mover. Take a look at Pfizer today, higher this morning after delivering a beat on the top of the bottom line, raising guidance going into year end, all just a day after announcing a new partnership to expand its reach into payments processing for small businesses. Joining us at Post 9 today is CNBC exclusive is Pfizer CEO Frank Visitano. Good to have you back, Frank. Thanks.
Good to be here, Carl. Good to see you, sir.
You were talking about the mood a moment ago on camera and what the tone is like from your visits. How much of it is reflected in the guidance in the quarter?
Well, our guidance reflects everything, and I think the tone was really about what's going on around the globe. We've never had two wars before, the change in the speaker, but I think the consumer is still spending, and, our bank spending is still there. But obviously, it's all of the world's issues are reflected in our guide as best as we can see.
We mentioned small business. Is it filtering down to the small and medium-sized business, or is their concern still about how things cost year on year looking back 12 months?
Well, inflation definitely had an effect on small businesses, but, they're still seeing growth. They're serving the consumer is spending. They're looking to grow. You mentioned Melio. That's about helping them manage their business better and helping banks partner with them better. So, all right, we're just sitting here. Looks like it's going to be a boring day so far.
The Clover business, which competes with Square, had really strong growth, double digits, 26% revenue growth, payment volumes up 15%. Is it a strong consumer, or are you taking share from competitors like Square?
Well, I mean, there's Square, there's us, and we're really the two largest SaaS platforms out there. But the market is very, very large. So we have been a share gainer, and we also are bringing more value-added services. So our ability to expand the TAM, our total addressable markets with our clients, continues to grow. And Melio would be an example of that.
What about the consumer overall? There was some concern that we'd see an impact from the student loan payment resumptions. Are you seeing that at all?
What we see right now is kind of flat to what we saw last quarter. So you can consider it on a year-over-year basis as a slowing. Although the fourth quarter is a very tricky quarter because of the holiday season. So I think the second half of this quarter will be very telling to how strong the consumer is going to come out. But they're out and spending right now, and you see that in our revenue growth numbers.
So in a good way, I mean, right? The idea that holidays remain robust.
Yes.
Given labor conditions or whatever in this country.
I think so, yeah.
How about internationally? We talk about all the concerns here, but I mean, Latin America, Europe, is there still a sense that North America is still the best house?
I think so, although, we're a global business. We have a fabulous business in Latin America, Brazil, Argentina, where we do have what I would call excess inflation.
And some political movement.
Yes, right now. And I think that was a surprise, the outcome of that election. So we'll see how that runoff occurs. All right, just watching price action chop around. It has the best capital markets, it has the best economics, and even though we've had higher interest rates, inflation, when you compare it around the world, it's a fabulous place.
Well, Latin America in particular is super strong. Is that sustainable for you?
We've built that business. We built a business in Argentina, a business in Brazil. We have a couple of points of inflation in that growth, but we're market share leaders in both those markets, and we continue to grow.
Finally, we were just having a conversation earlier about M&A. Where does it fit in your view in terms of adding to growth?
Well, we have done a bunch of tuck-ins, and the way our point of view is a product like Bento Box that serves restaurants. We believe with our scale and distribution, we can buy startups and then have them grow at very large scale. Clover was bought for $56 million. And a lot of engineers deployed by us and a lot of capital to now have an industry-leading platform.
Looks like a bargain in retrospect.
Yeah.
Sure. Frank, thanks. Good to see you.
Thanks for being here. Appreciate it, guys.
Still to come, a look ahead to the big tech names reporting tonight. The big week for the sector kicks off with Alphabet, Microsoft, and Snap. Welcome to Trade. We'll be right back.
Okay, S&P pulling back a bit. All right, what's going on with Bitcoin? Bitcoin pulled back as well, but it looks good on the daily and the weekly. Off the highs, a little bounce, not going anywhere yet. Tesla, flat VWAP on Tesla. Apple, flat VWAP. Market's not going anywhere at the moment. Hope everyone's having a good day. It's almost noon. It's 11:23 on the East Coast. This is Cousin Vinny coming to you from theclosingprint.com. It's Tuesday the 24th. Kind of a quiet day. We had a nice little pop this morning on the gap up. We're still at 274 on the SPY, 25 handles on the S&P. Cash.
As Israel continues to try to locate these hostages in Gaza. NBC's Jay Gray is in Tel Aviv once again. Hi, Jay.
Yeah, and it's been interesting to see some of the outreach to try and locate those hostages. We know today that the IDF forces have dropped leaflets. They're trying to communicate, when they say on multiple channels of communication, telling Gaza residents that they are willing to provide both protection and compensation if they give some of the information to IDF soldiers as to where these hostages may be, how they are being held, and where Hamas gunmen may be set up along the border. So that's something that we hadn't seen to this point. We know that the airstrikes have been continuing at a very fast pace. The aid is coming in as well. 20 more trucks crossing the Rafah border crossing with Egypt today, but no fuel. And that's become a critical issue. In fact, UN saying that fuel at this point may be more important than the water and food that is making it across. They say that of the hospitals that remain open, they are well over capacity, some at 150%, and have less than a day's worth of fuel left. The lack of fuel also means that bakeries providing the bread that is the only food many of those in Gaza are getting right now will not be able to do that if they can't get fuel either.
Jay, we know that the whole country has joined the fight, including the tech sector. And a lot of people do look at Tel Aviv and Israel as a whole as a tech hub globally. How are civilians and industries using skills to join the fight?
Yeah, no question that the tech industry here is burgeoning, and no question that they have joined this fight, as you talked about. We had a great opportunity to talk with some of those in the sector who are working behind the scenes as civilian, others who have been called up as reserves.
In the echo of blast across Gaza, 40 miles from the border, where tanks and troops prepare to move in. There's a group of civilian fighters. Their weapons, a mouse, keyboard, and computer screen. Their mission, information, identification.
We have teams that are working on technology, looking at technology like AI, like facial recognition, voice recognition, trying to match patterns of movements and all the stuff.
Tel Aviv's burgeoning tech sector using their special skills at a time when their country needs them the most.
We work day and night.
Recognizing the agony of families unable to find loved ones after the October 7th attack, Reuven, a software developer for California-based Palo Alto Systems, says in just 24 hours, he created the framework for an app now used by hospitals, police, and the Israeli army, pulling together pictures and data, helping to identify those killed or wounded.
All right, flat B web looking for bounce.
They put some filters on the data, like what is the gender, the eye color, the hair color, the body type. Does he have tattoos? What is his height?
Victims unknown for days, now identified in just minutes. Tech teams are also analyzing videos, social media posts, searching for hostages and those responsible for the attacks.
The industry has a presence on the front lines as well. At least 10% of tech workers, Army reservists, have been called from their office towers to active duty.
It's like two completely different things, right? Because here I'm a combat soldier. I need to walk with my gun.
Stationed along the border with Lebanon, where firefights with Hezbollah fighters are intensifying. A few weeks ago, Shlomi was working as a software engineer at a Tel Aviv startup. Using a weapon or the web, there is a sense of urgency right now.
There's so much work to be done. It's not a time to take a breath and think about the past. It's time to act.
Action they hope will help to end the war so they can get back to their day jobs.
Yeah, and for these civilian groups, they tell us that they are moving around constantly out of security concerns, and all of them tell us that they hope their work isn't necessary very soon. They'd like.
All right, we're fading a bit more.
It's amazing just how the entire country is galvanized and mobilized to support this effort. Is it not life as usual? Are they not going to work? Are kids going to school? What is it? What is the daily routine there?
Yeah, it's interesting because in the last 2 weeks, we've seen it kind of change a little bit, shift a bit. When we first got in, a lot of the shops were closed. A lot of the markets were closed because people were gone or too afraid to get out. We've seen a little bit of more activity over the last couple of days, but it's still noticeable. There are still a lot of places in the country, a lot of offices have just shut their doors. Too many people have gone. But even in the local shops and restaurants, you see a lot of people that say, we can't open. My son is gone. My husband is gone. My wife has gone to serve. And so that's something that is become a new normal in this area of Tel Aviv.
No, it's such a small country. Everybody's affected. Jay, thank you very much for bringing us that story. Jay Gray in Tel Aviv. The CFO of Spotify joins us after the break, reporting a surprise profit. Its first in a year, the stock more than doubling in 2023 so far.
Watching Verizon as well, leading the Dow and the S&P, on pace for now the best day since 2008. Company beats on earnings, raises its free cash flow forecast as the sub-ads did top estimates as well. We're back in a couple of minutes.
All right, so looking for markets to bounce back towards VWAP. Tesla, Apple, flat VWAP. Tesla made a nice effort. Looked like it was going to break higher, and we are just sitting here moving sideways to slightly lower. FANG stocks. Yeah, no follow through at the moment. They're up. Most of them are green on the day, with the exception of Apple, which is off 60 cents. No big deal.
Some breaking news to tell you about. 33 attorneys general from across the United States are now suing Meta for allegedly endangering young users and profiting off the data harvested from them. The suit also
Apple trying to bounce.
platforms are addictive to its users.
Broadcom had a pretty good day so far. It's up 1260. Tesla starting to turn. It's up $5 on the day.
Despite knowing the potential harms it could have on their mental and physical health. Meta telling us for its part in a statement, we share the Attorney General's commitment to providing teens with safe, positive experiences online and have already introduced over 30 tools to support teens and their families. We are disappointed that instead of working productively with the companies across the industry to create clear, age-appropriate standards for the many apps teens use, the Attorneys General have chosen this path. Carl, they're apparently demanding a number of remedies, including civil penalties. Meta's stock right now not reacting too much off the highs of the day, but it is still higher. Keep in mind, it's also up more than 200% since last October and will report earnings this week.
Let's get a news update in the meantime with Pippa Stevens. Hey, Pippa.
Hey, Carl, here's your CNBC News update. There are now 4 candidates remaining in the House Speaker race. House Republicans are voting behind closed doors this morning to put forward a replacement for Kevin McCarthy, who was ousted 3 weeks ago. Representatives Byron Donald, Tom Emmer, Mike Johnson, and Kevin Hearn are still in contention after 3 rounds of voting. The Chinese military official who disappeared from the public eye 2 months ago has been officially removed as defense minister. That's according to state media reports. No explanation was given for Li Shangfu's dismissal, and China has not announced a replacement. Beijing also abruptly removed its foreign minister in July. And the 8th installment of the Mission Impossible franchise won't hit theaters as planned next summer. Paramount Pictures shifted the release date to May 2025 amid the ongoing actors' strike in Hollywood. Production on the follow-up to Mission Impossible Dead Reckoning paused in July. Sarah, back to you.
All right, Pippa, thank you. Let's get to the European close. Markets mostly higher after moving off the lows. Utilities, real estate, and consumer goods leading right now the charge. Hermès is the big winner in that sector after reporting better than expected sales. On the flip side, financials, the underperformer over in Europe following weaker economic data, and Barclays warning of fourth quarter cost-cutting charges. Both the manufacturing and services index in the Eurozone falling. S&P Global saying, in the Eurozone, things are moving from bad to worse. Quite a quote. We wouldn't be caught off guard to see a mild recession in the Eurozone in the second half of this year. This all as the head of the ECB, Christine Lagarde, tells EU officials that the fight against inflation is going well, but the Eurozone economy faces stagnation for the next few quarters and some downside.
All right, we're just chopping around. Netflix fading, so that was a fake out. That faded. NVIDIA started off the day with a gap up. It's still sideways along VWAP. Apple trying to hold on. It's flat as well.
Spotify did raise the price, remember, of its single premium account to $10.99 per month back in July. Joining us first on CNBC is Spotify Chief Financial Officer Paul Vogel. Paul, welcome back. Nice to see you.
Great. Thanks for having me.
So I think what the market likes here is the fact that you were able to do the cost discipline without sacrificing growth. But we really did see a big change in the share price after the conference call. What happened?
Yeah, so I'd say a couple of things. One, if you take a step back for us, it's been a really phenomenal quarter and a really phenomenal year. And so coming into the year, we've exceeded all our expectations. So we exceeded on the quarter our monthly active user growth. We exceeded expectations on our subscriber growth. Our revenue was in line. Our gross margin was better. We had an operating profit, which was amazing. But if you look at it in the totality of the year, you look at our guidance for Q4 and where we expect to end the year, we'll add over 100 million monthly active users for this year, which is the largest year we've ever had. We'll add over 30 million subscribers this year, which is the second largest year we've ever had. And when we started the year, I think what's really important is we talked about this ability for us to sequentially improve gross margins throughout the year. And we've seen that. We saw that in Q1, Q2, Q3, and now we're forecasting that again for Q4. And with that has now come more efficiency for us. We're seeing that resulting in strong bottom line numbers. So we had an operating profit this quarter. And importantly, we also have really strong free cash flow. So we generated over 200 million of free cash flow in the quarter. So I think it's been the combination of our ability to be more efficient as a company, really start to see the benefits of the business, but that has not come with anything other than continued strong user growth and subscriber growth. So we're getting the top line growth. We're continuing to invest in the business, but we're also seeing improvements on the margin side, both the gross margin and the operating margin.
I think that's what did it. That's what got investors excited on the call, the margin improvements and the fact that you're guiding for it again in Q4. So are you at the point now, Paul, where it's sustainable, where you can see sustained operating income profitability?
Yeah, we believe we are. We do believe that this is an inflection point for us. Any quarter, you never know what can happen. So I will never say never. But, we do expect that we are in a position now where we'll continually have quarterly profits. We'll continue to be in the black. And I think for us, what's really important is we've talked about as a company, we believe we have a great product. We think consumers think we have a great product. And we wanted to prove out that we can also become a great business. So we've really focused as a business on how do we continue to innovate? How do we continue to invest? But do it in a way where we're more efficient and it results in being a great business. And so I think what's been really exciting for us is you're starting to see
flat VWAP.
Continue to see the strong user growth and subscriber growth, and you're seeing that margin improvement. And yes, I think most investors weren't looking for us to turn a profit in Q3 or Q4. So it's exciting that we'll do it in both Q3
okay.
and Q4. And we expect that
It's one of those days. S&P.
Performance came on monthly active users and subscriber numbers even into a price hike. So give us a little color about what you're seeing as far as.
Okay, we're still hanging out at the 200-day. Got a wick up at the highs like yesterday.
Yeah, so we've been very pleased with how the price increase has gone.
RSI is rising. Stochastic's trying to turn. We still have 2-to-1 up volume, 3-to-1, 3.5 on the Nasdaq, 2-to-1 on the NYSE. Tick cumulative is green, so we're looking for a bounce. Looking for a bounce.
For this quarter, and that's what happened. Our churn came in right in line with expectations. What was really exciting was our gross additions actually outperformed expectations. And so we saw basically no real change on the churn side. And we saw the acceleration in the gross additions, really strong gross additions, and that led to the outperformance on the subscriber side.
Hey, Paul, I remember a while back where the street was wrestling with your investments in podcasts. I wonder if you consider podcasts and whether or not they went through a bubble, as some allege. And if so, I wonder when the next craze comes along, if you'll be a little more discerning in your investments in that cycle.
Yeah, so I would say, look, for us, I think podcasting has actually been a huge success for us. And so when we got into the podcasting business, we had 0% market share. And now we're probably the leader globally. We know we're the leader in many, many markets. And so we feel great about our podcasting business. The podcasting business definitely was an investment. We spent a lot of money in this space, a lot of it really productive. We clearly made a few mistakes. But what's great about podcasting is, A, we're starting to get through the back end of it. So we've talked about how podcasting has been a drag on our gross margins. It's a pretty minimal drag at this point, and we expect it to be additive to gross profit in 2024, which is great. And additionally, having podcasts, what we've seen is when our users engage with both music and podcasting, their engagement goes up, their churn goes down, their retention goes up. And so it's actually been great to have both of that as part of the app. And now that we've added audiobooks into the mix, we think we're adding even more value and more content into the mix, which will be really, really valuable. So for us, podcasting has definitely had some ups and downs, but for us, it's been really additive to the business. It's been additive to users. It's been additive to engagement. And we actually believe over time will be additive to profitability as well.
The other thing that's notable is premium up 16. And I wonder if there's longstanding pressure on the consumer going into a downturn in, say, unemployment, how durable that is. I mean, can we keep posting numbers?
Yeah, I mean, we hope so. I mean, for us, we haven't really seen any impact at all over the last couple of years with, economic uncertainty through COVID. We've kind of grown right through all of it. And for us, it's really about innovation. Like, we continue to believe that our investments in product, what we do that differentiates us from everything else is why we have faster growth. It's why we have more users. It's why our users churn less, why our retention's higher. So we believe as long as we continue to improve that value and that price to value ratio is really compelling for consumers, we think we'll be able to continue to grow strongly. You never know. Obviously, there's a lot of uncertainty out there, but we feel really good about how we grew this year, but not just this year, over the last couple of years, given all the uncertainty.
Yeah, market investors feel good about it too, Paul. Thank you for joining us today. Talk us through it.
Great. Thank you guys so much for having me.
Paul Vogel, CFO of Spotify.
When we return, what Coach James Quincy told Sarah about the dynamics between pricing and demand. Shares well underperforming the market this year, but giving a boost to the Dow today after their raised guidance. That Dow coming off a session high, still up 200. Don't go away.
Alrighty. This is really slow. This is like a Friday already. Oh, boy. 10-year yield. Holding on to an inside day for now. Need that to fade.
We're seeing robust trends around the world, outside the US, and actually also the US business in its total revenue growth. We spent the last few years leaning into the opportunity to grow, reinvesting ahead of the curve on marketing, on innovation, on revenue growth management, packaging, and on execution. And so I believe we have the momentum behind in our business that gives us a good confidence for the rest of the year. As you say, that's in our upgraded, increased top line and bottom line guidance. And we feel good about the momentum of our business going into 2024, notwithstanding some of the consumer clouds on the horizon. We think the momentum is there in the business.
That was Coca-Cola CEO James Quincy speaking last hour to us, touting the beverage company's bullish guidance. They raised guidance after beating street expectations.
All right, we're starting to push back up into today's range, S&P. Flat VWAP. We're looking for a price to stay inside of this range for now. Tesla's starting to turn.
Very little data, even some of the worst estimates as far as how many people could be on this drug. He just doesn't see necessarily cutting into beverage sales. So if you can cut calories with food, you need the hydration with liquid, and that Coke's been positioning themselves for a more wellness portfolio, 0-calorie Coke, 0 Sprite, in that direction anyway.
Can we get other CPG companies getting volume inflecting positive?
Well, that was the thing that really surprised people. 2% volume growth, 9% pricing growth, and that's why it's a standout compared to household products makers, where it's been 0 or negative, food companies 0 or negative. I asked him about that. He said they were very conscious of the pricing moves, but they were able to maintain and offer value for consumers.
Yeah. We'll see if this is a turn for the space or not.
They say Coke says it's sustainable for them at least.
Yeah. Dow up 220. Let's get post to post with Bob Pisani. Hey, Bob. Good morning, Carl. Good morning, guys. Look, I'm encouraged by the fact the S&P is up 27 points because yields are a little bit higher. That's good news. But we're now getting earnings, and I'm a little concerned with what I'm seeing here. Remember, in between the banks and the tech company are the big industrial names, and they've been reporting recently not great commentary about the fourth quarter that we're seeing. So here's 3M. They might say, hey, look at this. 3M's up 5%. Okay, that's fabulous. Well,
NVIDIA, back above VWAP. NVIDIA. Netflix, below VWAP. Gapping up today. Bitcoin, chopping around between 33,004. It's up to 33,008 now. Moving back up towards the middle of the morning range. Around midnight, we were trading right around 34,002. We're headed back in that direction now.
Same thing with Illinois Toolworks, which is right over here. So take a look here. This is very big in the automotive space. Sorry, guys, I'll get out of your way in a minute here. But the important thing is they reported a beat, but they talked about the impact from the strike, for example, on their businesses. They're talking about a 12-cent reduction for the fourth quarter. And 219 here, that's flat for the year. It hasn't gone anywhere. Illinois Toolworks, which is one of the big global industrials, is essentially gone nowhere for the entire year. Then we take a look at Dow in the material space. Their guidance for the revenues were below expectations.
Okay, I got to make a quick call, guys.
$10.5 billion.
Let's see.
Expectations overall. Then we have Corning here. That's another good example here. Another big company. It's sort of in the
Okay, I got to put you guys on mute for 1 second on the phone. Let's see.
They missed on the top and the bottom line, and the guidance was well below estimates. They mentioned weak demand right across the board. So, Carl, the industrials are now reporting. We'll see what the tech companies say, but right now it looks pretty obvious to me that the industrial sector is going to see a reduction in earnings estimates
Be with you guys shortly. I'm just on the phone with Schwab. All right, sorry about that. Had Schwab on the line. Okay, we got a little bit more fade. Tesla pulling back a bit. NVIDIA hanging on to VWAP. NVIDIA. All right. VIX just bouncing around. SPY and S&P fading. Tesla still flat. Apple flat. Not much to do here, unfortunately. Most everything is sideways. Okay, let's go take a look at what is working on the S&P. Nike, what's Nike doing? Nike. S&P fading. Okay, looks like we're going to be back down below the 200-day. We're just below the 200-day. 42.36.88 is the 200-day. We're at 42.34.74. VIX pushing a bit higher. And the dollar and the 10-year are fading. So we got some mixed signals here. Crude oil is down at 83. Big drop on crude oil.
Low ticker minus 800.
Okay, all your fangs. Tesla. ServiceNow. Snow. Microsoft drifting lower. Google. All right, so not any kind of follow through. Maybe we'll get something in the afternoon. For now, markets just continue to fade.
Seems to assume that if you write the check, pay the fine, you move on. How do you feel?
because that's why I cite free cash flow all the time. That's why I cite that. I mean, if they're taking 40 billion just to buy back stock, they have a ton of cash that they can settle or do whatever. I mean, and even TikTok has died down, right? The pressure against them. So it's not good for sure. I'm not going to spin it positively, but I don't think it changes the narrative, nor does it change the fundamentals over the long term.
Nike dropping off. Look really good, Nike.
On that note, breaking news from Washington. Let's get to Emily Wilkins on the Hill. Hi, Emily.
Looking for a follow-through tomorrow.
Hey, so we now have yet another Republican nominee for Speaker. Tom Emmer has just won the Republican nomination. And now it sounds like what Republicans are doing is they're doing yet another vote to see who can vote for Emmer on the floor. So it was who wanted him to be the nominee, and then who could back him on the floor. This is kind of what we saw Jim Jordan do the other week, trying to get a sense of his support, and then after that, meeting up with the holdout members and seeing if he can sort of sway them one way or the other. Obviously, Jim Jordan was not able to get to that magic number of 217. And of course, it's a question now whether Tom Emmer will. We know that he does have support across the conference, from some of those more moderate members to some of those more hardline conservatives. But at this point, it really only takes five members to block anyone from becoming the speaker. And so we will have to see if those five exist in some capacity. And if Emmer can't get it, what comes next? You also saw Mike Johnson, who's currently the Republican conference vice chair, do quite well in the room when it came to nominations. But I think at this point, a lot of members have fatigue. A lot of them have been telling us how tired they are and how much they just want to wrap the speaker vote up this week. So unclear whether we'll see a floor vote today, but at this point, we can say that Tom Emmer is going to be the nominee going forward.
Emily, appreciate that very much. Emily Wilkins with that breaking news from DC. Coming up,
All right. TLT. TLT following through, trying to break out above yesterday's highs. TLT. I took a TLT position yesterday on the Yakman news, and the yields showing some potential for a pullback. I took a long at 83, almost exactly at 83. I sold the 83 at the money and got $400, $395 for those. The position is up $1.76. So $352 so far. I only have 200 shares of TLT. I would like to buy more TLT if we can get a nice breakout, and then maybe roll these covered calls up for another credit. Got mixed signals. Bitcoin trying to bounce. Mixed signals on the indices. Let's go ahead and take a look at the S&P. S&P. All right, so we're still, the issue here is we're still in this descending channel. It looked like a pretty good bullish day to start the day, but we faded right around 1035, 1040. So it looks like we're going to move back down into this lower portion of this channel down. 921.50 are all pointing lower for now. We need those to turn up over the next several weeks. TLT grinding higher. TLT. Okay, so we're not on schedule to take out yesterday's volume. If we get halfway there, would be good. 40 million shares would be good. We're almost halfway there now to 40 million. We're at 18 million and change, 17 million and change. Okay, so the idea is that we need to get above the 21-day. Between here and there, we got about 1.5 points, 2 points that we could see. So what I would do is wait till it gets above the 21-day to consider adding. But if we get to the 21-day, I might roll those calls up for a credit. I sold the 83 call for January.
That number didn't look right to us. Plus 232 on the Dow. I'm just saying. Looks like it's only up 118. So beg your pardon on that. We'll continue to check that out, but it doesn't look like that board is moving correct. Yeah, there's the Dow. It's up 120. Welcome back. Let's get to our chart of the day. It's 3M, and it's surging on a beat and the outlook. Steph, you on that?
I do, but to put it into context, it was down 28% headed into the print, so very low expectations. But the numbers are probably going higher, and the stock trades about 9.5 times earnings. I am not convinced that 7% dividend yield is secure, so just have that out there. But overall, the number was better than expected. Free cash flow was $900 million better than expected. The healthcare division is pretty much humming. And even the other problem areas like consumer and industrials, while they missed on top line, they beat on profitability. So their price cost mix is actually starting to work. So a vote of confidence for sure.
General Electric.
Yes.
Up 100% this year. Or a year.
GE, yeah, that's a good looking chart, GE, but it's it looks like it topped out. It's starting to move higher again. Obviously, very difficult to buy it up here. GE looks great. Looked even better down here in the 50s, similar to Tesla when Tesla took off at a 100 level. But, you know, Tesla looks a lot better, all things considered, looking for Tesla to bounce. NVIDIA and the rest of the FANGs that report this week, looking for NVIDIA to get back up in the top of this range. TLT still pushing higher here. TLT still going. TLT, nice move. Volume coming in right around 11:15, 11:45 rather, 11:45. TLT.
All right. Then there's General Motors. They pulled their outlook because of the strike. Stock's up. Well, it was. Now it's down.
800.
What else is new?
Yeah. Okay. I'll tell you what's new. They generated $5 billion of free cash flow.
Okay.
I mean, so anybody wants to take a shot at that, go ahead. I mean, what's the market cap, like $50 billion?
Why is the stock down?
Stock's down because of the UAW strike. So that's the short answer. Why was the stock trade at 4.5 times earnings? Because of the UAW strike.
The stock was trading at 4.5 to 5 times earnings before the UAW strike.
No, it's trading more like 5.5 to 6 times, and in historical past, it's traded around 7 times. And when the UAW strike is done, it's likely to be there. In the meantime, what's happened? You know, the reason I leave with that $5 billion of free cash flow, folks, is because what do you think they're doing with it? They've got $13 billion of net cash in their operations.
TLT continues higher, breaking higher. TLT.
Share count shrunk year over year 5.2%. At well below book value and a ridiculous yield on earnings yield or free cash flow yield. So for people who are going to say like, oh, hey, you know, this has done nothing for a long time, that says nothing about what it's doing going forward.
Who are those people you're referring to?
No, it doesn't have to have a name. To whoever would want to say that, I would say.
Person's name.
I would.
Can I ask a question?
Go ahead, Josh. Ask a question. But before you do that, let me just say something. Let me just say one thing.
Go ahead.
Let's everybody be careful. Everybody has a stock in their portfolio that has languished despite great, excellent reports. Okay, so everybody's got it. Just be careful about throwing stones.
Can I ask? Are you sufficiently protected now? Can I ask a question? Why would these PE ratios ever change? And if it's solely a UAW issue, why were these stocks selling at 10 or 11 times earnings 10 years ago? Like, this has been a decline that's been years in the making, and it affects international auto companies that don't have as much or anything to do with United States-based labor unions. So I'm trying to understand, like, what's going to change the current dynamic in place as these companies head toward 3-4 times earnings being an industry standard globally. Why would that change?
I mean, this kind of reminds me, Josh, of, you know, in the fall of 2021 when many people were saying the same thing about energy. And I won't name names, but many people were saying that. The look in the rearview mirror, it's not to me helpful as an investor. What is helpful to me as an investor of what I said is these are highly profitable companies generating $5 billion of free cash flow in a quarter against a $50 billion market cap with net cash, significant net cash on the operational balance sheet. They just buy back shares. So to anyone who thinks, like energy in the fall of 2021, that they're going to languish at these multiples, Go ahead. They're just going to buy back shares below book value at earnings yields that are extraordinary. Just let them keep doing it. Eventually, look, if I'm the last person holding a share of GM and I've got $5 billion in free cash flow a quarter, I'll be perfectly happy. Let them buy back
Will
all
their
the shares.
weighted average cost of capital allow them? Will their weighted average cost of capital allow them to continue to buy back as much stock as they've been?
All right, looking for a bounce.
I think it's a great question, and the answer is I don't think so much about weighted average cost of capital, which isn't very high. And again, I've got to point out
TLT breaking higher, breaking above yesterday's high. All right, we're right at yesterday's high right now.
Your question should be, will that free cash flow stay in there? Will it hold in there? That's a legitimate question, to which, again, I go to 12 and a half years being the average age of cars on the road. They simply don't last that long. Consumers need new cars, and as fast as these can be produced, they're being sold. That's what the results just showed us.
I know this is not going to trigger you. You already seem sufficiently triggered.
I'm excited. Come on, Josh and we get excited about these things.
Cleveland Cliffs. What's up near 7%? He was so excited his microphone flew off. The microphone box fell on the floor. And believe me, it's rare. It's rare to see Jimmy that excited. When the microphone flies off on the floor, the box hits.
It's like sports talk radio. All right, let's do Cleveland Cliffs.
Cleveland Cliffs up near 7%.
Yeah, I mean, look, 600 million.
You can go ahead and put that on. Okay. You know how that goes?
Yeah,
you can put it on your coat.
There you go.
There you go.
Like holding it.
There
It's
you go.
special. Cleveland Cliffs is special. I want to talk about it. 600 million of free cash flow in the quarter. Okay, and that's not an unusual quarter. It's not like there's
Okay, Tesla's still dropping off here.
They spent the last few years reducing capex, reducing their cost to produce steels, while negotiating contracts primarily with the auto OEMs. And Josh made the point that auto OEMs are not just the big three. Okay, Toyota, everybody else is producing cars. And that's showing in the volumes that Cliffs is producing, the selling price.
Looking for shorts to start covering at some point here.
Which is way above spot prices. So people look at spot prices.
ABGO, Broadcom is still up 1050 on the day, 1050.
They got costs going down, they got volume strong, they've got prices going up. And the biggest thing about Cliffs is you want to be a long-term shareholder here. This is the green producer of steel.
Let me ask you a question real quick again. Yeah, because we got to go. Why is the stock down year to date?
I think it's on two reasons, which are related. Recession, which ties into that spot price that I mentioned quickly, but spot price is around $800 a ton. That's what moves around intra-quarter, and people say, oh, good, all right, we see the spot price going down, we're going to sell Cleveland Cliffs.
Dollar starting to turn.
Of $1,200 a ton. And they have negotiation skills.
All right, seeing a little bit of short covering on some of these names. Amazon, seeing a little short covering at 126.60. Seeing a little short covering on Google and Microsoft. Snowflake. Apple. Apple's off $1.
I hope I don't sound like I'm joking at all. That free cash flow, again, and it's not just GM, it's not just Cleveland Cliffs, it is the whole corporate America that is generating free cash flow. And what are they doing with it? They really can't buy back more debt. They're buying back shares. They bought back 60 million of shares in the quarter. And that's something that's likely to continue. Obviously, there's the merger hanging out there, Scott. I don't know how that's going to play out. Okay. But if that merger doesn't go through, that's a lot of free cash flow they're going to buy back shares with.
All right. Let's get the headlines now with Pippa Stevens. Hi, Pippa.
Hey, Scott, here's our CNBC News update at this hour. The Biden administration is prepping for the possibility for mass evacuations. That's according to the Washington Post, which quoted senior officials who say hundreds of thousands of Americans may need to be evacuated from the Middle East if the Israel-Hamas war can't be contained. Last week, the State Department issued an advisory to U.S. citizens worldwide to exercise increased caution because of potential terror attacks, demonstrations, or violent actions against U.S. citizens or interests. A new shot to protect infants from the respiratory virus RSV is in short supply, according to the CDC. In an advisory to doctors sent last night, the agency told doctors to prioritize infants less than 6 months old who have chronic lung disease.
All right, we'll continue to fade.
Conditions. And signs of hope in Hawaii after the devastating August wildfire. The mayor of Maui County announced that all of West Maui, except for the burned out sections of Lahaina, will reopen to tourism on November 1st. Scott, back to you.
Thank you. Pippa Stevens coming up. Well, he's a bank analyst by day. He's a power lifter by night. No ketchup, no mustard. The mayo is next.
Oh, brother. All right, XPEV is at 15. It's at the high of the day and squeezing. Some of these Chinese names look pretty good. ARM Holdings, looking for that to push higher. ARM Holdings. Still basing. A little bit higher today. ARM. A little descending pattern. Back up to the 21-day.
Low ticker minus 800.
ARM Holdings. Looking at this little descending pattern. You had the IPO gapped up and then faded the second day after the IPO, and then we just consolidating. So it needs to break above 55, and volume needs to pick up. Volume's starting to pick up, so there might be some buying down here. That 46.50 level for now was a gift. That looks pretty good. All right, let's take a look at Bitcoin. Bitcoin having a pretty good day, pretty good week. Continues higher, breaking above this 32,000 level decisively. Now, CNBC writing it off, some of the commentators, talking heads on CNBC, writing it off as short covering. That all of this since September 11th apparently is short covering. Maybe. Maybe. But anyway, this looks very strong. The weekly breaking above levels. So if this was a stock, you'd be looking for a follow through and a test of this level up overhead between 42 and 48,000. Okay. So Bitcoin looks pretty good. Let's look at some of the other names like MSTR, MicroStrategy, having a big day today, plus a good week so far. Big gap up. Nice follow through yesterday. Frano, did you take this? I know you mentioned MicroStrategy.
Welcome back. A few big banks hitting 52-week lows today. The sector now on pace for its third straight month of declines. However, our next guest says it's a buying opportunity. We've made it our call of the day. Mike Mayo making it the head of large cap bank research at Wells Fargo Security, just named the #1 bank analyst for the fourth year in a row by Institutional Investor. Welcome. Would you like that tease?
I did. Thank you for mentioning the powerlifting with the bank analysis.
Well, I mean, it's, we aim to please. Okay, so your call is buy the big banks now. Why in the world would I want to do that?
Well,
I mean, that's what investors are probably, I'm sure, I'm trying to channel what our viewers are thinking right now. And they're like, the regionals are down like 10% in a week. Big banks are down like 9% in a week. Stocks are trading terribly over the last few months. Why do I want to buy them now?
Well, I want to recognize the headwinds. Interest rates are a lot higher than I had ever expected, the banks had expected. They've been much more of a headwind to the deposit cost, the net interest income, the spread revenues, capital markets, and earnings estimates have been cut by 20% in the last year and a half. But I think we're in the middle of the seventh inning, maybe the eighth inning for these downward earning provisions. And once that last earning provision is done, I think that will set a floor for the banks, starting with our favorites, which are Goliath is winning, JP Morgan #1, Citigroup #2.
So you have buys on everything, right? You have a buy on...
No, not on everything.
Well, I'm not on Morgan Stanley, but you have a buy on B of A, a buy on Citi, a buy on Goldman, a buy on JPM. Are you rethinking any of these calls? let's just say over the next 12 months. That's the sort of time frame you use, correct?
Right. Well, as a broader team, we have downgraded 6 regional banks and other names over the last several weeks. So we have kind of narrowed in on the biggest banks, which are showing the greatest resiliency, especially JP Morgan's. Their estimates for this year and next are higher than at the start of the year. So we're really putting more of our money into those more concentrated investments. And I do think it's a longer tail for the regional banks. We go with the larger banks first, and then some of the trust or brokerage firms like a Goldman Sachs, and then the regional banks are going to come up to the rear. We do think the whole sector, though, has not gotten credit. The de-risking.
All right, we'll continue to fade. Another bear flag looks like.
Recession comes and goes. You're going to see that the bank will perform a lot better than people expect.
See, they've de-risked, but there are still risks that are out there that haven't materialized yet. The likes of which that Diamond himself was talking about today in Saudi Arabia. I'm sure you saw those headlines. How do you react to? It's not like, that's a ringing endorsement to go buy financial stocks today.
Well, look, there's 3 risks. The 3 R's would be rates, recession, and regulation. When it comes to rates, absolutely that's been a big risk and it's taken a toll. When it comes to recession, look at the credit quality of banks. It's so much better than anybody had expected, and that's where the resiliency is going to show through. And when it comes to regulation, Jamie Dimon himself said banks are uninvestable because of the new proposals that are out in Washington, D.C., but he's saying that while he himself owns over $1 billion of JP Morgan stocks. I think he's, going a little too overboard there with that uninvestable comment, and that's dragged down the stocks, and I think that's an opportunity.
Are estimates at risk? Are your own estimates for these banks and their earnings potential at risk? Yes or no?
No, but I think consensus estimates are at risk by like another 5 to 10%. That's why I say we're in the middle of the 7th inning for these downward earnings revisions. So the consensus has to catch up, and then that'll be a nice floor.
Real quick, Jim.
It's the day of free cash flow, Mike. Basel III endgame, potentially higher U.S. regulations. Is this going to crimp the ability for these companies to buy back shares with free cash flow?
It already has. You have unrealized securities losses that have gone up because of the higher interest rates. Banks have already slowed down buybacks. But back to the comment before, I think the biggest banks like JP Morgan and Citi will be able to buy back more stock going into 2024, and that will also provide us support.
I like what I hear.
Good to have you here. Mike Mayo, and congratulations again. 4th year institutional investor, top bank analyst, large bank analyst. Up next, Mike Santoli with his midday word. We're back right after this.
All right, just watching the SPY fade a bit. Just scanning through stocks here. Not much going on. All right, VIX continues to ride higher.
I'll tell you what, it's interesting here. When we came on the air some 47 minutes or so ago, all of the mega caps were green except for Apple.
Yeah, good point.
Now we're steadily moving red, almost across the board. Apple, Microsoft, Meta, Amazon, Nvidia, and that's taking the market in.
It feels like a very index.
Yeah, everything is red now.
S&P's down 5 days in a row.
Netflix is up. Google is up. Snowflake is up. Tesla is trying to hold on to gains. Broadcom fading from the highs. It had nice gains. It's up $7.30. All right, looks like we're headed to fill a gap.
I think we're in that mode, kind of just churning around the lower end of the range. We still want the critical mass of the big guys reporting to know if there's going to be anything kind of a new source of energy in this market from that. And yeah, I think arguably the expectations have been curtailed enough on enough of those big stocks that it could be the case. But not making much of this pause in yields yesterday. You had a pretty big pullback from the highs in the 10-year yield, and trying to make something of it. And financials have also been conspicuous underperformers.
Yeah, we were just talking about that with Mike Ray. I mean, on the same day that Jamie Dimon, we become accustomed to these kinds of comments from him. He says, "I said half the world away," making them today, but talking about the outlook being dicey.
Yeah, and I get it. I mean, I think there's the sort of late cycle vigil has not been called off, whether it happens or not. It feels like there could actually be a pickup here in terms of things like industrial production. A lot of folks pointing to that. The ISMs look okay. So I don't think it's anything like today that gives you more reason to worry. But the psychology is there. I think it'll improve if price action improves. Basically, that's usually how it works.
And we'll see if it starts to after the bell today in overtime.
Yeah.
Good to see you. All right. Thanks, Timberlake. All right, coming up, we're going to set up on Boeing. That company reports earnings tomorrow before the bell. What Steph and Jim are expecting, they'll tell you next.
FANG stocks are off, as you heard Mr. Wapner saying. Nike back to VWAP. Nike looks like it's regaining some strength. Nike looking for A, B, maybe C and D. Nike looks pretty good on the daily. Nike. If we can get a follow through and volume pick up. Volume the last couple of weeks have been pretty strong on this move higher. It's only moved from 94 up to 104, so 10 points. And we got over 70 million shares trading hands in 2 weeks. So it looks like they want this higher. RSI is at 70. Stochastics embedded, MACD above its signal line. Volume, though, is what I've been watching. And this small move for the most part. Foot Locker was another name in the group. Foot Locker. All right, here is Foot Locker. That's fading. Nike looks good, though. Nike. What's going on here? Why isn't this updating? Oh, there we go. Okay, Nike looks good. So 10 points, 94 to 104, 95 to 105. And you can see all the volume here. That's institution. So they look like they want this higher. 921 have crossed up and to the right through the 50-day, headed towards the 200-day. Nike looks pretty good. Okay, earlier Carvana was doing well. Let's see what that looks like. Carvana. All right, so it's still in a little descending pattern. Carvana, Google, Netflix all look good this morning. SMCI, those are fading. SMCI gapping up. Looking for it to get back above the 50 day. Raytheon, CEO was on this morning. Gap up on earnings. Buyers stepping up at the low of the day. Looking for this to follow through as well. Similar idea as what we had with Tesla. Not Tesla, with Netflix. Netflix moving above the 50 day. Reversing at the 100 day. Looks like we're still basing in this area between 400 and 415. Looking for a follow through on Netflix. SPY is still fading. VIX is still climbing.
I don't think they're going to change their long-term guide of free cash flow of 6 to 7 billion from 24 to 26. And I think that's really much more important, not to get too caught up in the short term. That being said, TE was a bright spot for sure in earnings, and in aviation, as I mentioned, organic growth of 25%. That's a tailwind for Boeing and Airbus.
Farmer Jim. Y'all brought that back?
I did. Thank you. This has been tremendously disappointing over the last 2 months, down about 25%. And it's all on what Stephanie alluded to, in my opinion, these aft bulkhead issues with Spirit Aerosystems. That is likely to get fixed. The way this stock is trading is where it was 3 years ago when the 737 MAX was grounded, the 787 wasn't being delivered. That's not the situation that we're in right now. But the problem is sentiment on this stock is absolutely terrible. I think just a slow
VIX still moving higher.
and who knows where it could come from. It could come from deliveries that expectations are so low right now that hopefully they will be positive, can turn this stock around, because this is not, it's not a question of the company turning around. It's already turned around. It's the stock needs to turn around. That's a sentiment issue. They just need a small piece of good news from somewhere tomorrow to do that.
All right. Quick break. Final trades on the other side.
All right, we continue to fade. S&P continues to fade. So no follow through yet. S&P at the 200 day. Briefly above yesterday and today. We're fading again. We've got, looks like 5 distribution days so far. Stochastics is oversold, so we're looking for a bounce. Watching advanced decline percent. That was higher earlier. Still got a little hook to the upside, so maybe they're just filling this gap. Pretty quick to fill the gap early. We're not too far away from filling the gap. All right, so 420. 420 is a nice round number. Looking for a bounce. 4,200. 420 SPY. Not much to do at the moment because most stocks, unless if you're thinking short, most stocks are fading with the indices and vice versa. The indices are fading with the big tech names. We got Microsoft reporting tonight. Microsoft reporting tonight along with Google. Google's still up $1. Microsoft is off $1. All right, I'm going to take a couple of minute break. I'll be right back. I'm your host Cousin Vinny, coming to you from theclosingprint.com. It is 12:55.
Well, we're towards session lows here for stocks as we wind down on this program anyway. As we were just discussing with Mike Santoli, you've had some selling in some of those mega cap names, right? Dow is only up 59 points now. Microsoft and Apple had gone negative, so that's out of there. The S&P barely even on the positive territory ahead of those critical earnings coming afterwards. We're watching DC for what's happening there. Republicans still trying to elect the Speaker of the House. Maybe that's having some impact here. But there are a number of other issues, obviously, on the table that we have our eyes on today. Let's do final trades. Well, actually, those are next. All right, tomorrow we got a big day coming up. Liz Ann Saunders, Charles Schwab's chief investment strategist. We're going to be live in Philadelphia, the big Schwab Impact Conference. Look forward to that. Hope you all will join me. Plenty to talk about, obviously. Josh Brown, final trade.
IEF, if you think bonds are bottoming by the end of the year, which I do.
Okay. Farmer Jim.
Wynn Resorts. You got a very good report from Las Vegas Sands, its competitor in Macau, last week. And on top of that, Las Vegas operations itself has been going gangbusters. So I think you've got a good report coming up in a couple of weeks.
All righty. Stephanie Lane.
I like McDonald's down 14% from its highs. Digital drive-through deliveries increasing their market share. Lower freight costs will help. So I like the stock into the quarter.
Hey, did you see Nike, by the way?
I did.
You Nike today?
That's a nice bounce.
Yeah. It was
So
like
it's
2.5%.
So is Las Vegas Sands.
All right.
I need China. A little bit of China.
All right, good stuff. All right, we'll see you from Impact. The exchanges now.
Thank you, Scott, and welcome to the exchange. I'm Kelly Evans. Here's what's ahead this hour. Bill Ackman has covered that bet against bonds, but our market guest is not buying into that move. He tells us why and what he is buying right now. And Jamie Dimon says central banks have been 100% dead wrong on forecasts. And it doesn't matter if the Fed hikes again. Is he right? We'll ask former Fed Vice Chair Randy Quarles. And a big payment player and two big tech names on deck with earnings. And our guest says one of them has a lot of problems, but they're good ones. He'll explain coming up in earnings exchange. Let's start with today's markets, fellas. You heard Scott say we're kind of heading towards session lows here. Dom Chu has the numbers, Dom.
Just about session lows. And what we mean by this is it's been a generally positive day, Kelly, to your point.
But at the highs of the session, just to give you an idea of the context today, the S&P 500, which is currently up 7 points right now, was up roughly 42 points at the high and up roughly 2 points at the lows of the session. So again, tilting towards that lower side of things. 42.24 is the last trade there. Keep an eye on 42.36. We've mentioned this so-called 200-day moving average or longer-term trend line for the markets on a rolling basis. We're sitting slightly below there right now. That's something traders are watching. The Dow Industrial is up about 1/4%, 92 points, 33,029. The NASDAQ Composite up 21 points, roughly 0.2%, 13,040 the last trade there. So again, losing some steam in this midday part of the session. Now, one part that's been gaining steam throughout the course of the last few weeks has been Bitcoin. Now, if you take a look at this chart,
Or a little bounce.
year or so, we have now topped 33,000. At one point today, depending on which metric or which exchange you look at on Bitcoin, we were north of 35,000 for each Bitcoin. That's up about 8.5%. This is the highest level in quite some time, going back to better parts of the earlier part of this year. So Bitcoin, keep an eye on those. It's been a breakout. Remember, we had some trading ranges that were slightly below there for the better part of the last 6 months, and now we've kind of broken them up to that level here. So we'll watch Bitcoin prices. And then on the earnings side of things, generally speaking, most of the companies that have reported so far today, and there have been a lot of them, have been positive on both the top and the bottom lines. Companies like 3M, though, up 5.5%, General Electric up 6%, Sherwin-Williams, which is now down on the day, and Logitech, all not only beat, but then raised their forecast as well. And then RTX, the company formerly known as Raytheon United Technologies, they merged, big defense aerospace contractor, up 7%. They beat on results and then added $10 billion to their stock buyback. So a lot of earnings headlines, and believe it or not, this is tame, Kelly, because we got a lot more results coming out later on this week. I'll send things back to you.
Yeah, look at Logitech up 12%, RTX down banks 5%.
All right, we got a nice bounce underway. Check your favorite stocks. They may be seeing some short covering and new buyers coming in. VIX is rolling over.
Joining me now is Jason Trender, Chairman and CEO of Strategic Research Partners, a Baird company. Also with us is Brian Weinstein, Head of Global Markets at Morgan Stanley Investment Management. It's great to have you both here this afternoon. Jason, I'll start with you. You think this is normal. This is normal. Everything's fine. Stop panicking, everybody.
Yeah, I think that's my view. I think what was not normal was fixing interest rates, the most important price in the world, for 12 years. And I think the problem now, I think generationally, and maybe I can say this because I'm maybe a bit older, but I think people have forgotten that there's, normally people who lend other people money require some premium over the rate of inflation to do so. And we all got very accustomed to the fact that real rates were zero or negative in some cases. And so I think to the extent to which the Fed is unlikely to use quantitative easing again soon, I hope that would mean that there'll be a typical spread of about 200 basis points between the rate of inflation and the 10-year Treasury. I also think that inflation will stay higher than the 0 to 2%. Well,
Let me ask both of you just to be clear. So do you think that 5% yields, you can pick the 10, the 30, whatever. But I mean, on the long end, Jason, is that basically the top, or do you think they could head higher from here?
what worries me, Kelly, is that there is just a certain amount of fiscal incontinence in Washington, D.C. We're running deficits that are 5% of GDP at full employment. So the amount of issuance that we're going to see just on interest expense alone is going to explode. So normally this would be enough. I would say this would be in the range of kind of the upper end of the range. The issue is that there's absolutely no discipline on spending or deficits, which means that the supply of treasuries could explode.
So all that said, Brian, let me ask you kind of the simple question first. If you think 5% is the top of the range.
Kelly, I agree with a lot of what Jason said. There's no reason to believe that 5% is magical. And to add to what he said, in the long end, when I started it for telling war stories, there was a balanced budget, right? There were going to be no more treasuries. There were going to be no more treasuries. Right. 10's bonds curve was inverted. Now we have infinite deficits, and 10's bonds curves is almost flat. The long end of the yield curve is not cheap. The rest of it is cheaper. It may not be the top, but the long bond has some work to do, I think, still to find the top of a range.
Okay, so maybe you both kind of think things could even go a little bit higher from here. So good. I want to play devil's advocate because I'm in that kind of mood. I'm in a bearish mood. So let me ask you both about this. And Jason, I'll start with you. Let's say the economy is in recession next year. Are we so sure? I'm a little more, as much as everything that happened the past decade is coming home to roost, I'm sympathetic with the Fed doing what it did because growth and inflation were so weak. Why wouldn't we end up back in that situation again? If we have a nasty recession and because of what you're talking about, the government can't come to the rescue, then how bad could it get? Could we be back in a deflationary trap all over again?
I think it's doubtful you'd be back in a deflationary trap all over again. And again, a lot of it has to do with government spending. It also has to do with the fact that I think one of the major tailwinds for lower inflation or disinflation was globalization. I think that's over, sadly.
Yeah.
Exactly.
Snap is falling. The 200 DMA barely makes it into the 1-year chart.
That's why I don't want to get too excited about these kind of maybe green shoots that we're seeing here, because the long-term picture for this game is still not very good. You guys had quite a bit to say about the outlook for earnings as well here. So some points of support and resistance, I would say probably around here between our volume profile point of control and our old highs, between about 1025 to 1046 would be a potential resistance area. That seems like a notable spot. And then we've got these highs as well. That was our high point after we had our last earnings gap near 1136 or so. To the downside, we've got our moving averages, and then we've got this white uptrend line here. You can see that would be the point to be looking for some further losses here. Then we've got our old lows near 834. So really, earnings could really change things in this game, but for the short term at least, things are looking a little more positive.
All right, so decent little short-term momentum here. Snap needs to see some follow through, and then he breached that heavy trading area around $10 to feel real comfortable with it. Nice, like the chart. Okay, last one, Texas Instruments. Let's talk some chips, and then of course the chart. How about the data here, Renita? What are they expecting?
One of the worst among the chips. I mean, this is underperforming the market by a huge measure, down more than 10% year to date. Also trading at its lows, and analysts, they expect this stock to do a $1.75 earnings per share. That would be down sequentially. Pardon me, that number is actually $1.81 adjusted earnings.
Okay.
We're looking at revenue at $4.57 billion. That's down year over year. But on the upside, analysts expect Texas Instruments' third quarter performance to have benefited from its broad product portfolio. They're also expecting companies' efforts to expand its manufacturing capabilities to benefit the company. But in real life, this company is still competing with a weakening demand environment, and it's also dealing with the imposition of new export regulations to chips. That's expected to be another headwind for the company.
All right, we continue to bounce back above 42.25.
I will say, Oliver keeps talking about the Ozempic effect. Ever since that Walmart CEO did mention they were seeing actually an adverse effects from people changing their snacking habits, changing the way they grocery shop. This was having an impact on so many of these snack companies. But Coca-Cola, the upside is they are a pure beverage play, not like PepsiCo where they have that Frito-Lay segment. This is purely beverages, and also so many of their business and their overall growth is tied to some of these major vendors, things like sporting revenues, concerts. They are a huge provider of beverages to large venues. So as the return to venues has persisted, that's been a huge benefit to a name like Coca-Cola.
And this is about as good as you could ask if you're a Coca-Cola investor. Stock didn't go down. It's up small. These names still pop around as much on earnings. We talked about this yesterday. Compressed price levels with lower volatility, lower beta names, of which Coca-Cola falls into. But they're also, with that, it becomes easier for analysts to kind of project how their revenues and their EPS will kind of turn out. Usually doesn't venture too far from the estimate. Again, slightly above, and it gets seen as clearly a win today. It has lost some of its steam to the upside intraday, so we'll monitor that. But I'm with you with this Ozempic thing. I've kind of raised my eyebrows at this in the beginning, but the reason I'm doing it is not because it won't have an impact. It's like $1,000 or something pretty absurd if you don't have it for its primary use case. At least that's what I've heard. So I don't know how many people just have that kind of spare change for
some sort of appetite restricting drug or whatever it does. Gym membership, a little bit of extra effort, I think goes a long ways relative to that. But hey, maybe I'm wrong, and if it becomes commoditized, this could be a bigger problem for these companies.
That was exactly my point. There's such a niche amount of people that could afford $900 to $1,000 a month is how much it costs. You're correct. And we were talking about McDonald's, and I just feel like they're not the same target demographic because, again, who is just affording an extra $12,000 a year on this weight loss drug? At least I am not. Wish I could, but
Low tickler -800.
Now, this name is the parent company to so many consumer brands, things like Huggies, as well as Kleenex and Scott tissues. Kleenex is almost one of those words where you use it synonymously with every type of tissue. It's amazing that brand power that it has. But they, again, raised their prices, helping to restore now their gross margins to pre-pandemic levels. Overall, though, the cost environment, their CFO said, remains mixed, with favorability in raw materials offset by these higher energy prices, currency headwinds, and higher labor costs. Adjusted per share earnings did come in around $1.74 versus the $1.60 expected. Sales rose to 2%, and they did raise their full year guidance and now expect earnings growth, well above what they had previously disclosed, between 15 and 17%, up from 10 to 14%. You'd think this would be enough to lift shares, but again, the consumer staples space remains right now. There are the clear winners and the clear losers. The same down 12.5% here on the year, and Street did not like what they saw from this report. Although I would say raising prices typically a good thing for the company, less good news for us as consumers.
And in consumer staple fashion, not really moving all that much, down 2.5%. Now, granted, for a consumer staple, that could be perceived as a decent sized move, but comparing it to the other two that we talked about today, we got RTX, formerly Raytheon, up almost 7%. You got Spotify up, just over 9%. So both the Coca-Cola as well as Kimberly-Clark really just not moving the needle either way.
Yeah, I completely agree. We'll look at some of those big moves and big moves to the upside that seem to be holding on this session despite some of the overall market weakening. So we'll be diving into those up votes, like Alex said, RTX, as well as Spotify. Looking at some example trades as well as some key technical levels. Stick around, Next Gen Investing. We'll be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
There's no place like the New York Stock Exchange. We got you covered. The biggest stocks, the biggest trends, all the market moves. The Watch List with me, Nicole Petalidi, 2 p.m. Eastern on Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
pretty good performance here. We hit some yearly highs near 106 or so, 105. Big gap downward, 10% drop on earnings. Another big gap down right here. We had a huge problem there with a 7.8% gap down after disclosing a manufacturing flaw in some of their jet engine components. Then we were really in the depths here of despair, all the way down here near 68.56. Then, right at that moment, we had the Israel-Hamas conflict came that it's a defense stock, so it gapped upward. Then another gap up on earnings. So really a kind of an interesting study in how important these gaps are, how they can impact anyone trading a name like this. We've got all kinds of event risk stuff here happening. But nonetheless, now to look at the more current situation here, we can see that we gapped up. We crossed above our yellow 21-day exponential moving average. We crossed above these old highs right here. Our 21-day EMA is starting to trend upward a little bit, so we've got some signs of improvement here. We did not cross above our 63-day EMA there in orange yet, though, so that's the obvious point to be watching to the upside. And we can see as well that our two longer-term moving averages, orange 63-day, purple 252-day, still trending down here. So the longer-term trend is still down. And it's kind of hard to get too excited about this after the absolute beating the stock has taken during the past few months here. So, the trend is down, but we are starting to improve a little bit. Today's gap up did help. It'll be interesting to see where things go in the coming months as, perhaps who knows how long this situation with Israel and Hamas will go on. It could be a catalyst for a lot of these defense names.
Yeah, and Rick, I will say this is an ugly chart because the gaps, like you pointed out, the move up today, but still being in a downtrend. I mean, we are all over the place. So what are you seeing as far as RSI goes?
Not a ton to report on RSI here. Mainly, the big thing is that you can see kind of the extent of how difficult the move was for the bulls here with these repeated and somewhat lengthy crossovers into the oversold area, typically regarded as a sign of weakness when you cross below that 30 threshold on the RSI. Today, though, things are much more
Verizon still
crossed above that 50 midline.
doing fairly well today, up 9%, right near that high back in late August, early September. So if we see a move above that level, looks like a trend break, this downtrend. Trying to move back up in the range. Looks like a downtrend, the 200-day and the 100-day straight down. Volume above average. Netflix, I keep looking at Netflix because this is holding up very well. It looks like it's going to base in this area a little bit longer, between 400 and 418 or so. Need to see that break higher. The aerospace and defense names, Lockheed Martin pulled back. Northrop Grumman pulled back. General Dynamics pulled back. Raytheon was higher earlier and dipped in the morning and moving right back up to the highs. CEO was on CNBC this morning. All right, looks like it's going to continue higher, Raytheon. All right, Nike trying to get back above VWAP. You can see A, B, looks like C and D. Nike, B, and C so far.
The downside once we get below that 21-day exponential moving average. So that's the first point to look for support, that 21-day EMA, and then see if this trend line holds true. Beyond that, we've got our yearly
nice work, Timmy.
Near 68.56.
TLT. TLT having some fun here. High of the day. Banging against this 84.50, 85 level. 84.80, sorry, 84.80, 85 level. Looking for TLT to continue. Day two, yesterday I took a long at 83. Nice volume on that Ackman short, closing that short. Follow through. The idea is that we need to get above the 9 EMA. Once we get above the 9 EMA, then the next level will be 21. So Now I have shares and the 83 at the money covered calls I sold for 400. Those are going for what right now? I plan on rolling up to at least 85. Going to have to go out a month or two to capture a credit. TLT looks good.
Looking at that 83 level. Now, if you went to the December monthlies, there was $5 wide strike availability. So I did adjust this to include a weekly option cycle on December 1st, allowing us to do $6 wide strikes and really target that 83 level. So
all right, we're starting to move back up into today's range.
83 call to create a call counter spread, a time spread, horizontal spread, whatever you want to call it. And looking at it here, 25-cent debit. So this is a quite small trade when it comes to the actual risk associated with it, Jenny. $25, 25-cent debit. We know the drill. We want to move towards our strike. So customizable. This one, though, the logic pretty straightforward. Looking for that gap to be filled around 83.
Right, and I mean, obviously, this also gives us some duration here. I can't believe we're even looking at December. I cannot speak on that. But now our next name today is Spotify, also making a sizable move to the upside on the session in reaction to some strong third quarter numbers. But the story is very different here, Rick, because this name has been a winner all year long. It hasn't necessarily been a straight shot up, as of course, it is anything really a straight shot up, but it has been consistently moving to the upside.
Very strong performance since the start of 2023. We're up 115% from that point. And you're right. There's been some fluctuations up and down here, but for a while it was a nice consistent rise upward here, kind of culminating with this big spike up into the yearly highs near 182. Since then, things did kind of fall apart a little bit. We formed this kind of more triangular shape here where we had an uptrend going across the lows and really this more modest the blue line is what I'm more interested right now. And we have this competing downward trend line.
Okay, we got some stocks seeing some short covering and a rise back towards VWAP. Tesla moving back towards VWAP. A lot of the Chinese stocks, XPEV is at the high of the day. XPEV. Let's take a look at that. XPEV. That one had dipped recently, right? XPEV? I believe it did. XPEV. Yeah, okay. It had dipped. It's right above the 200-day, looking for a bounce.
So our moving averages are all trending up. Prices above all of them. We're having a strong move upward here. We broke through this downward trend line, but we are stalling out at a resistance point here. So it'll be interesting.
Pinduo Duo.
If we can kind of muscle our way back above that 171 level and
Pinduo Duo.
keep moving on to the upside.
That continues to make higher highs and higher lows.
Now, as far as RSI goes, what are you watching here? Because again, I'm not going to call this an ugly chart because at least we've moved to the upside, but all over the place again.
Well, RSI is kind of a dud on both our charts today, not really giving us any clues, not really seeing a lot of notable divergence or anything like that. So I thought this would be a good example to illustrate how you can use trend lines on the RSI to help confirm what you're seeing in the price action. We had a pretty obvious trend line going
ARM Holdings. I'd like to see that moving higher too. ARM. Still flat. Looking for a break higher. ARM Holdings. Over the last 3 days has bounced. We had buyers stepping up at that dip on 46.50. We got a couple of upgrades a couple of weeks ago, and then we get this dip. Opportunity? Probably. ARM and NVIDIA. NVIDIA getting together to produce some ARM-based PC chips, computer chips. That was the news yesterday. Sent NVIDIA to highs. NVIDIA's hanging on to the highs for the most part. It's a couple of points below the high, but looking pretty strong. Bitcoin holding up after a breakout. Oh boy. All right, so S&P, we need to continue rallying back towards VWAP.
Solid line trend comes in right around 148 or so. So we're moving from the heavy trading area to a light trading area. Beware of fast moving prices when this happens. There's not a lot of clear, well-defined areas based on volume profile to look for support or resistance here. So now that we filled this gap, I mean, the 170, 118 level, that would be one area that I would really have my eye on heading into the close. But I mean, the obvious next point is just 182, the old highs, the yearly highs. That's the real point that we need to recapture and move beyond to continue this uptrend here. Otherwise, it's just going to, falter again and fizzle out if we don't make some strong closes above that level here. To the downside, we've got our old trend line coming in right around 160. Old resistance becomes new support and vice versa. So in this case,
All right, we'll continue to rally up a bit.
For some solidification around that area, then our moving averages would be places to watch near about 153 to 156 or so.
And we did touch as high as 173 at the peak today, so only about $9 away from the high we've seen. So really nice chart of Spotify shares and almost a 10% move here on the session, but we will leave it there. Really great breakdown on the technicals, 50-hour chart master. So now trading this name here, Alex, again, leaning into some bullish price activity because obviously the shares were up almost 10% on the session.
Yeah, and if you're looking for a retest at that 180 or so level where this stock failed last time, this is a trade that would seek to benefit from.
Okay, one more time. Let's go check out the heat map board today.
Doesn't go much or at all beyond it. And so looking at a skewed call butterfly.
Okay, so it looks a little better than you would think. We're still trading 2.7 to 1 up volume on the NASDAQ. Tick cumulative is trying to turn. It's still oscillating between red and green. Red being more institutional selling than buying, and green being more institutional buying than selling. We're trying to make a higher low and a higher high. That could come tomorrow. All right, this looks a little better than what you would anticipate with the markets dipping. Note the utilities over here, the bottom left, bottom right quadrant. Utilities, materials, real estate. Pretty much everything is green there. All right, let's take a look at some of these real estate names like Boston Properties. Boston Properties. A little bounce, nothing to jump up and down about. Avalon Bay. Oh, what's Avalon? Avalon Bay. Shoot. Avalon Bay.
Because of how this is structured and priced, it would just level off at a theoretical max profit of 200 in that case. So no upside risk, a bullish strategy, and one that seeks to benefit from a move right to 180.
And of course, the nice thing is no major catalyst ahead for either of these names. We have that earnings event behind us.
Avalon Bay Communities. Not so good. Vornado. Tanger Outlets was the best real estate chart for now. It's above the moving averages, but not breaking out. So we'll come back to that.
My dad was a hard worker. He used to do side jobs installing windows.
Okay, so cyclicals, Amazon, Tesla is up 258, 2.5%, starting to rally back up.
My dad instilled in me always put people before. Be proud of offering a good product at a fair price. I think he'd be extremely proud of it.
Binge watch the market with Schwab. Tune in 24 hours a day, 7 days a week at SchwabNetwork.com for the longest favorite streaming service. Schwab Network.
All right, rallying up. VIX is dropping off. VIX dropping pretty fast. The 10-year has been a thorn in the bulls camp. We got a 4.83 still hanging in there. The dollar still at 106.26. Let's go take a look at the US 10-year. Okay, so we know what the okay, we're rallying back. We know what the yields are doing. Backing off US 20-year. Okay, so the opposite of US 20-year is TLT. Okay, so bonds moving higher, yields moving lower. So that trade's working out. So you know what the deal is. I want to see price action on the TLT above the 21 days. So if you're listening, TLT, the TLT trade I'm putting on, I plan on buying more. I'd like to get up to about 500 shares. I like to have my kids have about 1 or 200 shares as well. But I won't add shares. I have 200 now. I won't add shares until we get above that 21 day. If we do, that'll push the 90 MA. 90 MA will start to turn up like it did over here. You can see the last time we moved higher in August, we got rejected at a descending 50-day zone overhead. So there's still a lot of work to do with Ackman covering his short. That is telling me that maybe there's more people interested in buying. That's showing up in volume, so that looks really good. RSI is rising, and we'll continue to update you a couple of times a day on this one. TLT sold to cover calls for $4, $3.95, and that brought my cost basis down to 79. So even if we started to, oscillate in this area around 85, 86, I still have a very good entry based on the options that I've sold so far. All right, so we'll look for that to follow through. All right. S&P. So TLT continues higher. I'd like to see us move back towards VWAP.
Manufacturers that you're working with here. So overall, a really good report. Continuing to see strength to the upside, and once again, kind of going back to the fact that this stock was supposed to have a very lower beta to the market as a whole. So when you see this outsized move to the upside, along with the fact that their risk-reward ratio, if you will, if you compare their business to maybe tech, is very low. So this is actually a really good report. Hopefully, this continues for the future without any hiccups.
Yeah, and that raised guidance, I think, just shows their conviction not only in the current market environment, but then in the rest of the year, which, of course, is seen as a pretty major positive. I just couldn't believe this chart that it's been such a consistent uptrend all year long. And I'd love to see GE, a name that, is sort of, I would say, associated maybe not with the most trendy of names, but making such a nice move to the upside.
All right, so
Really great breakdown. Kevin Green, senior markets correspondent here for the network.
VWAP just overhead.
FOMO. So we are talking Microsoft, which does have earnings today after the closing bell, alongside Alphabet. Now, what was interesting is last quarter, I believe it was Alphabet that was the big winner. Microsoft wasn't necessarily a loser, but didn't see the same favorable price activity. So now I have to see if they can have the comeback, as I do tend to compare the two, just given their race in terms of the AI.
All right, Tesla just tagged. Tesla just tagged VWAP. All right, so Tesla's just in this sideways pattern. VWAP is flat, so it's very possible that we could get back to the top of the range, that standard deviation number 2, standard deviation 2 VWAP band. We hit the standard deviation 2 minus 2 on this downside move, so back to VWAP. All right, what is Bitcoin doing? Flat. Flat VWAP above and below VWAP, back and forth. Anticipate that's going to stay like that for now. 30-minute. Okay, so we move higher. Bitcoin had a nice run up and then chopping around. S&P. Flat VWAP. We've had multi-days down. Looking for a little relief rally. We're trying to stay above the 200-day.
And that actually undid to even move some of those stocks higher after having some pretty poor performance. So that would be sort of my note. Would just be wait till maybe the morning of course, to really know what's going, because this has been a stock that first reaction has not been the case.
That's a really good point. We've said before, it's almost like there's two catalysts. There's the earnings themselves, the report itself, and then there's the earnings call, which, as we know from Tesla, actually was it to the downside when we heard that pessimistic tone from Elon Musk. But Microsoft does a really good job framing their earnings. Now, one thing that is highly in focus is their Azure segment, that is their cloud. We've seen growth moderating in that segment, which has been a pain point for some investors, although it's not necessarily Microsoft specific. AWS is also seeing
Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday the 24th. Tuesday the 24th. 1:37, about to go into the 2 o'clock hour. Markets hit the lows and are starting to see more short covering, some buyers off the low. Flat VWAP, so generally we look for a range to contain prices when we have a flat VWAP. We are rising off the low, so the volume's not really that profound, so it's not like something that's going to send us higher. As we push higher, those puts will monetize that have traded today.
My sister was using this and saying it's like a game changer as far as like presentations goes, but that's my only real experience with it. But other analysts are saying that with there's so many things in their pipeline, that could be enough to make the street enthusiastic. So two different ways of thinking: the here and now versus what's ahead for AI. We do know that right now, street is expecting about 25 to 26% growth for Azure in this December quarter, with around 300 basis points of that coming from AI. So that's coming. Right now for this quarter, though, all they need to do is post larger growth than what we saw on a year-over-year basis, and that would be breaking the trend because their cloud has been shrinking as far as growth. But again, still seeing healthy levels of growth. I think that that's being a little bit picky to say, it's not a 40% anymore. Well, of course, it's more established at this point. Like you said, though, there's other things going on. They just announced the final hurdle as the for their acquisition of also, they have Xbox. I mean, they have so many things going on. It's like this is a company outside of just AI.
Yeah, and it's also, I think, important to note too that. So if you
All right, regaining some of the lost ground here. We're up $1.81 on the SPY and 17 handles on the futures. We're maintaining about 3-to-1 up volume on the NASDAQ. So that's good. Tick cumulative, the fast signals turn back up, so no longer giving us a bearish signal. Tick cumulative. That's trending higher off of the low. The 105. We're back above the 105. That's good. That's bullish. Going into the 2 o'clock hour. All right, VIX continues to drop off.
So I looked at an iron condor neutral strategy, premium selling strategy around this event, looking for kind of a boring reaction. Doesn't mean it has to be unchanged. It just needs to be less than expected for this potential to be profitable. What we're looking at is just going out to Friday, selling the 307.5, 347.5 strangle, and then buying $5 wide wings. Those two levels would be basically encompassing the entire last quarter of trading. So it's going to need this name to break out of its most recent range, kind of retest some levels that we haven't seen since basically the last earnings a quarter ago. So with this, if we're able to collect $1 on this, it'd be $400 in risk for $100 in profit. Straightforward risk profile, looks kind of like a plateau. It's between our short strikes, we can make max profit. Outside our long strikes, it's likely that max loss will be at play. You can only lose in one way or the other because the stock can only be in one place at a time. Break even, simply subtract the dollar from the short put.
All right, we're starting to slow down on this ascent back towards the VWAP for the day. VIX still dropping. All right, I just want to point something out. This should be obvious, but I just want to point it out because I'm thinking about it. And when I think about things, I need to verbalize it just so everybody understands what I'm thinking. Okay. So it goes without question that we're in a descending channel. So it's the bulls. It's the bulls parade that they have to prove that we're going to get a move on. So I can't take too much risk on if we continue to stay in this descending pattern. Now, a couple of weeks ago, it looked like we were going to break back above the 50-day. We didn't think we would because 4,400 is a major gamma level. RSI is still below 50. So my thinking is here is going to take a couple of weeks of upside price action to make me feel more open to taking risk. So this is all around risk. The only reason I'm bringing this up is because of risk. The risk is there's more downside. There is not too much saying that the markets are just going to rip higher. Now, maybe Microsoft, Google, Meta, and Amazon can beat really big, and maybe you see the NASDAQ turn back up. Another chart to look at is the NASDAQ 100. So this will make sense in 1 minute. So, we got the NASDAQ trading 3-to-1 up volume. 3-to-1. Okay. NYSE is 2-to-1. We're trying to produce a higher high on tick cumulative. That'll tell us and confirm that institutions are buying. We also want to see where were we? Right here. Okay. We also want to see this condition continue. All right. So we want to see breadth thrusts, advanced decline percent. We want to see this hook continue to move higher. Okay. But that's going to take a couple of weeks. So in the meantime, I've been taking some conservative trades. You know about TLT. So TLT is basically insurance at this point. I don't feel like taking like SPXS. Although if we start to rip higher, if we start to move lower, this will go higher. So will SPXU. I'm just much more conservative right now until we see a pivot and things in the markets move higher. So I like the fact that this is building more volume. We're in the early innings. This could turn out to be a pretty decent area for a base. In which case, if we continue to base here, those covered calls are going to start losing money to the call buyer. I'm going to start making money because theta will kick in a little bit more and volatility may contract a bit. So, I think we're in a pretty good place with TLT right now. And the reason why I presented the S&P and the previous 3 charts is because I'm more conservative. I think that should be pretty obvious by now. I'm also paying attention to Bitcoin, which could follow through. Tesla trying to get back above VWAP. And S&P trying to get back above VWAP. Tesla. The good thing about Tesla is that we're at the 200 day. Tesla's at the 200 day. Okay, so I'd like to see more of a full body on this candle instead of this doji, which is showing the bulls and the bears aren't really dominating. The FANG stocks look a lot better over the last 45 minutes. Let's take a look at some of those. All right, so coming off the lows is Tesla. Also Microsoft with earnings tonight. Just below VWAP, but moving higher. We've got NVIDIA, which are going to make that new ARM-based PC chip. Chips, plural. I'll imagine there'll be several processors, which is another reason why I'm watching ARM. I'd like to see ARM continue to find a bid and more volume come in. Meta, there was some negative news on Meta. 133 attorneys general, I think they said, something like that. Filing a suit against Meta for using children's information or whatever without their approval or whatever the hell it was. Something along those lines. Let's see. It's probably in the news here. Let me look at Meta. Meta. Dozens. Okay, dozens of U.S. states sue Meta platforms for harming mental health of young people. Really? Harming their mental health? That's an interesting way to word it. That's just a headline. So whoever decided to write that particular headline, Meta platforms is harming the mental health of young people? Well, depends on who do you talk to, because, well, I'm not going to get into that subject, but I have a few people close to me that are not happy about electronics, computers, etc., with kids instead of playing more outside. All right, watching Meta for a bounce. Looks like a higher low printing on Meta. Higher low, looking for a higher high. Okay, Amazon trying to break out here. Amazon trying to break out above these pivots right along this area of VWAP, trying to get above VWAP. Most of these FANGs are starting to see a bid now. All right, that's looking good. What's Google look like? Google, similar look below VWAP. Now it's moving back up. Can you see how contained price is around VWAP? Standard deviation 2 minus standard deviation 2 up to plus standard deviation 2. That's containing price around VWAP, or choppy. You might call it choppy. You could also call it a doji. Let's look at Google on the daily. You'd expect to see a doji or a spinning top. That's exactly what you're seeing. All right, so whenever you get a flat VWAP and price above and below, okay, you're expecting a VWAP, a spinning top or a doji. Flat VWAP. The volume's starting to come in here. You see the volume coming in on Google? Okay, volume starting to come in. Thank you, money. Okay, so good mix of puts and calls, right around 138, 139, 140.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond.
Our VIX is trying to turn. All right, a lot of the FANG stocks are back to VWAP now.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com.
All right, Tesla trying to go. Tesla.
On any device for free.
Tesla.
Time for under 30 as we discuss General Motors now post earnings in the midst of the UAW.
All right, Tesla also. If you look at Tesla, flat VWAP, price above, price below, right back to VWAP. What does that look like? It looks like a doji on the daily. So here's Tesla, price above, price below, right back to VWAP. Volume looked pretty good today. I was thinking that Tesla was going to continue, and then everything started to fade when yields start to move higher this morning. VIX dropping off now. Watching Tesla. I'll be right back.
Of sort of the outside elements to their business, including the strike, which has really weighed on effectively the estimates for how their earnings are going to look going forward. But if you look at the report, just from a top line standpoint, it was actually pretty good. They came in at $2.28 a share in terms of earnings, and that beat the estimate of $1.84 by quite a bit. So that was a slight increase compared to the $2.25 they earned last year. It was about a 1.3% increase. Now, sales also came in slightly ahead of expectations, around $44.13 billion, and that was higher by 5.3%. But I think we have to consider GM. What's going on? One, obviously, prices of vehicles are quite high. Financing costs are quite high as well. I think that's from a macro-centric standpoint weighing on the stock or the company as a whole. Then you've got endogenous factors that are impacting primarily U.S. based companies from the UAW strikes. That's GM, Ford, and Stellantis. And then at the same time, even if you look at some of their technology units, like their Cruise division, which is essentially their autonomous driving division, they continue to lose money, but they lost more money this quarter than last, at around $732 million of a loss year over year. Now, stocks can get cheaper. We talk about this all the time, and we talked about GM in a trading range, and the lower boundary of that trading range was around $30 or $31. It's below that. And if you look at where we talked about it last time, it was trading around 5.5 times forward earnings, and that was cheap compared to its historical averages, cheap on a relative basis, an absolute basis, but it's getting cheaper. And the reason being is, if you look at 2023's earnings estimates, $7.49, that's higher, of course, sequentially year over year. But if you look at 2024, they actually are estimating around $6.85. That's lower next year than last year. And so therefore, the forward multiple is getting cheaper alongside the price. And the forward multiple now is below 4 times, which is really cheap. But here's the thing. If you have negative earnings growth, in this case, negative 4.5% earnings growth, that low multiples don't mean anything. They're value traps.
George, real quick here, just kind of final thoughts. Is this kind of a situation where all of these big three automakers here in the U.S. are sort of almost like, I don't want to oversimplify it, but kind of like decaying assets, if you will, until these strikes are resolved? There's just almost like there's a ceiling, a cap being held on it, all else equal, absent any positive updates.
Well, I think if the strikes, there's some resolution to the strike, you're obviously going to see a relief rally. I think that's going to be a positive catalyst for all these three, because there's going to be visibility on the earnings estimates going forward. So it'll be a relief rally. It's cheap. It's cheap right now as a stock, but like I said, it can get cheaper. And just use the price action too. Just use weekly charts. If you look at that $30 to $31 level, if it closes above that on a consecutive weekly basis, that might demonstrate a major trend reversal. So it's not a decaying asset, a terminal decaying asset. I think it's just structurally challenged right now because of the macro headwinds, interest rates, vehicle prices, and then of course the idiosyncratic issues associated with high cost and labor strikes.
Yeah, right. As far as like employment goes, I mean, this is a huge portion of these companies' workforces that just hasn't been employed for over a month at this point. So they need to reach a resolution. That would, I think, be a huge benefit. Obviously, not just GM, but also Ford, Stellantis, and really the overall auto space. We will leave it there. Really great breakdown. George Tillis, Senior Markets Correspondent here for the network. That also does it for Alex and myself for Next Gen Investing. Coming up next, we have the watch list.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window, and other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me.
I'm Nicole Petalini, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Then watch the market with the Schwab Network.
Low tick alert minus 800.
24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Binge watch the market with the Schwab Network. It's time to move forward.
Find the next trend.
From every click to every tick.
With no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device, for free. Empower your portfolio with the Schwab Network. He's Alex Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern. Only the Schwab Network.
All right, so we're just kind of grinding back up. Vantair was looking for a choppy session earlier this morning. Into noon, it looks like.
Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network. Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Good afternoon and welcome to the Watch List. I'm Caroline Woods in for Nicole Petalides. It's 2 p.m. here in New York. I'm live from the floor of the New York Stock Exchange, and here's what we have coming up on today's show. It's Technical Tuesday. Kevin Horner is here, and he will break down charts for CRISPR Therapeutics and Synopsys. We'll also be talking about the S&P 500. We'll have more on NVIDIA taking aim at Intel and the PC chip market. And General Motors gave us the first real look at the financial impact of the UAW strike. Our panel will break down the quarterly earnings figures. Before we get to all of that, let's take a quick look at the market with only 2 hours left in the day. We are seeing on the screen.
Excuse me.
Gains nonetheless. The Russell leading the way higher, up about 0.6%. The S&P 500 up about 0.4%. Energy the only losing sector there. Meanwhile, the Dow Jones Industrial Average up about 127 points. That's also about 0.4%. Nasdaq up a little bit more than that, up 0.5%. Especially big tech. Let's take a look at some of the futures products now. We are looking at a higher dollar, lower gold, basically flat gold. Crude oil also lower, down about 2%, trading around.
Okay, continue to rally.
And take a look at Bitcoin, well off 35,000 level, but still trading with pretty impressive gains, up 7.5%, 33,850. For some of the biggest stories in the markets, let's welcome in Kevin Hayes, senior equities contributor here at Schwab Network. So Kevin, I know you're taking a look at a few of the movers after earnings today, Verizon being first. Seeing a huge pop for Verizon shares, which otherwise were pretty beaten down. What has investors so upbeat?
Yeah, this is one of those names. Caroline having a really nice day. I've got it up about 8.5% as we get to the 1 o'clock Chicago time hour, 2 o'clock Eastern. And it's on pretty strong third quarter performance and an improved free cash outlook, Caroline. Here's some of the numbers. I made $1.22 a share. That easily beat the 118 estimate. Sales, actually $33.34 billion. That's a beat on expectations of 33.25, even though it was down 2.6% year over year. But some of the additions, Caroline, at the quarter mark, 434,000 total broadband net additions. That's a really good number for Verizon. And all this led to $1 billion, $18 billion they're projecting in free cash flow. That's $1 billion more than they were expecting in earlier guidance. So real good numbers out of Verizon. Other numbers, strong demand for fixed wireless and Fios products. The end of the quarter had 10.3 million broadband users. That's up 21%.
All right, looking for a close a bit higher. We continue to grind back up towards VWAP.
Yeah, investors clearly cheering that better than expected report. We're also seeing a big pop in General Electric. We talked on Fast Market how this is a much different company than you remember back in the day. But what stood out in that report to you, Kevin?
Yes, I have a long relationship with GE, trading in pits in Chicago for many years. And their earnings, this smaller, new company that GE is focusing on the key parts of their business, and it's GE jet engines, it's aerospace that really drove GE's earnings here. Now, they're spinning off GE Verona at the beginning of 2024, but the numbers, 82 cents a share versus 56 estimated. The revenue, the sales of 16.5 billion versus 15.7 expected. Revenue 17.3 billion. That's up 20%, easily beating a number about 15.5 billion. So really good, solid numbers. And like I said, it is the jet engines, it's GE Aerospace, and jet engines and jet and services on jet engines that really drove that earnings.
All right, S&P watching.
That continues to recover from the restructuring that it did under the new CEO. So a nice bounce here. Obviously, if you're a long-term GE shareholder, not anywhere near the all-time highs, but still a solid day for GE, up about 6.4%.
And we got some timeline or some clarity on the timeline for when it's going to actually split into the two companies, second quarter of 2024. So some clarity around that as well. Kevin Hanks, thanks so much for breaking down those top stories for us.
ARM starting to move a bit higher. ARM moving higher.
James, thanks so much for joining the show.
Hey, Caroline, good to be here.
major indices higher, although lower on the month. It's been kind of a continuation of the September rockiness, but I think today it certainly helps that 10-year yield is off the highs of the 5% level. Just curious, when you think about bond yields, do you think that we've seen the top end of the range, and what are the implications if we haven't?
Yeah, so let's put it this way: we're certainly closer to the top than we are to the bottom, right? And that's for sure. And that's a lot of the information we're passing on to our clients as well is how to use it for the future. But really, a lot of this revolves around the Fed and their kind of constant talk of higher for longer, and that rate outlook is really driving this kind of painful repricing of the yield curve. We're seeing rates rising across that middle and long end, and the expectations for short end cuts is putting more, getting less and less.
All right, so we're pushing a bit higher.
Banking system, housing markets, and those are two huge catalysts for economic growth. We see wage and employment and consumption are generally growing, but slowing. That's good news at the very least. We get this constant, reversal of good news is bad news. We get good news, and then all of a sudden markets sell off. Why? Because we're afraid the Fed's going to, raise rates. Plus, globally, outside of the U.S., there's still stubborn inflation, multiple wars now, and softening demand in Europe and China weighing on global demand.
All right, S&P looking for a push higher.
Bouncing around, through the rest of October.
Looking for this to continue higher. I'd like to see a close near for 42.50. Like to see a close near 42.50. I've been testing some iron condors to see how well these 0 days work under a condor situation where I don't care what the direction is per se. I just look at the support and resistance levels for the day and then place my short calls and short puts around that support and resistance level. Let's see here. Okay, so I've been looking at that.
Because they have changed their tune a little bit. In the past, we would have seen them, kind of overkill and kill the patient. So
selling the a few points out of the money, 42.50 put, 42.55 call, and then buying the wings outside for protection. The max loss 9.50. So if it was one of each of these, then it would be a $95 max gain or max loss and about a $400 max gain. Since I've chosen 10, that gives me a max loss of $9.50. If for some reason we drop heavy into the money on the put side, which I don't anticipate, if we close closer to 42.50, then all of this works out in my favor, and the max gain is $40,050. So I'm going to be testing these over the next few weeks. See how these 0 day. Note that these are 0 day too. These are 0 day. They expire today. So this gives me the advantage of I'm looking for directionless or flat VWAP. All right. I took this picture, by the way, a little bit before I started to see the flat VWAP. That didn't happen until the evening. We start to see this flatten out. So it may be that I'll look at something that's the next day instead of 0 day. Anyway, I've been testing that over the last few days. I haven't said anything about it because I didn't want anybody taking that trade without me testing it first. And there's a slight downward bias too, as we talked about before. That would be an aggressive trade. Well, sort of aggressive. You're really looking for price action to stay within a range. I'll probably look for wider wings next time or wider short puts and calls instead of being so close to the money. going out a few strikes. Yes, yes.
We're gonna go the wrong way. If they can hold off, we continue to have good earnings numbers from companies, and we don't see inflation at least running rampant. Well, then you can start expecting next year to move in a positive direction. But right now, I expect us to be at 4,100 or around by December 31st, and see that. We're probably going to see the 10-year. I know we got over that line. That's kind of that line.
Hope everyone's having a good day.
Back down underneath it, but it can easily swing back up, and we might hit 5.25.
All right, so we'll keep our eyes on that. So you're leaning into bonds, but you do have a few stock picks that I want to go through. First up, Levi Strauss. Shares up about 1% right now, but this is a loser on the year. It's down about 9%. So is this a value play? You're buying the dip?
Yep, it's definitely a value play. They deleveraged themselves from the family control.
Excuse me.
And now they're expanding in the right direction. They're expanding their women's line.
All right, let's take a look at the 20-year.
Expecting earnings per share to grow over 20% in 2024 and 14% in 2025. So it's going, the metrics, the analytics look good. This stock paying a nice
20-year yield. Looking for this to continue to move lower. This is the hourly chart. So the 20-year, looking for this to turn over.
Is going to push their model even further. So, over a 5-year period, there's significant capital gain as well as the current large dividend, and we're seeing even a 2% pop in the, more in dividend as well on top of that. So, Levi is something that we, like you said, by the dip, it's not something we're trying to flip out tomorrow, but it definitely has a lot of benefits.
Okay, and we're just about out of time, but I want to squeeze in this last pick, KVUE, of course, it was J&J's consumer health division, spun off here at the NYSE back in May. Is this just a staples play to be slow and steady wins the race type of thing?
Yeah, absolutely. They have no exposure to any of the litigation. All that it's in the S&P 500 already. That's going to help it. I think it's undervalued by somewhere in the 10 to 20% compared to its peers. So there's some upside potential there with a nice dividend.
All right. Well, we appreciate those picks and your insights. James Locke, Pool Locke Associates. Thank you so much.
Thank you.
Have a good one. Coming up next, it's Technical Tuesday. CRISPR Therapeutics hit a 52-week low last week. Kevin Horner will take us through the chart and preview what could be next for the stock. Stay with us on Schwab Network. We'll be right back.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
All right, S&P continues higher. S&P looking for a push higher. S&P, what's TLT doing? TLT trying to get us another higher high on TLT. TLT doesn't move very fast. It did a good bit. It had a nice clip to it yesterday, but the thing I like about TLT is, this is a good position. It's accomplishing what I'm looking to accomplish, which is to be more conservative, but yet capture some premium, lock in some premium, and look for this to push higher with yields moving lower, anticipating yields will move lower. Maybe not immediately, but over the next couple of weeks. And then as this trade continues to unfold, we'll, we'll reposition the covered calls on it so that, we continue to hold on to a profit and continue to bring down our cost basis. Presently, our cost basis is 79 on TLT. So looking for the next couple of weeks to hold on to this. I don't see a reason to sell it per se. So hope everyone's having a good day. It is 2:16 on the East Coast. If the institutions come in and buy this dip, uh, that would be wonderful. That's what I'm looking for. Not anticipating that's going to be the case, though. The markets just feel very lethargic. We do have 3-to-1 up by them, so that's good. 3-to-1 on the Nasdaq, just shy of 3-to-1. It's 2.91 to 1. I'm just going to say 3-to-1 on the Nasdaq, 2-to-1 on the NYSE. Tick cumulative is green. We need that to continue. And we need to see price action stay above the 105, continue to rally. We continue to move higher. We've got some resistance right along this area, right around 40. The futures right around 42.60-ish. I think Banter, I think you're short, right? So we're looking for price to stay above the 105. 105 starting to bottom and turn higher.
Well, I definitely think that's a possibility. 4,100 has to be considered to be in the cards, but we're really fighting it out at the 200-day moving average as we speak. There's been a lot of indecision here. We had an effort yesterday.
TLT.
Far low. We opened weak, and then we rallied into the afternoon, and it just didn't stick. At the moment, we're just sitting right on that 200-day. In fact, we are basically looking at a candlestick that, if we finish the day this way, will be a doji, really giving us another feeling of indecision and uncertainty here. Now, that doesn't mean we can't stick, we can't hold. There is a bit of a bullish divergence with our RSI, where we made a higher low in the RSI, even though we made a lower low in price just yesterday. I think some bulls would be just fine if we could just maintain this 4,200, 4,220 area. And if we can hold that ledge, we've really gone sideways for the better part of the last 2 weeks here, the 3 weeks, 4 weeks, between 42.25 and 43.75, a nice tight 150-point range. But, again, the technicals tell us that if we stay below the 200-day moving average for much more than today, tomorrow, that we're at greater risk of more selling.
Okay, so we'll keep our eyes on those levels. Currently at 42.34 right now, so kind of sandwiched right in between. I know you also have your eyes on CRISPR Therapeutics, ticker symbol CRSP. Shares up more than 3% today. What are you looking at in this chart?
Well, CRISPR is undergone a horrible move, unfortunately. This thing had topped out all-time highs mid-January of 2021, around 220 a share. Today it resides at 41. Obviously, that's like worse than an 80% move to the downside. But
All right, just watching futures. I can't seem to get above this 40. The future is 42.60. We're right at 42.60. 42.61. All right, if we do get some short covering and some more buyers looking for futures to move higher. Tesla flat just underneath VWAP. Nvidia above VWAP, flat price action too. There just doesn't seem to be much conviction. I think everybody's feels like everyone's waiting for Microsoft.
Short-term trader, there is a ton of resistance that weighs overhead right around 45 to 47. It's coincident with the downsloping 50-day moving average. That'll present a fair bit of short-term resistance, but if this does pass the FDA approval, and it is a question, everybody, it is not a foregone conclusion, well, then there is...
Man, it's like so slow. The markets are just not moving. Not moving.
Keep our eyes on that. And then finally, Synopsys, SNPS, you're also taking a look at that. It's up nearly 50% year to date.
Well, the technician in me says absolutely. And the reason is we have one of those concepts that we love as technical traders. We like to see positions moving through major areas of resistance. And when that occurs, you can get a spike. And that's what actually happened back in the middle of October here. There was a lot of resistance on this of between 465 and 467. So a lot of traders looked at that breakout and took advantage of it. We rallied for about a week, added 8% to the upside, and it has now returned to the level from which it broke. And there's a 50-day moving average down beneath us has kind of been working as support as well. Some might prefer a 100-day moving average, but the concept is a sound one that many traders like, and that is the idea that you get a stock that breaks out, it comes back.
All right, Bitcoin pulling back a bit. Bitcoin off the best levels of the session. Bitcoin looking for overnight, more overnight action.
Some comfort here is that if it were to break, say, the low it created yesterday or move below the 50-day moving average, some traders would just move on and say they missed that opportunity, but it is a nice setup from a risk to reward standpoint for the bulls. Bears, you're just going to have to be patient on this one. Unfortunately, a couple of breaks below the 50-day moving average would be necessary for bears to have a lot of hope.
All right, and I know it's not technically speaking, but I was just taking a look. The median price target on Wall Street, which would be more obviously based on fundamentals, 502.50. So pretty optimistic on that front as well. Kevin Horner, Charles Schwab, thanks so much. All right, Bitcoin hit 35,000 today for the first time this year on more speculation about a possible Bitcoin spot ETF. We'll break down the implications of this move and more when we come back.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account.
TLT.
Cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals.
Let's go check those covered calls on TLT.
Keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage,
Okay.
you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in
S&P pushing a bit higher, trying to break through this level. If we can get above 61, looking for higher. Fanta is looking for a break above 61 as well.
No fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. Tea Bounce Coffee, I'm Debbie Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only the Schwab Network.
Every morning, every trade, always live. Extra earnings analysis.
All right, we're starting to move a bit higher.
Insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Ring.
sure to tune in for this week's coverage from the Charles Schwab Impact Conference Wednesday and Thursday. Your favorite Schwab Network shows will be live from Philadelphia. Don't miss out on insights from some of the top minds in finance right here on Schwab Network. And on that note, welcome back to the watch list. I'm Caroline Woods in for Nicole Petalides, who is making her way to Philadelphia. Bitcoin cleared 35,000 today for the first time in more than a year as speculation continues about approvals of possible spot Bitcoin ETF. For more on everything crypto related, we welcome in Adam Blumberg of Interaxis. Adam, thanks so much for joining the show.
Thanks for having me on, Caroline.
So Bitcoin not quite at 35,000 anymore, trading closer to 33,500 right now. But is it just speculation that got it to as high as 35,000? What was behind the rally?
Well, I think we're all waiting for that announcement of a Bitcoin spot ETF. Hopefully that will come pretty soon. But I think there was some speculation. We saw yesterday there was a iShares Bitcoin spot ETF listed on DTCC, and everyone thought maybe that means the announcement's coming any moment now. And I think that's what got some excitement. I think BlackRock also announced yesterday that they were going to start seeding their ETF possibly as early as this month. So the idea that there's going to be some demand there, maybe the spot Bitcoin ETF is going to be approved in the very near future before January, I think fueled some speculation and, bumped the prices up.
So you know the old adage, buy the rumor, sell the news. So if this is buying the rumor, what happens when we actually get the news?
Well, I think this, and again, this is my opinion, I'm not giving anyone financial advice, but I think in this case, the news is actually going to cause even more of a demand. And if we go to the way Bitcoin actually works, most of us that are in kind of the crypto Bitcoin world know that there will only ever be 21 million Bitcoin created. There have already been 19 million.
Continue to grind a bit higher, S&P.
And therefore, when we do have an announcement, my assumption, and I think a lot of people's assumption is, we're not just going to have one approval, we're going to have 8 or 9 Bitcoin spot ETF approvals.
Okay, so we broke above that pivot right around 61, 42.61. We broke above that pivot at 61. We're starting to add some gas to the tank now. Looks like we could hang a bit higher. What are you looking for, Vantier? 42. You're looking for 75. What are you looking for? Okay.
For those Bitcoin spot ETFs. So in this case, I think it's separate from where we do say buy the rumor, sell the news when it comes to something like equities. In this case, where we do have a very fixed, limited supply, and even smaller supply that's going to be available to sell to those ETF companies and market makers, I think this is going to be a case where likely we see the price actually shoot up significantly because the demand from those ETFs is going to be pretty high.
What does shooting up significantly look like in terms of an actual price target? Do you think it goes back to the old highs? Does it go to 100,000? Some of these really lofty highs that we used to hear about?
Well, Caroline, I'm not big on giving price targets. I've said before, though, whether it's on X or on LinkedIn or wherever I've been, I could see it doubling that day. Excuse me, I could see Bitcoin doubling that day. And again, the reason is just simple supply and demand. So many people aren't going to be willing to sell their Bitcoin for a 10% or 20% increase when they know that there's potentially hundreds of millions or billions of dollars coming into these spot ETFs, and they all have to go buy Bitcoin as well. So,
Yep, that's a good point. That's what I'm looking for. I don't know if you heard what that guy just said. But who's going to want to take profits on their Bitcoins if they got in over the last couple of weeks for 20, 30% when they know that there's a lot of money coming into the markets? Once these spot ETFs are approved, BlackRock and Fidelity and Grayscale, there's lots of money going to be coming into the market. So you'd be giving up a lot of potential gains. VIX dropping off a bit more. S&P moving back above VWAP.
Spot ETF applications. We saw Grayscale, I think, yesterday submitted the application to probably eventually convert their ETH trust into the ETH spot ETF. So I think once there's a Bitcoin spot ETF approval, there will likely be an ETH spot ETF approval shortly thereafter. So I think that's probably another one to look at. And as we've seen, Caroline, as Bitcoin goes, so much of crypto goes. ETH is by far and away the second largest, the second most used, and we're seeing quite a bit of actual adoption of the Ethereum network. So its actual use cases.
Okay, Apple is cruising higher. Apple cruising higher.
Is going to tokenize assets, and they might be using the Ethereum network. We've seen PayPal with their stablecoin on Ethereum. So actually seeing the use cases on the Ethereum network, and that can also significantly drive the value of Ether. So between
Broadcom back up to 17 plus on the day. All right, these FANG stocks look pretty good. I wish they could hold on to these gains without selling off so easily. All right.
Thanks so much for having me on, Caroline.
All right, still ahead. We'll take a closer look at what to expect when Microsoft and Alphabet report earnings for the quarter. Some of today's biggest winners and losers in the S&P 500.
NVIDIA. Okay, NVIDIA is starting to pull away from VWAP. NVIDIA starting to go. Futures going. There we go. Looking good. All right.
High ticker plus 800.
All right. So nice recovery. Nice recovery. All right, VIX dropping off pretty fast here. VIX dropping off. Nice rip in the S&P.
Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Lynn.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Caroline Woods, coming to you live from the New York Stock Exchange. Let's take a quick look at the markets with about 90 minutes left in the trading day. We are continue to see green across the screen. We are seeing the Russell actually add to those gains, up about 0.8% right now. The Dow also up 228 points. That's about 7%. NASDAQ Utilities the best performer for the S&P.
All right, Broadcom up 18. Wow, that was a nice move on Broadcom. I want to keep an eye on Broadcom. That might be something that we want to day trade. When it dips, it rips. 986 up to 888. 886 up to 888, 882. 868 up to 882. Not bad. Over here yesterday, started off the day at 843. At the high today, 40 points later. That's pretty impressive. I'm keep an eye on that AVGO. Remind me to take a look at it in the days to come because this one rallies pretty nicely intraday. You'd have to trade spreads or something like that. Get NVIDIA at the highs.
Wolf Research did recently say that last quarter, everyone was busy revising up their estimates for how big Copilot could be. It does seem to be a question, though, if investors have drifted solid into the trough of AI disillusionment, questioning both the actual functionality, the profitability, and ultimately the durable and sustainable competitive advantage. Now, Copilot is really cool. It utilizes a lot of Microsoft's 365 offerings. It's a way to make like PowerPoint and Word docs a lot easier. I have seen this at use firsthand. It is very cool, but again, a lot of also applications riding on Azure and its cloud growth. We've seen that segment consistently grow less and less over the last few years. That is not a Microsoft-specific trend, but it is something that is going to be heavily in focus if they can see some of that growth bounce back. Although you're also seeing that with AWS. So again, not a Microsoft-specific story. Now, when looking at the analyst expectations, Street loves this name. We have 89% of all analysts rating it as a buy. Average price target is around $392 a share. That clearly implies some upside. Microsoft, though, in terms of stock performance, is a little bit lackluster. It's still outperforming the overall market of 38% this year. But right now, looking a little lackluster when you naturally compare it to Alphabet. But we have gotten so many pieces of good news for them as of late. I mean, finally closing that acquisition was huge, obviously, and finally we can put that to rest with that last regulatory hurdle going through. So that was a huge win. This is a massive company, again, second largest as far as market cap in the world. So we'll be watching these numbers very closely.
All right, and Jenny, I'm constantly fighting with Microsoft Office, so I could use some Copilot help. Maybe I have to turn to AI to actually get my Outlook issues solved. But speaking of my preferred email and workspace company, Alphabet, Google is also reporting after the close. Taking a look at shares, they're up even more. They're up about 1.7% right now heading into this report. They've seen a more impressive year-to-date gain than Microsoft. What are the latest street projections for Alphabet?
Yeah, and you know what's interesting is that this name was second in the AI arms race, right? Coming after we did see Microsoft's massive investment in OpenAI's ChatGPT. So they were seen as the late comer, but that has not been reflected in their stock price at all this year. I mean, we're up 57% year to date. They've also got about 6% now monthly. Earnings expected at around $1.45 a share on revenue of around
NVIDIA, near the highs of the session, NVIDIA. Got Microsoft tonight. Microsoft out with earnings tonight. Let me see what Earnings Whisper is saying for Microsoft. Microsoft expectations. Oops. Microsoft. 269. They're looking at $2.69. Last time around, Microsoft beat earnings. Last time the company showed that it grew revenue 8.34%. Let me just check MarketSmith. Microsoft. 22% growth rate, showing earnings growing into 2024 by 12%. 2023, $9.81. Microsoft into 2024, expected to make around $11.02. That's a 12% increase over this year. Into 2025, they're expecting another 15%. Analysts expecting another 15% gain in earnings for $12.70 for 2025. 2024, $11. That's a nice increase for 12%. Company growing at 22%. It has pretty good numbers. Relative strength line is at 92. That means it's outperforming the majority of its peers in the software and services industry group. Earnings tonight. Okay, Microsoft overhead resistance 336.80 and 340.80. All right, so we're $10 off of the high target, 336.80. We're $6 below that level right now. Netflix is cruising higher. Netflix is running.
GM having just beat. I think GM had one miss, but the point is that it's getting we're seeing more direct announcements from industrials. It's not just in the tech. So I can't imagine we're seeing positive from industrials in this environment that we've had, in this macro environment we've had since 2022, that we're going to have any surprises on the tech side.
But here's the question: is it the bar has been lowered enough that these companies are able to beat, or is it they're actually surprising to the upside because they're in a strong environment here?
Well, I think it's both, actually. I think you're 100% right. We could definitely make the case that as they saw...
All right, looking for higher highs and higher lows. Netflix looking really good. Netflix really working. Netflix going. NVIDIA, new high of the day. NVIDIA going. All right, that's going to help the indices. Indices pushing higher.
Those investments over, so that's also really helpful.
Okay. Microsoft and Alphabet. Obviously, AI is going to be really the name of the game with those companies. But at what point do you think the market is going to be more show me, don't tell me? How much do they want to see the strength of AI reflected in the numbers?
I think it's going to be fast because look at Microsoft with OpenAI, right, and ChatGPT.
All right, ABGO having a good day. There goes Netflix. Check out Netflix cruising. Netflix cruising. Once ABCD pattern, pretty obvious on Netflix. If you don't know what I'm talking about, if you're a new member, I'm always looking for this pattern. Most people in the trading room looking for this pattern. ABCD pattern. You can see the A pivot. Pretty obvious A pivot at the open. We drop down below VWAP. That's B. You got a flat VWAP. Looking for C, a higher low. That's an indication that there's interested parties to push it higher. You can see C right here just below VWAP, and then it breaks above VWAP. That's D. Starting to press towards D, towards that second standard deviation Keltner band, VWAP band up here. Netflix looking really good. NVIDIA doing well. NVIDIA's taking off to the upside. Same kind of pattern. NVIDIA, same pattern. Okay. Here's A. It's a little bit less obvious. Okay, so here's A. Here's A. Got a double bottom, really, for B. Higher low, C. And now we got D. Apple going. Apple doing well. Okay. Just higher lows now. Higher lows. We took out this pivot right along this level. Right around 172.75. That looks good on Apple. Microsoft. Here goes Microsoft. A, B, C. Looking for D. Looks good. Amazon. Amazon. Here's A up here. Here's A, B, higher low C. Looking for D now. If we can get through VWAP, Amazon looking pretty good. All right, let's look at TLT. TLT making higher highs and higher lows. Watching TLT. VIX dropping off. VIX is dropping off. That's good. That's bullish for equities. You got the U.S. 10-year yield, which everybody's paying attention to. Starting to turn a little bit. And the US dollar. US dollar. Oops. DXY at 106, hanging out at the highs. Hanging out at the highs. The daily, I'm looking for a lower lows. The weekly, here is the weekly. That's the daily. Daily fading. We need this to fade more. Take out the lows from today and yesterday. S&P continues higher.
Energy, though, what's your call on a recession? Because if you're bullish on energy, is that because of just supply issues or also demand? I mean, I think definitely it could be demand issues. And if we're going to have a soft landing, we're going to have higher demand.
What is she going on about? Man, they just cannot stop talking about politics, man. No matter if it's Bloomberg or CNBC, Ameritrade, all they want to talk about. That's all they want to talk about.
All right, coming up for the show, Golden Gate keeping. California's DMV suspends permits for cruises, driverless robo-taxis. We'll get a live report from Power Lunch returns after this.
All right, nice follow through. Continue higher highs, higher lows on the futures. Nice recovery. All the FANG stocks, nice recovery. Okay, Netflix continues to push higher. Netflix, nice move on Netflix.
There's a major development just crossing in the last hour or so in the battle over driverless cars in San Francisco. And of course, Deirdre Bosa has that story for today's edition of.
Okay, thanks, stock saying a little bit of profit taking into the 3 o'clock hour. Tesla continues to fade. It's still up $4 on the day, but Tesla fading a bit back to 216. Netflix at the high of the day. Nvidia pressing the highs, a little selling up there. Amazon looking good.
Effective immediately. Now, the notice from the DMV says that the vehicles aren't safe for public operation and that Cruise has misrepresented information relating to safety. In a statement on X, formerly known as Twitter, Cruise says the DMV is investigating an incident involving a pedestrian that was caught under a vehicle. Cruise says that it shared information with several regulatory agencies and will continue to cooperate. Plus, this is a key Cruise, which is owned by General Motors. The San Francisco streets, they are key testing ground for driverless cars, but Cruise vehicles have been involved in a number of incidents that have turned public safety agencies like the fire department against them. It's also led to more calls from public officials to suspend the program. And Cruise is also trying to catch up with Google-owned Waymo in the space, the other leading player in the race to develop autonomous vehicle technology. Both are expanding to more cities, and this suspension from California's DMV, that could have implications for Cruise's pilot programs elsewhere, widening that gap with Waymo even further. Now, we've been working on a larger piece about this topic here in San Francisco with our digital team, and I recently, just a few weeks ago, rode in a driverless Cruise and Waymo robo-taxis. Here is some footage from my Cruise ride. It didn't know what to do when another car was trying to back into a parking spot. So what you're seeing here is the driver got out of his car. He's very agitated. He spat on the vehicle, and then he kicked it. The steering wheel, as you can see here, it moved, but the car didn't go anywhere. And this was, I got to say, guys, an incredibly stressful situation that made me as the rider feel like this wasn't really ready for prime time. Of course,
Okay, Apple high of the day. Apple finally going green. Apple's going green.
By contrast, guys, I also rode in a self-driving Waymo robo-taxi. It was a lot smoother and far less eventful, and that program is still on here in San Francisco.
Deirdre,
Broadcom.
is it going to take? California, Arizona are arguably kind of more at the forefront of this autonomous driver revolution. What is it going to take for these companies to demonstrate for regulators that these cars can actually be used in roadworthy situations?
I think put simply, it's going to take many, many more miles, right? That's the only way that this technology improves. That's what the autonomous vehicle companies will tell you, is that they need to be able to test on the streets without a safety driver in real life situations in order to improve. But there's drawbacks to that as well, right? Some of the public safety agencies, like the fire department, says that we don't really want you to use our streets as a testing ground, especially after all these incidents that have come up.
All right, so we're pushing higher.
In the way of ambulances, of fire trucks, in the way of crime scenes. So the technology, at least some people say, is not there yet, not ready for prime time, and that's essentially what the DMV is saying now. But it's kind of a catch-22. If they can't test on the street, they can't get better. However, I'll say that this is just here in San Francisco. As you said, Dom, they're testing in other places like Arizona. They're looking to the streets of Miami, LA to do more of this, so they could continue to test there. But certainly a setback.
All right, Deirdre Bosa with the latest update on driverless cars. Thank you very much. Kelly, I would love to be able to, like I said, get into my car at 8 p.m. at night, fall asleep, wake up in Pinehurst, North Carolina, make it 9 o'clock tea time, and then get back in my car the next evening and just have it wake up at home.
Easier than traveling San Francisco. By the way, no tweets yet from Kyle Bott of Cruise, who is, of course, probably the most vocal proponent of his technology and the whole industries. But a big setback for them, and honestly, it never really seemed ready for prime time. That's just my opinion. Coming up, dropping on a dime. Thieves trying to rob a U.S. mint, taking off with thousands of dollars, but left behind tons of spare change. We'll bring you those details and much more when Powerline returns.
All right, so alrighty. We have a little bit more than an hour to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday the 24th. I'm watching NVIDIA continue to press the highs of the day. NVIDIA looking really sharp. NVIDIA looking sharp, pushing higher. All the FANG stocks look pretty good except for Tesla. Tesla's still up $3.82 on the day. It's just fading, being a pest and fading. Oops. Being a pest and fading would be Tesla. Okay, so this is the high of the day over here at 222 and change. $7 off the high.
Starting with Bitcoin, which hit $35,000 today for the first time since last May. Shocking upward climb, up more than 100% so far this year. Could be big Bitcoin ETF holds. Dom, it could even be Tom Emmer, who was actually seen as crypto supportive if he becomes House Speaker. We'll see. That's a big if. Stocks in the crypto universe like Coinbase seeing some pretty huge gains.
And it's not just that. If you take a look at the way Bitcoin is traded, there's always been this case to be made that it's always trading on technicals, the chart patterns, kind of the historical way it's done in the past. All of a sudden, you're interjecting what might be fundamental catalysts, right? Regulatory type situations, legal situations, flows into mutual funds and that sort of thing. So it's something to keep in mind.
Absolutely.
All right. Yep. Auto loan defaults. They've risen to their highest level in 29 years as interest rates and borrowing costs price many Americans out of the market. This is a big deal because could it be the canary in the coal mine for elsewhere?
All right, Apple continues to move higher. Apple continues. All right, looking pretty nice. Apple pulling away. VWAP is going to start tilting up into the right into the close. I can go for that. No can do. Okay, NVIDIA, Netflix at the high and then pulling back a little bit, about $1 off the high right now. Google, all right, we got Microsoft with earnings tonight. So Microsoft with earnings tonight. Let's see what that looks like. Microsoft looking for a run into the close would be nice. Microsoft beat last time, beat earnings last time. Let's go take a look. Microsoft beat earnings and it dropped the next day. And that was before, well, we started looking for disappointments with the valuations. Microsoft,
on WTI crude. Small caps have been outperforming much of the day. Banks they'll continue to lag. They have certainly been pulling up the rear for much of the last several months. We begin with our talk of the tape. Is the 3-month market pullback driven by macro and interest rate concerns running its course?
I'm hoping that Microsoft does not disappoint and moves higher, but the last time it reported earnings, okay.
So I don't know. Looks like people trying to look on the not so negative side. Yesterday, bit of a failed rally. Today, yields are quiet. Market's able to maybe seize on some of the fundamental news. Are we able to go from macro to micro at this point, do you think?
I mean, during earnings season, some stocks really only give you 4 updates a year, right? And the rest of it's all macro or factor betting. And I think we're getting some mixed to positive results in aggregate for the earnings season. So do I think we can get back in this Goldilocks period where we could dream that they're going to stop raising rates and eventually there'll be a combination and in the interim growth is okay? Yeah, I do. And I think we'll end up the year higher based on that.
So the key question has always been another growth scare where investors are over anticipating a recession or a steep slowdown, or a rate's just going to hasten the day when we actually have to bring it here and now. And it's inconclusive evidence, but there's nothing to say that the soft landing has been called off.
Yeah, of course. I mean, if you wait long enough and you just forecast 17 of the last 0 recessions, and then eventually you get one, you can say you're right. I mean, I'm not saying you, but no, I'd say that. I mean, we'll see. I don't think rates, the 10-year doesn't keep backing up forever unless growth is good, right? And then closer and closer, that 2-year and 10-year getting closer to the same level, and we'll see what that means. I could see people wanting to buy the 2-year relative to the 10-year, and maybe that'll ultimately get us back to a normal shaped curve. But I don't see the 10-year backing up a ton while growth softens.
Right. Yeah, you wouldn't think, or at least wouldn't want it, certainly, if that were the case.
That's a bad
Right. We do have some breaking news, though, on Qualcomm. Christina Partsinevelos here with that. Hello, Christina.
Hi, Michael. Qualcomm aims to bring AI to the edge. In other words, personal computers, local servers, and smartphones. And it plans to do so today with the announcement of 2 new chips. First, the Snapdragon Series 8 Gen 3, long name, but for high-end Android phones. And secondly, the X Elite chip for PCs and laptops. Both will help run generative AI without
All right, so Microsoft beat last time and moved lower.
generate an AI image in less than a second versus last year's model, which took about 15 seconds or so. So that means shoppers will no longer be asking, how great is my camera and how much memory do I have, but rather, what is the speed of these AI applications? No mention of Apple, though, in this report. The second product is going to be an ARM-based CPU chip for Microsoft-powered PCs. Qualcomm CFO saying it'll make them the new CPU leader in mobile computing, and says it's 4.5 times faster than Intel's x86 chips, and will also be introduced in mid-2024. Recall just yesterday, Reuters reported that NVIDIA is also building a CPU chip for Microsoft-powered PCs, AMD as well. So that means a lot more competition, not only for Intel, but also Apple that is, growing in the space with its own custom chip just over the last little while. But for more on all of these products, Qualcomm CEO is going to be joining us on CNBC at 4 p.m. Eastern for first. Right?
Christina, thank you. Adam, you know this space really well. I mean, what's the make of it in a big picture sense where these companies are kind of trying to, I guess, go closer to the end user in terms of the AI capabilities? NVIDIA yesterday with the PC chip development news as well.
Yeah, look, I mean, we're in the early phases of a 10 to 20-year trend, and it's going to be a trend that's going to help compute grow, and you're going to have semiconductors at the center of it. So it's not, NVIDIA will be best positioned and will do the best over time, but there are multiple aspects to it and a lot of competition. I think the easiest thing to say is...
All right, we're fading a little bit. All right, so consolidating.
Basically, let's say the single worst steward of capital of any public company in the last 25 years, and on top of it, hubristic. So it's very easy going there. I'm not surprised to see NVIDIA mention that yesterday as basically a superior company over the last 10 plus years at a minimum. I think some of these other things on the phone, we'll have to see at what the competitive landscape looks like. But obviously, there's a number of companies that will be participating.
Yeah, at some level, you feel like, the added capabilities are kind of table stakes. I mean, things always get better. They always get faster.
So I'm not sure, where the incremental share gain comes from that because some of it gets priced away. But I think it's fair to say if you came into this year thinking the semiconductor industry grew nominal GDP plus a couple, that number's now nominal GDP plus 4 or 5, just because compute's going to gain share of the total bill of materials for almost all these devices. And I think that's partially why these things are trading at higher multiples, because their long-term growth rate is just going to be higher.
You know, there's a way of telling the story of this year in the markets in general. A lot of people are saying it this way, which is, you know, you more or less had just kind of a sort of a bear market rally or a very strong rally off the lows a year ago. And then beyond that, everything else is kind of rolled over, whereas you had the AI storyline or anything that touches AI and mega tech. We know this, right? If that's true, it would seem to at least allow for the fact that the rest of the stocks, if not to carry the market, that there have to be some opportunities or at least some bad news already priced in on those levels.
I think that's true. I get that question a lot of more of like, hey, can we get a broadening rally? Right? Hey, small caps look super cheap versus large cap. If you look at our last couple of weeks, we've written about this. I just don't think the small caps are that cheap, because when I parse it out by growth versus value, growth looks a little expensive for both small and large. Value looks cheap for both. When I parse it out by quality, the mega cap quality are just much better than the small cap quality. They generate more free cash flow. They have higher margin. They command an asymmetrical higher multiple. So I don't think you get that broadening rally until we're closer or more in the downturn. You know, when I don't know, the blood on the streets phrase, if you really need to have things much worse, then you could dream that the margin expansion that after that will be better. In the interim, I think the big guys will see with some of them in an hour or two. They're probably going to have just as good results as the small caps. And the small caps will be the margins go up more. So which is it? Is it labor? Is it materials? Is it depreciation? Is it pricing and mix? None of that looks like a great contour on the next quarter to on a relative basis. So I'm in the camp that the market goes up and the big seven participate at least pro rata.
Yeah, it's pretty hard for it to be otherwise. Yeah,
that's for now.
Yeah, definitely. Let's bring in CNBC contributor Bryn Talkington of Requisite Capital Management for more on this. And Bryn, just in general, I mean, I know you're an owner of things like what Microsoft and NVIDIA. How do you think they are positioned as we're about to get this latest little update of fundamental news?
I think when I started with the technicals, if you just look at the NASDAQ is firmly below the 1500 day and continues to make those lower highs and lower lows. So technically, the NASDAQ in general doesn't look good. There's a few standouts like a Google and a Meta, which look the best. We'll say the magnificent.
Netflix faded a bit. A couple of points off the highs for now. All right, so
Meaning that clients have been optimizing their spend, meaning to me spending less. While last quarter we definitely saw with Microsoft, the CapEx is picking up, mostly going to AI. And so I think you have
excuse me.
position that overall the spending for the future. So they're going to spend more today to try to earn more in the future on AI. So I know that the street's looking for about 8.7% revenue growth. I don't think that Microsoft's earnings today are going to be the catalyst to get like the tech trade back up and running. I agree with Adam to say if we get a rally in November and December, I think tech will keep up.
All right, what are you doing? Bitcoin, all right, hovering around 33.7 to 34.7, 34.8. All right, so it's inside of its second standard deviation, moving back up through first standard deviation. VWAP just above. Bitcoin looking for a follow through. Think about what they were saying earlier. It makes so much sense when you consider it. If this ETF gets approved, people that are just riding this trend from September 11th or sooner on Bitcoin, if once this is approved and money starts to flow into these ETFs, Fidelity, BlackRock, Grayscale, that's a ton of money that's got to come into there, especially anyone following those ETFs. So they have to buy as well. So that should be interesting. I'll hold on to Bitcoin for a while. I'd love to see it get back to 64.
love the November 21st comparison just because that's when like the peak of. Remember, we didn't start raising rates till March of 22, right? So that was really the peak of people anticipating higher rates. That the futures going up a ton, and so a lot of the Nasdaq got killed. Yep. But I think, and Britain knows this. I think a lot of just comes down to 5 years from now, I would like to have looked back and had something in my portfolio that benefited from AI. You have to own NVIDIA and Microsoft. There's no way you can get around.
All right, NVIDIA continues to push here. NVIDIA looking really strong.
Whether you get, upside enough, they didn't have upward earnings revisions their last report at Microsoft, and most of the other mega caps did. So what you get here, I don't know, but surely they're well positioned to benefit if you look out.
Okay, so you're looking at CART, C-A-R-T, CART. All right, let's take a look at. Let's look at the 60-minute. Okay, it's trying to turn the corner.
You mentioned Microsoft investing for the future heavily as its customers try to trim back. This is an area of sensitivity, I think, along the street with a lot of these companies. Meta, everyone fixated on what the operating expense guidance is going to look like. Even Alphabet as well. So there's sense out there that, yeah, there's this great long-term opportunity, but in the meantime, we'd love for you to be maximizing margins. How does that play out?
Well, last quarter, they're spending a lot on CapEx. I think they're going to, as I said in the beginning, they're going to continue to, while their clients are optimizing, they are not, because they're
ARM Holdings looking for the space to play out to the long side. It's a business that's going to thrive in the future, I would say. There goes NVIDIA. NVIDIA ripping here. NVIDIA, boom. Look at the volume.
More broadly, Adam, I was noticing the way
All right, Tesla, turn the corner already, Tesla. Let's go. LATSGO, Tesla.
That's what we want right here. So it's a tricky thing for management, and I guess if you want to know what you own, whether you own an empire builder or you own a shareholder return focused management.
Look, in the near term, you never like that kind of price action. Very tactically, you kind of hope that when you buy something, that the market likes it, and I think they're getting assets at a pretty good price and pretty low premium, like if you look at the Chevron Hess situation. But any medium or long-term view, I believe you should own a lot of energy and energy stocks. Demand looks to me like it'll be very steady with the installed base of vehicles and new vehicle sales. And capital spending is top left to bottom right. It's just very hard to call in a 3 to 6 month view. You can have a lot of random things happen. But I think the probability that we have demand above supply oil is very high in the medium to long term. So I would recommend investors own as much energy, equities, or actual direct resources they can. It's one of my 2 highest conviction ideas for our institutional clients.
Bryn, you're probably along for that ride to some degree, or you're not. What's your thought about how these deals play into the longer term story?
I think we're very exposed to energy. And as a long-term investor, it's great to get the cash back. I get your point, Mike, and I agree with that. But ultimately, I think with both of these, Pioneer and Hess, Exxon and Chevron are saying 1 + 1 can equal 3 here. And I think that what we're seeing, if you look at Ford and GM, people don't want to buy EVs in aggregate. They want to buy a Tesla. Okay, they're wanting to buy an experience. And so I think that these companies are getting a read from the street. I promise you, fossil fuels will be here 5 decades from now. And this whole peak oil, we're going to all go solar, all go green. I think that narrative is taking a backseat to the reality of how expensive it is to go green. And people still are not going to have large adoption to EVs. I think they're going to continue to buy Tesla. And this is where, to me, that narrative for companies with high free cash flow, high shareholder return, squarely sits in the energy camp. And so I wholeheartedly agree with Adam's view.
Yeah, look, there's still a cigarette business, and they still make a lot of money.
Last year was the biggest coal production in coal. demand ever. So this peak oil demand is going to be several years from now.
Yeah, I get it.
Yeah,
But like the oil intensity of GDP is going nothing but down, and it has gone nothing but down forever. But that doesn't mean that in the absolute terms, demand
and
goes down.
just to be clear, I'm not talking about the environment. I'm talking about the stocks. They're cheap with low estimates, low inventory, tons of free cash flow, and everyone hates them.
Yep,
that's a cocktail that looks good to me every time.
Everyone hates it -2.
Yeah, besides Brent and I, but a lot of investors can't own them, and so there's opportunity. I think more for us.
Fair enough.
Yeah.
Wow, the market is cooking with gas. On the move.
Which of this week's reports will have the biggest move?
Mm-hmm.
Microsoft, Meta, or Amazon? Head to CNBC Closing Bell on X to vote. We will share the results later in the hour. We're just getting started. Up next, your tech playbook. Alger's Anchor Crawford is breaking down her expectations for the parade of mega cap earnings ahead. She will join me at Post 9 after this break. S&P 500. Let's hear the highs of the day up about 86 points. We are live from the New York Stock Exchange. You're watching Closing Bell.
Nice rally in the day. Okay, just stay here. That's fine. Okay, FANG stocks behaving very nicely. We could get Tesla to turn back up. Tesla's up $4 on the day, but off the highs of the session. Netflix off the highs of the session. Nvidia at the highs of the session. Continue to push higher. We got Microsoft with earnings out tonight. Let's see what the expected move from Microsoft is. Microsoft. Nice, Microsoft.
Later this week is Encore Crawford. Executive Vice President and Portfolio Manager at Alger, joins me here.
Microsoft. Okay, let's see what the US 10-year doing. Okay, continue to fade would be good for the bulls.
The same things matter to all of them. Not always the case. So as we sift among the ones reporting this week, what matters?
I think what matters is different for every single one of them, in part because the end markets and the operating expense discipline is all different for each one of them. So for Microsoft, what's going to matter is
Microsoft.
stabilization in Azure.
Qualcomm unveils new PC laptop chip with AI features for 2024. Ooh, that's nice. Qualcomm.
For Meta, it's going to be all about OpEx. They seem to have a great revenue.
All right, so everybody's getting on the bandwagon. Okay, Qualcomm.
Do they go back to their ways of, pre-COVID where they spend willy-nilly, or do they maintain the discipline? For Google, a little bit different. Google, it feels like, what is the product cycle? We're looking to see if they say anything about AI that can help us bridge the gap in a more uncertain economic environment for a product cycle. So I think it's different for each one, and so you may actually see a bifurcation in their reactions of each one of them.
When it comes to Microsoft, there's the, obviously in the Azure business, that's a matter of is demand settling out, are margins, going to be stable for a while. But in terms of what they're doing with AI, with Copilot, so there's the, we're going to sell X number of subscriptions, seats or whatever. But also it's how are you running your business differently, presumably, with your own business with all these tools?
Yeah, so it's funny because I think the software companies are not only the enablers of this entire AI revolution that we are embarking on, but they also are eating their own cooking. So to some extent, they are increasing internal productivity. They're seeing how much productivity is increasing, and then they're selling it. So they actually get a benefit from both sides, whereas the rest of the market will benefit from the productivity increase. Some of these software companies will see a massive increase in pricing power, in part because they're enabling that productivity increase.
Yeah. I guess there's not a real handy way for investors to say, we're just going to play that trend. So therefore they go to the providers, right? But do you think that as people look at other businesses, as those companies adopt, whatever these productivity enhancing tools are, that it actually is making its way into earnings models and things like that?
I think that is going to be slow relative to how we want it to establish itself, and in part because these changes take time. However, it takes time relative to the business model that we have on Excel. In the grand scheme of things, I think by the end of the decade, we will probably see 40% penetration of Gen AI or AI type products into mass market. Every single company will have to adopt this. It's at this point versus it being a choice.
You mentioned for Alphabet, one of the questions is what are they going to be able to tell us in terms of their position here and whether they're going to get payback on some of their investments. But as a business right now, it seems like they had a little scare. The street thought that they were kind of a victim of the AI movement, and now it's back up toward its highs. It seems like it's
Okay, higher low printing here on the futures. We're just below the highs of the session. We got all the way up to 42.76, 76, 65, and slowed down. All right. We have 35 minutes left to go. 35 minutes left in the trading day. I hope you had a good day. Kind of boring during the middle of the day. Middle of the session was kind of boring. Okay, we have a flat VWAP to deal with. Okay, whenever you have a flat VWAP, that purple line flattened out towards the end of the day. But look how price action reversed off the low. Did we fill the gap? I think we got really close to it. That wick on the top and this wick on the bottom, 42.19, 43. But regardless, we had a nice rally back up. We're looking at the high of the day at 42.60. All right, VWAP's starting to turn up. All right, so look at NVIDIA though. NVIDIA VWAP up and to the right. Starting to turn up into the right, flagging at the high. Nice job.
Just recently introduced, and the monetization of all of these, that is going to drive the top line. But we just have to make sure that they don't spend it all away.
Great to see you. Thanks so much. All right, up next, trading the uncertainty, Bank of America's Chris Heisey is highlighting the three sectors he's seeing strength in right now. He'll break down how you should position your portfolio after this break. Closing bell, be right back.
ARM Holdings. You're looking at ARM? Okay, cool. ARM Holdings. All right, so looking for price action to stay in this area. Okay, NVIDIA, thank you. Watching the 10-year, if that drops lower, this should be bullish for the follow-through into the close. We have 30 minutes left to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. I'll be with you here until 4 p.m. Coin. Yeah, coin looks good.
Maybe the yields can calm down a little bit and make way for something good seasonally as we focus on earnings. Does that make sense? You persuaded by the action today at all?
You know, I'm not traditionally this stark as it relates to what this week actually means, but this is a big week. The Magnificent Seven, the narrow leadership is
NVIDIA going for high of the day.
that pass the baton over to the 5% yield 10-year Treasury, and then bouncing off of 4,200 on the S&P. And there's so many cross currents, not to mention the significant rise in geopolitical volatility and risk overall. So this mountain of earnings this week, particularly in the tech sector, that has to drive some momentum and a little bit of tailwinds and some catalysts to get some of that, I wouldn't call it risk on, but to get some of that move back into the equity markets to establish these long positions again to set ourselves up for next year. So this is a big week.
What are we being set up for into next year, I guess, is also the question. It seems as if, we're a year after there was a near unanimous consensus that there was a recession coming within a year. We didn't get it, but it still feels like we're kind of rolling our anxiety forward every few months that, in fact, finally, there's going to be some kind of an economic
All right, looking good. All the FANG stocks at the high.
The great debate, we wrote this report not too long ago, it talks about
All right. All right, looking good. Looking good. All the FANG stocks. Meta is off $1.70, but everything else is green. Only Meta is off. Apple. All right, everything looks pretty good here.
Also raised its earnings per share outlook, citing its restructuring and spending control efforts. Plus, it raised prices. Those shares are up 5.5% today. General Electric is also in the green after handily beating estimates and raising its forecast, thanks in large part to increased demand in its aerospace business. Shares of GE are up almost 7.5% right now. And last but not least, Verizon is having its best day since 2008 after growth in wireless subscribers fueled an earnings and revenue beat. The telecom giant also raised its free cash flow forecast for the year. Shares up about 9%, but still down 13% this year. Mike?
Katina, thank you. Another name we're watching this afternoon is GM. This as the UAW expands its strike to a crucial GM plant. So, LeBeau, here with that, Bill.
This is a big plant and a big hit for General Motors. You're talking about the plant in Arlington, Texas, where they build all of their large SUVs. Just how important this plant is. About 5,000 UAW members have walked off the job there. This is 20% of GM's U.S. production. It is the largest, most profitable plant they have in the United States. Not surprisingly, this is news that does not fit well as they come off of an earnings report where they said, look, we're already going to take an $800 million hit from the UAW strike, and at least $200 million a week going forward. And that was before the Arlington announcement came out. They've pulled back their guidance completely for the year because they don't know how much the cost will be from this strike. Your CEO, Mary Barra, during the conference call, talking about the state of negotiations.
The current offer is the most significant that GM has ever proposed to the UAW. They've demanded a record contract, and that's exactly what we've offered for weeks now. A historic contract with record wages that have increases that are substantial, record job security, and world-class health care. It's an offer that rewards our team members but does not put the company and their jobs at risk. Accepting unsustainably high costs that would put our future and the GM team members' job at risk is simply something that I will not do.
As you take a look at the big three shares since the beginning of the year, GM, Ford, and Stellantis, keep in mind that we will get Ford results after the bell on Thursday. And Stellantis, remember, it had a plant that was hit yesterday by the or on Friday by the UAW. They're all kind of running together. They will now have 525 workers that they are laying off. This is the ripple effect, Mike, that we've been talking about. More than 7,000 workers in GM, Ford, and Stellantis have been laid off because there's not work coming from a plant where there was a strike, where there's a strike going on. That shows you that this goes beyond the people who have walked off the job. It is impacting others at plants that are still in operation.
Yeah, and that'll certainly start making its way into the broader economic numbers. GM stock peaked today around 10 a.m. after those earnings. earnings. It's down like 6% since then, as we're talking about this new plant closure, Phil. So, I mean, the question again, I mean, does this seem to
two arguments here, Mike. You will hear people say this is an indication that the UAW sort of flushing it out towards the end, that we might be close to a resolution, if you will. But I get no sense that this is, we're going to see something announced within the next week or so. I just don't get that sense from talking with people who are close to the process. And one other thing to keep in mind, Mike, GM shares also under pressure because of the news out of California with the DMV and Cruise. Cruise in the future potentially could be a big moneymaker for GM. This is not good news coming out of California. If you buy into the idea that Cruise and autonomous driving will really help GM's bottom line.
Yeah, excellent point, Phil. Thanks so much. All right, last chance now to weigh in on our question of the day. We asked which of this week's reports will have the biggest move post-earnings: Alphabet, Microsoft, Meta, or Amazon? Head to @CNBC Closing Bell on X. We'll bring you the results right after this break.
All right. All right, so we're sitting here right at 424 S&P 4255. All right, so this iron condor will pay the max between 4250 and 4255. So I want it to stay up here.
Let's get the results of our question of the day. We asked which of this week's reports will have the biggest move post-earnings: Alphabet, Microsoft, Meta, or Amazon. Microsoft in the lead, the largest of them all. 38% of you said that's going to have the biggest move. Amazon right behind it. Up next, your earnings setup. We're breaking down what to watch when Alphabet, Microsoft, Snap, and Visa all report in overtime. All that and much more when we take you inside the market.
Okay. Okay, we got 11 minutes to go. 11 minutes to go. All right, we got 9 minutes to go. 9 minutes to go.
There's a wave of major earnings out in overtime today. We're bringing you what to watch for each of them. Deirdre Boza has Alphabet. Steve Kovacs is on Microsoft. Julia Borston on Snap. And Kate Rooney on Visa. Alphabet, well, it's only less than 2% from its highs. It's actually up 6% this month. Does that mean expectations are high? Set us up for this one.
It does mean expectations are high, but this is, a stock that's favored by the long only. Bernstein calls it the warm hug of mega caps for this earnings season. So the first half of the year was characterized more by the promise of artificial intelligence, what it was going to do there. The second half has largely been back to basics, the fundamentals. And remember that Alphabet's core business, it is still very much so an advertising story. Nearly 80% of revenue still comes from search and other ads. So that's what analysts are really going to be looking at. The street's going to be looking at. We're expecting about 10% top line growth, which is really kind of the epitome of growth at a reasonable price. So when you look at an Alphabet, it does feel like sort of one of the safest stories in mega cap out there. Of course, new stock has grown so large, so it could have an outsized impact if it does miss. And as you said, Mike, expectations are high. And remember also that Alphabet does not guide. That's something important to keep in mind.
Absolutely. I also wonder if there's anything to be said, any color on any of the various, legal challenges they're facing or other, big investments or something that could be beyond the advertising story.
Yeah, their moonshot project, right, in Google X, that X division is interesting. This typically
Okay, we got 7 minutes to go. 7 minutes to go.
I wonder if there's going to be more discipline there. I think what's interesting today is
Yeah.
that came out of Cruise. Remember that which is owned by Google, is a major competitor in that driverless car race, and the fact that its main rival here in San Francisco has had its driverless operation suspended. I wonder if that is a chance for Waymo to pull further ahead. We'll see if there's any commentary on the call.
Absolutely. Dee, thanks so much. Steve, Microsoft, another kind of consensus favorite, I guess. What are we expecting?
Yeah, so look, it's not necessarily going to be about selling AI tools, Mike. It's going to be about talking about the demand for AI tools. So a week from today, Microsoft is going to start selling Copilot. That's that AI assistant we've been talking about for so many months now. It goes on sale for $30 per user per month. There are hundreds of millions of potential users for this product. We haven't heard too much specifics from Microsoft, though, on when to expect real sales. They said maybe sometime next year, but then again, they're launching it sooner than many expected. So listen to the call for any kind of color or commentary on how demand is stacking up that product when it launches next week. But as for the core business and looking back, Azure cloud growth still going to be very important for the company. We've seen it slip from that, around 50% growth mark over about 2 years ago. It slipped down. Analysts now expecting 26% growth. And the real question about Azure, Mike, is whether or not that has bottomed out and we're going to start seeing growth accelerate again for Azure. And then finally, I'll just point out for a good read on consumer electronic demand, look at Windows revenue. That is the money Microsoft makes every time a third party like Lenovo or Samsung sells a PC with a Windows license. As a gauge of PC demand, which we know has just been cratering all year, Mike.
Absolutely, yeah. That's been
Hi,
certainly the
Tipper,
soft
plus
spot.
800.
We'll catch up with you soon once the numbers are out. Julia, Snap, I would imagine, investors really have a little bit of skepticism toward this one. What are you expecting?
Well, Snap shares did gain nearly 3% today going into the close, but the stock is down about 23%.
Okay, we got 5 minutes to go.
On concerns about 2 consecutive quarters of declining revenue. Now, are expected to shrink to a 4-cent per share loss to an 8-cent per share gain in the year-ago quarter, but revenue is projected to fall by nearly 2%. So the key question here is when will Snap forecast the turnaround to its revenue growth? Analysts are looking for 2.6% revenue growth in the fourth quarter. The other key issue is user engagement in light of the ongoing popularity of TikTok and others. Now, going into earnings, 73% of analysts have a bull rating on the stock, 50% have a sell, 12% have a buy. Mike?
Yeah, and Julia, I really do wonder about, Snap's place in the industry. All the competitors have gotten a lot bigger, especially relative to its own size. How, in fact, have they been saying they might be able to, I guess, either gain more scale or prove their resilience in the face of all that?
Well, Snap has really been arguing that it's just a different use case than, say, an Instagram or a TikTok. Snap is where friends communicate with each other. Now it's offering people this AI assistant, this sort of AI tool that is integrated into that communication experience. But then they also have that entertainment element for when you're waiting for your friend to respond to you. But what Snap says is it's really about friends staying in touch, whereas Instagram might be following people who you don't know at all or don't know as well. And then TikTok is really more about for entertainment. So they argue that they really have a different use case and they're really digging deep into that.
And they hope room for everybody for now. Julia, thank you. Kate, Visa has sort of been a bit.
All right, we got 3 minutes to go. Less than 3 minutes to go. I hope everyone had a good day. I'm your host, Cousin Benning, coming to you from theclosingprint.com. It's Tuesday the 24th. We got 3 minutes to go till the closing bell. NVIDIA is at the highs of the day.
Visa. We're going to get the annual outlook in this report today. You're going to get that glimpse, as you mentioned, into the health of the consumer. Amex reported on Friday, really set the bar high. They delivered pretty strong growth. They talked about the consumer being resilient. Look for any commentary
by Visa on a similar vein, talking about consumer trends, health of the consumer. Amex gives us a little bit of a preview, but it tends to be that much more affluent consumer, that higher end customer. So you want to see payment volume here, international and cross-border payments. That's a higher margin side of the business for Visa. And then that consumer spending commentary, that's probably going to come through guidance. We're likely going to need a little bit more of that color on the analyst call, Mike.
Yeah, and Kate, in addition to it just being obviously this huge play, this platform that just goes up and down with consumer activity, there is a debate going on about its long-term place, the payment networks in the whole industry. Maybe there's a little bit less leverage to overall consumer spending than there used to be because of alternative ways of paying. And of course, you've seen this boom-bust phase with challengers in fintech, but it's unclear how much that's had an impact.
Yeah, that's a great call, Mike. Things like FedNow, the idea that you could move money in a cheaper, faster way throughout the bank, so we kind of getting rid of the need for an intermediary like Visa. We've got a lot of those competitive challenges. There's also things like pricing pressure. There is that perennial conversation about fees and what the credit card networks are charging here. Also, regulatory discussion. Visa had a major acquisition of Plaid a few years ago that they had to call off because of DOJ pressure. So they're a little bit hamstrung when it comes to growth through M&A at this point, and that at least has been the consensus out there on Wall Street. So we'll see, but absolutely more competition, more pricing pressure, and then you've got the macro environment too that weighs on payment volume.
Yeah, you wonder if they're even sorry they weren't allowed to buy Plaid at those valuations. But we'll see how it goes, Kate. Thanks so much. Appreciate it. About 30 seconds till the close.
All right, we're about to close right here. Okay.
In retreat, down a couple of percent today, as bond yields have quieted down for another day. We have the 10-year down to 4.82% as we get ready for all those mega cap growth stock earnings. That's going to do it. The closing bell. We'll send it into overtime. There's Morgan Brennan and John Wilson. Live from CNBC's Technology Executive Council Summit in New York.
And I'm Morgan Brennan.
That is a scorecard on Wall Street, but winners stay late. I'm John Ford, coming to you from CNBC's Technology Executive Council Summit in New York.
And I'm Morgan Brennan at CNBC headquarters. It's a make or break hour for tech as Microsoft, Alphabet, Texas Instruments, and Snap get ready to report quarterly results in just a few moments. We will have live reaction and analysis of those names, plus Visa and more.
And a first on CNBC interview with Qualcomm CEO Cristiano Amon. He's going to discuss the new chips the company announced this hour, including an ARM chip for PCs. Remember the market action because of NVIDIA headlines yesterday. Now, as we await the earnings, let's bring in Vital Knowledge founder Adam Crisafulli. Adam, I'm specifically wondering about the impact potentially of these results tonight on overall.
All right, folks, I'm out of here. Take care. We'll see you tomorrow.